and as an industry, we've done our analysis, and we believe that lowering GST to 12% means that we will be able to pass on the entire benefit of GST reduction, to consumers. If it is 5%, I think the important thing is to make sure that ITC is maintained at a principal level. There'll be some pluses and minuses, but to a very large extent there as well. We'll be able to pass on the benefit. But the important thing is to preserve the input tax benefit, in whatever change the government wants to make on GST, Prashant. That's number one. Number two, we do firmly believe, it is important, affordability on health insurance is important, especially given healthcare inflation and how healthcare costs are trending in our country. So any lowering of GST with input tax credit will be beneficial to the Indian consumer.
Okay. I think the market is hearing those comments loud and clear. Mr. Ramachandran, stocks up 7%. And we're just sort of in the pre-open, that is at the end of the pre-open, there's a 6 rupee bump up. And we are hitting market open now. I had a couple of more questions, but we're sort of running into market open. We leave it there, Mr. Ramachandran, for today. Thank you very much for explaining all of that to our viewers. And we'll speak again soon. So that is Niva Bupa, which is indicating a higher open. Let's just look at the Nifty and the Nifty Bank as well and take a look at where we are at. About 60 higher on the Nifty, 23,800 plus. And I think for the Nifty Bank as well, we're up 250, 50,400 plus coming through on the Nifty Bank at this point in time. So a bunch of names will open up and react to stuff that we have discussed over the last 1 hour. Rupee?
I was just looking at Asian Paints and pre-open. Of course, the numbers were well digested by the market yesterday itself, but the stock in the pre-open is suggesting that there could be some additional downside pressure. And in terms of some of the stock reactions on the upside, of course, you folks have just discussed Niva Bupa. Max is about 3% up as well. Torrent Power, despite that slightly sort of iffy performance, the pre-open suggests that the market will kind of look through it. And, Titan, let's finally see the rate on Titan as well as we get to the close, because Titan depends on how you want to look at it. Mangalam is saying that beyond the obvious, it's not such a bad set.
Let's just look at the market open. 60 points higher on the Nifty, 23,739, 23,7, almost 23,800 there. 40 high. The Sensex is up about 85 points. Nifty Bank is up 190. That's about 1/3% higher. Advanced decline is positive, but stocks are still opening, and that will change. IT index is up about 0.75% at this stage. So mid-cap index up 0.8. Let's just look at the small-cap index, which lagged a little bit as well. And I think there as well, there should be gains. 1% of the small-cap index. I mean, the small-cap index at almost the low had corrected from the top about 17.5%. And as of yesterday's close, it's down about 14. So the recovery has been a little muted so far. Will that catch up as well, is the question. Lots of stuff opening up, and banks, lots of banking gainers as we are highlighting at the bottom. Surabhi.
Okay. The oil refiners are quite happy this morning, I must say. BPCL is the big winner on Nifty, 3% higher, but it's not alone. Check out HPCL and IOC. Those stocks are also up between 2.5 to about, 3% So that's a good space. And at the same time, ONGC is also doing well. So you have downstream, upstream, everything doing well this morning in oil and gas. That's one trend. IndusInd Bank is the third best performing stock on the Nifty, 1.5% higher. There's some gains on Shriram Finance, on Hindalco, on Power Grid as well. And then it gets a little quiet. The Nifty is just about trying to defend a 30-point gain. The Sensex has already dipped into the negative territory. Trent is trying to recover a little bit after yesterday's big, 7% dropping. It's about 1% higher as of now. There's a little bit of buying in technology. TCS Infosys up about 0.5%. Wipro is up about 0.5% as well. On the downside, Asian Paints, like I said, the market's just, still not, able to get over the kind of performance and the commentary that's also come through. It seems that recovery is still some time away. 4% down there. Nestle is lower, Titan's lower. Mangalam explained to us that there is an inventory issue, which is why you have the pressure on margins. But even then, at first glance, it's bad, and the market's reacting to it. Tata Consumer also on the lower side. Britannia is also lower, Lever is also lower. So the consumer selling that we saw yesterday, that's extending into this morning. But to add to it, you've got L&T lower, you've got, I think, Reliance also lower. So a couple of these heavyweights not feeling too well this morning.
Well, that's right. And a few stocks that are actually bucking the trend. You have MTNL that's flying away, a couple of other notable ones. I think BEML's land assets as well. That's the one that's separately listed. Both of them are moving on very, very high volumes. I think there are a couple of news reports that indicate that the government could look at, selling some of this land that belonged to these companies, MTNL and a couple of other PSUs. So that's why, in fact, you're seeing these stocks up. The reason that the OMCs are up is because Goldman Sachs, they have upgraded the stock. They are taking on both that there is an earnings risk driven by lower crude discounts as well as LPG under recoveries. But they're saying that most of these concerns are in the price. So that explains why all these three stocks are moving very, very well. Bharat Bijli, I think it came out with a set of numbers yesterday. It was up close to 20%. Today as well, that stock is up close to around 8%. So good move is what we're seeing on that one. Birla's Corporation, that's a cement company in there. That one, in fact, came out with a set of numbers that looked weakish, but the commentary was positive. And now the street is buzzing with excitement that a couple of these price hikes that are pushed through yesterday, even day before, there was this talk of a price increase, that bulk of it will be pulled through. So that explains why that stock is moved up. Prism Johnson, that's the other one in there. The reason that the stock is mildly higher is because they've sold a land parcel to JSW Group for around 160 crores. The debt in their books is around 1,200 crores. So that's why that stock is opening up mildly in the green. A good start to trade. The Nifty is doing well, but keep an eye out on the broader markets. Those boys got battered. Well, it seems they're in the mood to fight back.
Okay, on Asian Paints, by the way, Prashant, before I toss it to you, CLSA has put an underperform and their price target is 2047. I think that view could be, leading to the additional weighing down on the stock. 4% biggest Nifty loser. So that's CLSA sounding circumspect on the recovery prospects.
Absolutely. And, we'll keep a track of that as we go along. What else? I mean, I don't think there's very much else which is going on. Actually, there is going on. Let's just look at one name which we don't usually refer to at all in the morning. E2E Networks, right? It's one of those stocks which basically fell more than, I think it fell 60% from the highs. And I'm only mentioning it because it's, I think, the number 5th or the number 6th volume traded stock on the NSE. Non-stop downside. The definition of you can't get out. From 5,500 fell to about 2,200 yesterday. And today it's reversing a little bit, about 190,000 shares on E2E Networks. BPCL is up 3.5%. I mean, the BPs of the world fell quite sharply yesterday. And they're coming back up a little bit. Amber is the biggest volume-led gainer. It's up 4%. And there is Angel One, which is up with humongous volumes. It's up about 4.5% right now as well. Yeah, I mean, Religare is another one, right? I mean, that open offer, the Burman open offer, etc. 2.5 odd higher. MCX is up. Somebody was mentioning that in the morning. 3% in the green. Titagarh, Triveni Turbine, and so on and so forth. As things stand. 20 points on the Nifty. Pratik Gupta is our market master today, CEO and co-head at Kotak Institutional Equities. Pratik, good morning. Good to have you back on the program. Thanks very much. The question to you is, of course, I mean, to assess the color, the intensity, flows, and what should we expect from here? Because yesterday, foreigners net bought in the cash market after some time. Do you think we've seen the worst of all of the selling, and whether we should expect sort of limited selling, if that, or maybe even some buying from here on? What's your sense?
Hi, good morning, Prashant. We think yesterday was more of an aberration, more due to short covering rather than real long-only global active funds coming back to buy India. I think at Kotak, when we speak to most of our global investors, they're still very, very cautious. Most of them are seeing India, they still see India as quite an expensive market, trading at 20 times FY26 earnings on the Nifty. Trading at 100% premium to the MSCI. And more importantly, India is a growth market. People come to India for growth. And growth is where I think we've been disappointing last few quarters. And even the outlook going forward isn't that great. We're at Kotak, we cover almost 300 stocks. And we're more worried about the risk of earnings downgrades rather than seeing any strong case for earnings upgrades in the short term, at least. So the long-term structural story in India stays intact, but most foreign investors are seeing money going back to the US. And this Trump tariffs and trade wars are actually just injecting a lot more uncertainty, flight to safety, which is back to the US dollar. So until we see, signs that the US dollar is weakening, until we see some noise around this trade wars, sort of coming off, I think we will continue to see foreign selling and the market will continue to be driven more by local flows. So sort of, you may see a tactical bounce, but otherwise we're still advising a cautious stance on the markets right now.
Okay, cautious in the market right now. By the way, I'm just sort of updating, since I was talking about Asian Paints earlier, it's not just CLSA. A whole range of brokerages. There's almost an overwhelming consensus on the way down on Asian Paints, and something like a Jefferies as well has lowered the target. Jefferies is now at 2,000 on Asian Paints, and most of these targets are running well below the current market price as well. So it seems the pain is playing out. But Prateek, let's actually, have a broader discussion on consumer, because it's very clear that there is this personal income tax bonanza that's come our way. The question is, how can it be captured from an investor standpoint? What kind of stocks would you look at? For instance, would you look at buying into weakness in a stock like Titan? I know you won't name individual names maybe, but in general, how would you play the consumer where you see some element of growth and some element of valuation comfort as well?
So I think the main point is the valuation comfort, which you highlighted. That is still not there in most of the consumer stocks. And despite this tax bonanza in the budget, just keep in mind that this amounts to barely 0.3% of GDP, and not everybody who gets that extra 1 lakh rupees or whatever tax savings, they're going to spend it on consumption. Some of that money will be saved and invested and so on. So it may not necessarily flow into consumption, although nonetheless, this is a good step. This will result in some boost. But we think it's unrealistic to expect that the top 5% or 10% of the population, which is really who will benefit from the tax breaks, they will start buying more of soaps or shampoos or buy more milk. In fact, we had Nestlé's results yesterday, and Nestlé's more in the premium staples category. But even they were highlighting what the weak demand environment. You saw Asian Paints again pretty weak. So we think it'll be the low ticket, small ticket discretionary items which will benefit because staples, I don't think you'll see a demand boost. On the other end of the spectrum, we may not see a demand boost for let's say, high-end discretionary items like jewelry, etc. I think it'll be more the low-ticket discretionary consumption. It could be QSR, could be mid-size, mid-class hotels, small tourist type of. You could see a pickup over there. But overall, I wouldn't read too much into the budget boost. We are still going through a weak growth phase. The jobs addition is still low. The quality of jobs and the wage growth is still quite weak. So we think we are more at risk of seeing downgrades in most consumer stocks earnings over the next 1 or 2 quarters. And therefore, we'd still be somewhat cautious on the overall consumer pack.
Hi, Prateek. Good morning. Good to see you in. Prateek, what about these OMCs? It's not the one for the faint-hearted, but the stocks have corrected big time. Crude oil prices was being volatile. You had the LPG subsidy as well that wasn't as much as expected. And those stocks have seen a sharp correction. However, this morning we have Goldman Sachs has come out of the note, and they are saying that they believe bulk of it is in the price. Your view on the OMCs?
So I think it partly depends on your view on the oil prices. So there we think oil prices will stay high, which is why we actually prefer more the ONGCs of the world rather than the OMCs. The OMCs are also subject to all kinds of regulatory intervention. There's a lot of heavy capex going on as well. So from a free cash flow perspective, and the ROE, sustainable long-term ROE perspective, we are still quite worried. These are more like trading stocks, the entire oil and gas pack. But at this point in time, instead of the OMCs, we prefer ONGC at this point in time.
Got it. What about a couple of those other sectors that did very, very well when the broader markets were doing well? The renewable energy space, solar themes, they did very, very well. And they have seen a fair bit of a pullback from the top. What's the view on this theme? How do you play it?
So the solar theme is pretty interesting. We think there's tremendous long-term growth potential, but I think you got to be careful. We prefer the asset owners, the ones who are actually, you've got IPP contracts and building out solar plants, rather than the modules and the cells providers. There we think competition is likely to come in. There's a lot of capacity being put up. So in the next 1 or 2 years, you will see strong growth from those guys as well, but that's more than reflected in the price. I think the longer term story is going to be in the asset owners. And I'll just name one stock where we actually did an IPO some time back, and that stock's come off below the IPO. That's Acme Solar, for example. That's something, those kind of companies will do relatively better versus the solar and module providers. And then you have the integrated existing incumbents who are getting into solar, the existing thermal players, they're also getting into solar. But there we think valuations are still somewhat extended and there are pretty significant issues in terms of execution capabilities over there as well. So again, you got to be a bit more stock specific. You can't say, okay, the entire solar space is going to do well, so let's buy the entire pack. I think we'd recommend being a bit more cautious and look at valuations as well.
Okay. By the way, just looking at more active stocks this morning, and Angel One is very interesting. Angel One, let's pull up the stock. It's zooming up almost 6% higher. The monthly update has come in, and our colleague Vamakshi points out an interesting trend that the client addition is a little subdued. Month on month, client addition is actually down about 15%. But guess what? Volumes have started picking up. The average daily turnover, that's increased 6.3%. So it seems the market wants to believe that the worst of this change in F&O norms, all of that impact is now, played out, and maybe some semblance of stability gets back in. Prateek, so that question to you, the business that you're in, capital markets. The stocks have been such high flyers, right? The stars of 2024, but then we got into this patch where the market's not doing anything, regulations getting tougher. What do you think of them now? And if you were to play a capital market story, what would it be? It would be brokers, wealth managers, mutual fund companies. How would you look at it? Exchanges, of course.
Yeah. No, exchanges, I think generally are a good play. You saw the NSE numbers yesterday. But I think off the lot, I would say the AMCs or the mutual fund companies are probably the best bets. They have corrected quite a bit, 20-25%. In fact, today we've upgraded some of them. We had negative ratings on them until recently, but given the stock price correction last few months, we're turning a bit more constructive. I think the structural story is quite intact in the case of the AMCs. Firstly, you've got a growing savings pool in India. Second, more and more people coming into the equity markets. And third, these AMCs improving the distribution networks, coming out with more products, getting into passive themselves, passive funds as well. So we think valuations have now become a lot more reasonable, ranging from 20 times to 27, 28 times for fairly attractive, 15 to 20% earnings growth over the next 3 to 5 years. And with very strong ROEs. And the worst of the regulatory environment in terms of all kinds of changes in the last 1.5 years are behind us. Brokers, on the other hand, I think are more vulnerable. Depends on and the jury's still out in terms of what the volumes will be in the coming year. They're more dependent on the volume outlook. Also, regulatory changes over there are likely to remain adverse. So we prefer AMCs of the entire pack.
Okay, AMCs is your pick of the lot. Got it. Prateek, thanks very much. Good having you on the show today, and thank you for all the perspective. We look forward to the next call soon. Well, with that, let's dive straight in and talk about the retail trends that we're picking up. We've got, of course, quarterly numbers to report to look at as well, and, of course, the overall environment. V-Mart Retail reported a pretty strong performance for the third quarter. There was sharp expansion in margins due to operating leverage. To talk about this and to give us an outlook, we have with us Anand Agarwal, CFO at V-Mart Retail. Thanks very much, Mr. Agarwal, for joining in. So I want to start right here. Top line growth of about 15.5%. Your margins have improved to about 16.7%. Let's talk about this. Is this growth coming, from the rural segment, tier 2, tier 3, or are you seeing some improvement in the urban demand as well? And what are the SSG trends that you can maybe extrapolate from the third quarter into the future?
Hi, Surabhi. So, yes, I think the performance has been pretty much robust all around. So it's not just the urban markets, but also the rural markets, which have done quite well for us. We present more in tier 2, tier 3 towns, and that is where the bulk of our operations are. And that is where we are seeing a lot of revival in demand. I think last 2-3 years have been pretty bad in terms of the rural recovery. But for the last, I think, 9 to 12 months, we are seeing strong signs of revival. So we are growing in almost all the geographies. There is strong momentum coming in from north and strong momentum also in the south. East has been slightly softer this quarter, but otherwise on a like-to-like basis, on a same-store sales growth basis, we grew at almost 10% across all the regions. So going forward, also, I believe that we should be able to maintain this growth momentum, and the like-to-like sales growth should remain in high single digit for the Q4 as well.
High single digits for Q4, which means on a full year basis, you will end same-store sales growth in double digits for sure, right? Because I think 9 months you're already at 12%. So this is not just a festive season-led bump up in Q3. You're expecting this to continue, going forward as well?
Yeah, that's correct. I think that's also a lot to do with a lot of changes that we have been doing in our own internal functioning in terms of efficiency improvement, in terms of how we source, how we select the product, how we design the products, and a lot of that is playing into also the tailwinds that we are getting from the markets. So there is a revival in the market, definitely, and there is also a lot of work that we have been doing, which is yielding us results, and that's why I remain hopeful and optimistic on the road ahead.
So full year SSG, should we say, should be at least 12-13% in that range?
That's a calculation, yes. So high single digit for Q4, and I think the full year average should definitely be double digits.
Right. Just margins, Mr. Agarwal. Hi, morning. Prashant here. What are target margins you're looking at, and when will Unlimited's margins meet that of V-Mart?
So Unlimited, Prashant, has already, come to a very respectable level. In fact, the margins in Unlimited for this quarter were almost at par or slightly higher than even V-Mart. And that's probably happening because of a very calculated strategy wherein we are opening more number of stores in South India in a similar and exactly the same format as that of V-Mart. And that is a proven model that has worked for us in rest of India, and that is working very well for us in South as well. So all the new stores that we are opening in South are giving us very good margins, and therefore as an average, the Unlimited chain therefore is coming almost now at par, should come at par on a full year basis also in the next year.
Overall margin, Mr. Agarwal, what's the target?
I think we should still be looking at around 12% or so EBITDA margins.
Okay, 12% EBITDA margins. LimeRoad acquisition, how far is the turnaround?
LimeRoad is still in a a recovery phase. We are still trying to use and leverage that platform for more shifting the customer easiness and providing our own V-Mart customers as well as Unlimited customers are more easier access to bigger catalog. So the strategy there has been to cut down on the marketing spends and thereby improve profitability or improve the losses there, and source a lot of customer traffic from the existing and probable offline customer base. So I think we will still have little amount of losses in LimeRoad, but LimeRoad will still remain a small but an integral part of the overall network.
Okay, got it. So it's been good going for you, not just in Q3, so far in the fiscal, and you're sounding optimistic. And imagine this is without the personal income tax bonanza. So what happens from here on is the question. And to talk about this, we have another guest joining in. We have with us Akash Agarwal, whole-time director at V2 Retail as well. Akash, so that question to you. I think tier 2 or rural has not really been the problem. A lot of retailers, consumer companies are talking about the urban slowdown. To what extent do you think will this help your operations, this personal income tax cut?
So about 80 to 90% of our stores are in tier 2 and tier 3 towns. So that's where the bulk of our revenues come from. But there had been pressure both in rural and urban. So we welcome this move, and there was an urgent need for some kind of stimuli to boost customer demand and spending power. So I think it's a step in the right direction, and it has the potential to create some sort of ripple effect across the economy. Because when you have higher disposable income, it should stimulate consumption, and then ultimately it should fuel business growth. And hopefully it leads to a multiplier effect on employment and investment.
Got it. Gentlemen, of course, the whole idea about fast fashion or the tier 2, tier 3 category that you both have told us about is that to keep prices stable. And that's how volumes continue to fly off, right? So I want to get a sense on pricing from here on, and also the disruption that the industry perhaps will look at, because from the online perspective, we have Shein now coming in. along with Jio. And we saw that, disruptive impact play out on the trend stock just yesterday in the market. The market's wondering which way this will go. So, Akash, again, that question to you. While the underlying demand continues to be strong, maybe will get stronger because of this income tax cut, what about price elasticity in the market? What about competition in the market, which is only heating up?
So talking specifically about Shein, I think it's an online-only model. And the pricing strategies and the average selling prices are very different than our business model. So what we focus on is strengthening our value proposition and ensuring that our customers get the latest trend. So I don't think they are in direct competition to us, or they might affect us significantly in a way. But there's always welcome for new, players in the value fashion market, and I think it's good for the overall business and the market, because people are focusing more on value fashion these days, as people look for affordable clothing, and even the frequency of purchases have been increasing. So I think it's good for the overall sector.
No, absolutely. I mean, and the thing is, the digital medium is also really catching up. Mr. Agarwal, your thoughts on this? I'm not sure if you're exactly in sort of what products would you be almost like to like competition with something like a Zudio, but there is a big challenger coming now in the online space, and a lot of your value-conscious customers are also checking prices online and looking at options online. So what do you think lies ahead in terms of the pricing elbow room that you may have?
I think, Surbhi, I fully resonate with what Akash said. And see, competition is always good for the market. And it also helps us, improve our own way of operations and looking at what best we can offer more to the customer. In any case, the product segment and the customer segment that we target is slightly different from the pure online segment. The core, customer base that the typical value retailers of tier 2, tier 3 towns have a slightly different taste, and we specialize in making sure that we are able to provide that kind of merchandise to that customer who has to make an investment decision. It's not just a buying decision for a pair of jeans or a top. It's more of an investment decision. Our experiences, despite being an online retailer as well for the last 4 years, the offline customer behaves very, very differently. But at the same time, we remain very optimistic on the entry of more competition. We've always had a lot of competition in the value retail segment. And it's not just the online retailers who are eyeing India for online entry, but it's also a lot of conglomerates which have beefed up their presence in the value retail space. And, even with all of this, I think still the unorganized market occupies almost 80% of the Indian retail apparel market. So there's a lot of room for growth for all of us. And I think if we pull up our socks, we do our strategy well, we should have enough room to play in.
Absolutely. And what we know right now is that, Shein will have mostly an online presence. And there's something very nice about going offline, walking into a store, trying on the attire, and then making your purchase decision. So that's always, a plus. Thank you very much, both of you, for joining in and taking us through the trends in terms of consumer retail in the third quarter. Nigel?
All right. Well, let's get to the next stock, Titan. That's the one in focus that had a couple of one-offs in the past quarter. But what's the tragedy and how are things looking from here on? To help us out with that, we're joined by Mr. C.K. Venkatraman, the Managing Director of the company. Hi, sir. Good morning and good to see you, Ben. Well, let's start off with the largest part of your business, the jewelry business. Out there for the first 9 months, you've grown by close to 26%. And margins, adjusted for a couple of one-offs, it's at around 11% approximately. What kind of growth trajectory you expect to continue on the jewelry business for this year? And is this 11% the new normal in terms of margins? Are there levers you have in store to push a little bit higher?
Hi, morning everyone. The overall opportunity for the jewelry business of Titan is very strong. The brand and the set of brands we have are all much desired. Together we have at best a high single-digit share. There's an acceleration in the formalization of the category. The kind of customers we cater to are sitting in the top 1/3 of the income pyramid, and the long runway in the growth in the numbers of those customers, as well as their income and wealth, is pointing to a long, growth for Titan's jewelry business. The one uncertain thing in this is the price of gold and the fluctuation, and short-term fluctuation in the price of gold, like what is happening even as we speak. But barring that, the runway is very strong. So we expect to continue to do well over the next, many quarters and many years. Yes.
All right. I would appreciate if you could give us a number. Is there a number you look at? You can continue the current momentum, 25% growth because formalization of the industry and the big potential. Should that be a fair estimate? And also, I wanted to ask you about the studded ratio. That's come down to around 23% or thereabouts. I recall your list should be at 30 plus. So a couple of questions out here. Where does this number stabilize at? And so much of talk about lab-grown diamonds, but I believe the risk to this particular category is only around 10% or thereabouts. Could you give us a number?
Actually, the growth which we typically look at every year is in the ballpark of 20% from an annual point of view. And that's the kind of thing that we would be satisfied with rather than continuing to maintain the 25 in every quarter. So that's the answer to the first point. On studded, actually the studded growth in quarter 3 has been very good. It's because of an even higher growth in gold and gold jewelry, as well as spectacular growth in gold coins has depressed on the face of it the share of it, just mathematics. And we are not really so much bothered about the share of studded jewelry as much as the growth in the studded jewelry category, as long as it is in a respectable level, which it was in quarter 3. We are okay if the share falls because it's the total scale of the business in such a situation that is rising rapidly, and the total gross margin in rupee terms that will rise and give the leverage for profit growth. And all. Therefore,
so you're okay with it being, sir, in the early 20s, 22, 23% is okay for you?
I'm not saying that. What I'm saying is that is a result of the combination of the growth in studded, growth in gold jewelry, and growth in coins. We are very particular about the growth in studded jewelry. I mean, I'm just saying, hypothetically, if the gold jewelry were to grow 50% in a particular quarter, despite the studded jewelry doing whatever we think it should be doing, the share will fall. But the total gross margin, the total sales will be much strong. That's the point I'm making. So I'm not saying we'll be satisfied with 20 or 22 or anything like this. I'm telling you why the studded share is low, despite the studded performance being on target and strong.
All right, Mr. Venkat. Right. No, got that. It's a function of how the portfolio shapes up. Good morning, Prashant here. On the margin front, sir, could you give us a sense? Is the new range between 11.5% Is there pressure broadly? Is there pressure here as you see it? And what could be the upside triggers really?
Hi Prashant, given the long runway in terms of growth and our having just a single-digit market share, our focus continues to be on sales growth and with a stable margin around that 11% ballpark. That's what I would gun for. That's what we are pushing for. And from an overall business performance point of view, the return on capital employed of the business of the company is very strong at this level of margin because of the overall capital turns of the company being at benchmark levels. So since we are a very well-performing company, we would like to focus on the sales growth while maintaining the margin in the 11% ballpark.
Okay, and on just a very brief comment on lab-grown diamonds specifically, you are the overall sort of leader. How are you seeing adoption rates in the, not just for you, but I mean otherwise as well, not just for the group, but otherwise as well in the industry? Is it very fast? Is it slow? Just a sense.
There's a lot of action, there's a lot of activity, a lot of brands, a lot of stores, a lot of visibility and all that. And I think in the early stages of any category, that visibility, that noise will sort of suggest a certain level of actual performance, which is not really on the ground like that, but that's okay. That's how it is. It is certainly a very important development in the jewelry category. It's a very interesting product. Titan's own strategy will be shared as and when we are actually ready to share it. But on the ground, even in concentrations where we have a lot of lab-grown stores around us, we are not yet seeing any major conversation around the LGD. People are appearing to be more interested in reconfirming that, that they're buying naturals and all that, as opposed to actually wanting to buy LGDs. But honestly, early days, so I wouldn't.
Mr. Venkatraman, sir, morning, Surabhi here. But, if I could ask you to expand on that point, because now whether we're looking at the studded mix or whether we're looking at CaratLane, our colleague Maglam tells us that the growth has slowed down. It's at 27%, but it used to be much higher, the growth for CaratLane. Now, we don't know if this is a transient impact of some shift to lab grown or not. But my question to you is, A, on CaratLane, what would the expectation be? And the strategy that you said, that Titan will reveal the strategy in due course. When, sir? And my simple question is, why not also give the lab-grown offering? I mean, maybe once the customer walks into your store, instead of going to some A, B, or C lab-grown diamond, retailer, maybe you can convert them to naturals as well. Why let the customer, go anywhere else? Why don't get all the footfalls by offering even lab-grown and then trying to, upgrade and uptrade the customer? By when can we have that strategy?
On the first point, if you look at the performance of CaratLane, it's actually between Q3 and Q2. I mean, Q2 and Q3 have been rising. The overall profit performance of the brand has also risen. And we'll have to see the portfolio of, CaratLane is substantially in the less than 1.5 lakh price points. Mia, which is another strong brand of Titan Company, is substantially in the less than 1 lakh. Tanishq itself also operates. So we'll have to look at the total between these three brands, the less than 150,000 price point, how well the Titan Company is doing. And that's something that we keep a track of, and we're very, very satisfied with these various parts. The lab grown is, your suggestion of why not is, most welcome. All I'm saying is that companies don't necessarily share what exactly they're planning to do before they actually do that, right?
No, how many quarters away are we? I mean, I'm not saying you're not going to announce it on national television. I totally get that. But how many months or quarters away are we from understanding what Titan is about to unleash here?
That's part of, keeping it close to the chest, isn't it?
Okay, I won't stress on that point. Let me come to the other statement that you made, sir. You were just telling Nigel, and tell me if my interpretation is right. Overall, when we talk about the jewelry business, gold, studded, non-studded, everything put together, you said 20% is a growth to expect. So, are you saying that from 25%, 20% could be the new normal?
If you go back and look at the growth rate of, the Titan's jewelry business over the years, we have been in that 20% ballpark CAGR for many years. So I'm saying if we do at this scale, if we do 20% CAGR for the next 2-3 years, for instance, that's a damn good growth.
But we shouldn't expect 25%. What I'm trying to understand is that we should then change that expectation from 25% growth year after year to 20% growth. Is that a fair understanding?
I'm saying that 25% is the growth that we delivered in Q3 of FY25, right? Whereas you're asking me for future forward.
Yes, full year CAGR growth, full year CAGR. Yes, sir.
So I'm saying we had a 5-year or 3-year Titan Turbo plan, which is in that 20% plus ballpark. So we'll be very satisfied at this scale to grow at that rate. That's all I was clarifying.
All right, Mr. Venkatraman, very quickly before we let you go, there was this buzz that Titan is on the prowl and you're looking at some inorganic growth. Can you clarify? Is there something domestically or internationally that you're looking at that we could hear about in the near future?
We're always looking at something or the other, and we will
what could the size be and how long, sir?
All in good time.
Before the end of this fiscal?
All in good time, like I said. Yeah.
We have to wait for the lab-grown strategy, for the inorganic, perhaps maneuvers. We have to wait a bit, I think.
Okay, all right, Mr. Venkatraman. It's been good speaking to you. To be fair, I had visited your Titan store in Bandra and quite impressive with regard to the analog watches you'll have as well. Everyone's going digital, but, some of those watches look quite good. So all the best on that front. We look forward to hearing from you on a whole host of those issues that we briefly spoke about. For the time being, we slip into a short break. On the other side, we'll get chatting with the management of Happiest Minds. Stay with us.
कुछ लोगों को अब जब एआई की बात होती है, कुछ लोगों को अब ये शब्द फैशन में है तो बोला जाता है, लेकिन मेरे लिए सिंगल एआई नहीं है, डबल एआई। भारत की डबल ताकत है। एक एआई आर्टिफिशियल इंटेलिजेंस, दूसरा एआई एस्पिरेशनल इंडिया।
Okay, welcome back. 30 points on the Nifty. So 23,770 is where we are trading at. Happy as Mind is the next management of the show, where the company reported a soft set of third quarter numbers. My colleague Reba Tendulkar caught up with the company's MD and CFO, Venkatraman Narayanan, and Executive Vice Chairman and CEO, Joseph Anantraju, began by asking them about the quarter gone by and how they see growth going ahead. Listen in.
When we started the year, I had given a forecast or not a guidance of 30 to 35%. That was the number that we had given out in growth in constant currency. And that was assuming that we will get the full credit for the consolidation coming in from Pure Software, Aureus, and Macmillan. But, unfortunately, it took some time to close those transactions, and we only got about 40 days of the revenue benefit from those transactions. So that impacted us, and which we did highlight in the earlier quarter, considering that we will continue to try to see how we can make the 30% number, which is the lower end of the forecast that we had in terms of growth. Compared to that, we have done about 25%. I would also like to highlight that all the two quarters, which is Q2 and Q3, we have done 27 to 28% growth year over year. So that shows that, this was just a little bit of a miss in terms of the consolidation benefit and the mathematical addition that we got to do because of the number of days in the first quarter that we got from the benefit. So that's a math behind that growth number. Despite that, like I said in the last quarter, we are trying to meet the 30% number. We have now made a good consolidation in Middle East. That plus the organic growth that we're seeing in Q4, we should hopefully try to hit that 30% number or at least come reasonably close to that.
But organic revenue growth, just quarter on quarter, is I think close to about 0.8% in constant currency terms. Are you anticipating an acceleration, Joseph, in Q4, as Venkat was pointing out? And give us a sense of the demand environment now.
As you know, the Q3 typically tends to be a seasonally tough quarter because of number of working days, people availing of leave, which usually knocks off around 3 to 4% of growth. And this quarter, we also saw a few of our customers in BFSI, which has become a much larger portion of our revenues, having furloughs and forced leaves. So that impacted our revenues. But overall, I think the demand environment looks, as I shared last time, post the election, there seems to be more optimism, and most of our renewals for the year have gone through. We have a pretty strong pipeline based on three factors. One is our GenAI business unit is beginning to see customers move forward, I would say, from POCs to larger implementation. So we have two customers who finished the POC phase in Q3. They've signed larger 6 to 12 month deals for doing production implementations. Our chief growth officer and his team have come together, and we're seeing quite a bit of traction in terms of NN pipeline with 2 or 3, one customer already closed and a couple of them very close to signing. And this team just came together in November, December. So that's again heartening. And the third factor is the verticalization. I think the whole structure and approach to go-to-market has taken root, and we are seeing an improvement in pipeline, both in NN and in existing customers. Overall, I think we are very optimistic about Q4.
Venkat, let me pick on one of the points. That's the generative AI. And correct me if I'm wrong, but did your generative AI business unit see a revenue decline of 4% on a quarter-on-quarter basis?
In rupee terms, yes, we have. It was about eight and odd crores last quarter, and we have maintained a similar run rate number, 8 and odd crores. That's got to do with conversion of some of the POCs into real projects that are full blown projects. But yes, we have. It is, I would say, remained flat at about 8 crores over the last 3 quarters. We have done 25 crores over the first 3 quarters of the year.
Do you want to put a number to it? What generative AI could contribute to your top line by the end of FY26? And also talk to us about the 60 basis points margin decline. And do you hold on to your EBIT margin guidance of 20 to 22% for this year and next?
Yeah, as far as the margin is concerned, we are holding on to the 20 to 22%. If you look at the 9-month number, we are at 22.1%. And our margins are despite the investments that we continue to make into Gen AI. Gen AI is a startup unit within Happiest Minds today. We are making investments into Gen AI. We are making investments into the new sales engine that Joseph referred to. After accounting for that is what our EBITDA number stands at about 21.1%. We would like to maintain it ahead of the 21.1% for the year, and also ahead of the 20 to 22% that we have given as a guidance for the year. So on the margin front, yes, any turnaround that we will see in generative AI business is going to really affect us very positively. As far as generative AI becoming 10%, taking off from where Joseph talked about how we are seeing growth in that business, this generative AI becomes, as we mature, I see that becoming more an integral part of the verticalized offerings that we give. So today, we are looking at offering generative AI into Artha banking services. Going forward, I'm not very sure how I'll be able to split it. There will be an attempt that we made, but what happens is generative AI becomes that differentiator for our products and services to go into the market.
Running out of time, so very quickly, Venkat, are you back to scouting for more acquisitions since it's been over 6 months since you closed the prior 2, and M&A is an integral part of you? And another quick word on your average revenue per customer. Do you see it hitting $1 million mark by the end of FY26, next 12 months from now?
Though not an acquisition, we did disclose a consolidation deal in the Middle East. We have acquired the entire Middle East business of GATS Technologies. This was announced a couple of days back. It was during our silent period, so we couldn't do much of press release and announcement. But that's added to our Middle East presence. Middle East, we are welcoming about 90 plus people in the Middle East market. So that's a reasonably large addition for us because we have traditionally been 100% offshore. And most of those customers are in the BFSI segment and within the IMS SBU. So as you will see, we continue to keep doing business addition through acquisitions or transfer of business or consolidation. That's in progress. As we look into the new year, yes, we will continue to scout for new deals and raise capital as required as well if it comes to that.
Okay, all right. That is the latest from Happiest Minds at the end of the 3rd quarter. With that, we have to get back to the markets. We have Mitesh, of course, back with us. Let's quickly check what the Nifty has done. Not too much, actually, in the interim. Very, very range-bound, 27 to 28 points higher. The Sensex is flashing just a little bit of red this morning. Mitesh, trades now, I think it's more about individual stocks today than the index.
Good morning again, Rupee. Yes, I think definitely. But what is also showing good strength is the Bank Nifty. Very nicely set up by about 250 points. I think the Bank Nifty could head towards 50,800 and then possibly 51,500. So maybe today financials will do slightly better than the broader markets. I, in fact, have a buy on ICICI Bank, which I would recommend buying with a stop at about 12.59 for targets of 12.95. And, yesterday we had IndusInd Bank. Today I have Indian Bank. That's another stock which is shaping up nicely. Buy in with the stop at 541 for targets of 575.
No, absolutely. And interesting names there. By the way, do you have a view on these OMCs, BP, HP, IOC, anything looking interesting at all?
In fact, they were slightly on the weaker side, and yesterday we did see some recovery towards the second half. They recovered, but I don't have a signal of a trend reversal. Though I think, IOC chart today, there's a gap up opening. If the gap doesn't get filled, we'll at least see a pullback rally to about 132, 133, and above that, I would look at a slightly short-term reversal to with targets of 140. So the patterns are good, but then they'll go step by step. So not very exciting to trade.
All right. Mitesh, thank you very much for that. We'll come back with you as far as more trades and more analysis goes. Asian Paints is what we want to focus on. Mangalam is here. Stock's taking a bit of a dip. Mangalam, take it away.
It's the top Nifty loser today, and the reason for that is weak numbers, but even weak commentary coming in the conference call yesterday. So management did say that demand conditions remain challenging in the fourth quarter as well. There is continued stress in urban even as rural recovers. Volumes might improve quarter on quarter, but value growth will take about a couple of quarters to reach low single digit itself. And that's, the sore point that the street is worried about. They've reiterated their 18 to 20% EBITDA margin guidance, but in the medium term, they expect single digit volume growth and value growth led by product mix itself. Brokerage is not particularly happy with that. The stock is corrected about 30% from highs, but still trading anywhere between 48 to 49 times FY26 price to earnings. So Jefferies has an underperformed rating. They're saying that management has highlighted tough demand conditions, as a result of which they've cut their EPS estimates by 4 to 8% as well. Goldman Sachs says that, competitive intensity, which is likely to increase even as demand conditions are subdued, prefer the sell rating on the stock close to around 2,200 rupees is their target price. They too have lowered their EPS estimates by 4 to 5%. CLSA is another one which has an underperformed rating. We have Morgan Stanley underweight rating along with Macquarie as well. Macquarie actually is the only one which has an outperformed rating with a target of 2650. Brokerages by and large cutting their estimates on account of subdued conditions, higher valuations despite the stock price correction, and impending competitive intensity.
Okay, all right, got that. Mangalam, thanks for that. That's Asian Paints down about 4%. Let's move on to Cummins. Vamakshi is tracking this one. I think there was a conference call. Vamakshi, what are the highlights?
Well, absolutely. So Cummins Inc., which is the global parent of the company, actually had a conference call yesterday, and 3 important announcements that came through from the company. The first one is on the guidance. Now, they say that in India, they're projecting revenue, including their JVs, to rise by nearly 10%. The growth is likely to be driven by stronger power generation demand. Now, keep in mind that Cummins, overall, the global entity has several entities in India, out of which Cummins India is the only listed entity. So the 10% growth guidance that they've given pertains to all of these entities combined. Apart from that, they also had some strong commentary on the power gen as well. They believe that revenues in the global power generation markets are expected to rise between 5 to 15% in 2025. They see continued high demand in the data center market, and they're excited about the continued impressive performance and growth potential for the power systems business particularly. And given that, the third comment that they made was around the investments. So they say that they are further expected to raise capacity to meet the rising power generation demand. They're expecting to invest nearly $200 million across US, England and the India manufacturing sites. So overall, when we look at these 3 major commentary that came through from the Cummins Inc., that is the global parent, it bodes well for Cummins India. It has a positive read-through. So therefore, the stock is up and away in trade today. But also keep in mind that Cummins India is expected to report its numbers later today. So we'll be watching out for that as well.
Okay, all right, Vamakshi, thank you very much for that. Need to take a very quick break. Come back on the other side and all the commodity market action with Banisha Gupta.
हमने स्कूलों में 10,000 टिंकरिंग लैब्स शुरू किए और आज उन टिंकरिंग लैब से निकले बच्चे रोबोटिक्स बना करके लोगों को चकित कर रहे हैं। और इस बजट में 50,000 नए टिंकरिंग लैब्स उसका प्रावधान किया गया। भारत वो देश है जिसके इंडिया एआई मिशन को लेकर के पूरी दुनिया बहुत आशावादी है और विश्व के एआई प्लेटफॉर्म में भारत की मौजूदगी एक महत्वपूर्ण स्थान प्राप्त कर चुकी है।
This was the third consecutive year that the BMC budget was presented to an administrator and not to a standing committee. Why? Because the term of the corporators ended in March 2022 and the elections for the new term and the new corporators are yet to be held. Now this 74,427 crore rupees budget, out of this, an allocation of 43,162 crore was made for capital expenditure. 5,100 crore rupees for roads and traffic department, 5,807 crore rupees for Mumbai Coastal Road project, 3,039 crore rupees for storm water drain department and 650 crore rupees for sewage operation department. For key public services, over 4,000 crores were allotted to education department, over 7,000 crore for health department, 261 crore rupees for fire department, 309 crore rupees for disaster management and 220 crore rupees for the garden department. BMC announced that it's going to start 250 new public clinics, also known as Apla Dawakhana, all over the city. One interesting initiative announced by the BMC was the introduction of cyber awareness program for students. It will serve two key purposes. One will be to ensure that the students learn how to use the internet in a safe manner and to keep them safe from cyber fraud. BMC also focused on environment initiatives and projects like promoting eco-friendly cremation and proper disposal of residue from idle immersion. These are the projects which will take place under environmental related initiatives in the next few months. We also spoke to Bhushan Gagrani, the BMC commissioner himself. This was the first time that he presented the BMC.
All right, welcome back. We got the market, which is absolutely flat now. So actually, you know, that 60 odd point bump up that we had early morning on the Nifty is gone, and we are now down 2 points. I mean, blinking red and green, 23,740. Manisha is here with what's top of mind as far as commodities are concerned. Manisha, good morning.
Morning, and thank you for that. Well, top on mind really is gold prices, because we've been making all-time highs for a fourth straight day today. If you look at the prices right now, we're trading at $28.50 an ounce and above that as well. This is what we've done in last some time, you know, 28% of gains in gold prices in 2024. We've seen prices gain up by 40% if you look at the last 12 months itself. And in this year, 2025 till time, the gold prices are up by 9%. So clearly a lot of safe haven buying is what the gold prices continue to see into that one. If you look at the Indian markets then, and we've opened at an all-time high above 84,000 rupees per 10 grams. Remember, this price does not have GST calculated or making charges. So if you go out to buy gold, you perhaps are already paying around 90,000 rupees per 10 grams there. Well, major buying clearly comes in back of the tariff concerns with the US-China trade war boosting safe haven demand. Gold clearly is the place to be. We also have seen very strong import numbers from China, Singapore, UK and US itself when it comes to gold, and that is reflecting into the markets there. And when it comes to US and China, not so much for US, Mexico and US, Canada, but when you talk about US, China, it does mean global economy. And this is where you have seen buying coming in from various geographies there. Markets also are looking at the China PMI numbers that came in on the weaker side. The offshore yuan also has slipped down, and that means more buying in case of gold. We also are looking at uncertainty in sense of US interest rate cut for 2025. And then it is also about the lower job numbers that we got from US. So everywhere that you see there is uncertainty, weak economic data from US, from China, from European Union, and that has led to buying in case of gold. And not just gold, take a look at the silver prices, and we're trading above $32 an ounce onto this one, which is a 2-month highs. And that chart should tell you on what silver prices have done in the last few sessions there. Well, we have seen the silver prices gain up by nearly 11% in this year already. This is going to be a 5th straight year of deficit in the international markets in sense of supplies. And we're looking at strong industrial demand, retail demand as well. So in this year, until now, we are up by 11.5% for the silver prices. It's gained up by 44% in last 1 year. It was up by 25% in 2024 as well. So when it comes to gold and silver prices, there is no stopping. A lot of safe haven buying and a lot of physical buying as well continues here.
All right. Thank you very much, Manisha, for that. Precious metals like silver in focus there. We'll take a quick commercial break here. Market is, of course, flatlined. We are back with our special segment. It's the Economy Latha in conversation with two experts from S&P Global Ratings and BNP Paribas Asset Management. They talk about the first round of US-China tariffs and how they can impact global trade, growth, inflation, and forex as well. Stay tuned.
I'll listen to what he has to say about this BMC budget. So your budget also mentioned that you guys are planning on imposing a tax on the commercial properties in slum areas.
That's right.
If you can elaborate that. So from when this new tax will be levied, sir?
It is actually not a new tax. In fact, we are enhancing our assessment net. Under the assessment net, the properties which are in the slum, however, which are being used for the purpose of commercial, they were not covered. So this is for the first time we are doing the survey and bringing them in the tax net. Not necessarily that we will be imposing huge tax. It's a normal tax. It's not a very huge tax. However, the coverage will be given to our commercial properties.
So BMC has not introduced any new project this time. In fact, you have focused. Correct. Yeah. But sir, does it mean that is there any cause for fiscal concern, sir?
No, there is no fiscal constraint. We have enough adequate cash flow as well as resources.
हमारे देश में एक प्रधानमंत्री हुआ करते थे उनको मिस्टर क्लीन करने कहने की एक फैशन हो गई थी। उस प्रधानमंत्री जी को मिस्टर क्लीन कहने की फैशन हो गई थी। उन्होंने एक समस्या को पहचाना था और उन्होंने कहा था कि दिल्ली से 1 रुपया निकलता है तो गांव में 15 पैसा पहुंचता है। अब उस समय तो पंचायत से लेकर पार्लियामेंट तक एक ही पार्टी का राज था। पंचायत से पार्लियामेंट तक एक ही पार्टी का राज था और उस समय उन्होंने सार्वजनिक रूप से कहा था कि 1 रुपया निकलता है 15 पैसा पहुंचता है। बहुत गजब की हाथ सफाई थी। पंद्रह पैसा किसके पास जाता था ये देश का सामान्य मानवी भी आसानी से समझ सकता है। आदरणीय सभापति जी, देश ने हमें अवसर दिया, हमने समाधान खोजने का प्रयास किया। हमारा मॉडल है बचत भी।
Welcome to It's the Economy. This is a very important topic now. The tariffs that President Trump promised have been imposed in right earnest, starting with China. While the tariffs on Canada and Mexico have been stayed for a month, the 10% imposed on all Chinese imports stands. China has retaliated with a 10 to 15% tariff imposition on imports of coal, LNG, agri-equipment, pickup trucks and large cars from the US. The Chinese, the yuan, which has begun trading only now after the lunar holidays, has actually depreciated. It's depreciated to 7.28, I mean the offshore Chinese yuan, and it was 7.25 before the holidays began. So clearly the impact has been negative. All Asian currencies are also slightly downbeat today, despite the dollar index falling. You know, one would have expected currencies to go up today. That's not how they are. Let's try and understand where do we go from here. Currency is most important, but also global growth, inflation become important. I have with me two experts, Louis Quis, the Chief Economist to Asia Pacific at S&P Global Ratings, and Chi Lo, the Senior Market Strategist, Asia Pacific at BNP Paribas Asset Management Company. Gentlemen, thank you very much indeed for your time. Louis, if I may start with you. First, should we understand this as less than we feared? After all, the president has stayed back from going ahead with that 25% on Mexico and Canada, it looks more like bark than bite. And China, which we were told 10%, 60% is only 10%. So do you think we need to fear the tariff war less than we thought before Feb 1st?
You know, Lata, I don't think so. I think the President of the United States has two reasons to talk about and threat with tariffs and to impose them. One is economic, and they actually have laid out already, the White House, a pretty comprehensive agenda. They will go all over all their economic relations with China, Europe, other countries. That will come in due time when we will get tariff imposition because of that. The other is, you know, these non-economic factors like fentanyl, immigration, these kind of things. So what we've seen now, the threats to Canada and Mexico are related to these non-economic factors. Then they have been taken off temporarily. The ones on China are not, the ones that we've had so far are not the only ones. There are also going to be additional tariffs being imposed for those economic reasons. So I would caution against being, you know, optimistic about what we have seen so far.
Okay, fine. I perhaps got misled by the fact that he withdrew the tariffs within 24 hours, or at least postponed them. Let me get to you, Chi Lo. How would you look at the impact on currencies? We saw the initial depreciation in currencies. I mean, the rupee took a pasting, but is the worst behind us in terms of reaction of currencies, or have we just begun?
I don't think. I think at this point it's too early to call for bottom or any change in trends of the currencies. Now, the tariffs by default, by itself, is dollar positive, because with tariff imposed by the U.S. on other countries, one of the easy way for the other countries to fight tariffs is to have their currency depreciate. So I think that trend, other things being equal, still intact. We are still looking at a strong dollar, at least in the short term, against the other currencies. Now, going forward, it will all depends on how the tariff implementation, the negotiation will play out. Now, if we do see a very serious tariff impact, big tariffs imposed by the U.S. on major economies like China, Europe, and other big ones, we will likely see the dollar continue to go up. But then if negotiation brings down the tariff impact, then we may not see that much depreciation and so on.
Okay. Louis, would you agree that we still have to see a lot of strength? I mean, we saw the dollar go to 110, and then after the tariffs got announced and withdrawn, over the last 48 hours, they have come back below 108, 107 point change at this point in time. But the worst is yet to come in terms of, positive for the dollar strength?
Well, you know, I think what we saw in recent days was, right, that whenever tariffs look likely to be imposed, that strengthens the dollar and weakens other currencies. And so when that reverses, we see some relief for other currencies. But yeah, you know, I think we're not at all out of the woods in terms of that tariff action to come.
Okay. Well, now let me get to the growth and inflation picture. Louis, you know, in the US itself, the fear is that it'll be more inflationary. There are some calculations available. I think Morgan Stanley put out something saying that it'll be 30 basis higher if that 25% had gone on Mexican and Canadian imports. What's your sense? What is the impact for China? What's the impact for the US? And what's the impact for us in Asia, where the expectation is China will dump and therefore it will be disinflation for us? Your thoughts?
Yeah, so there are indeed a lot of things going on, right? So, you know, I think firstly, it helps to understand that the bigger your economy is, the smaller is likely to be that impact on your growth and things like that. And so, you know, the impact would have been the largest in Mexico. It's a bit smaller in Canada and even smaller in the US itself. You know, with regard to China, the Chinese economy will be hit by those tariffs. We expect growth, you know, to be hit by something like 0.5 percentage points this year, a bit more next year. Inflation, as you mentioned, will be under pressure in that weaker economy, but also, as you said, when Chinese exporters cannot so easily export to the US, well, they will be looking for other destinations for their goods, and that could be within China itself or the rest of Asia. So it will amplify downward pressures on prices outside of the US, including in China itself and in other markets. So there are quite a few things going on over here.
Yeah, we are counting on disinflation for us as one of the perhaps advantages of this war, one of the few advantages. But Chi, what would you expect will be the impact on growth? Do you think exports of all countries will suffer? Or, I mean, I'm trying to gauge the impact for India itself. That's my intention. But you tell me whether you're going to see a fall in global trade and global growth.
Definitely, the tariffs' impact on global trade will be negative. We are likely to see less global trade, more inflation in the short term, but ultimately, medium term, beyond a year or so, tariffs' impact is deflationary, which means that the impact on growth is also deflationary, especially for those economies and markets that export to the U.S., including China. Now, what's important going forward is, from the grand scheme of things, look at the monetary policy trajectory of the major central banks, especially the U.S., because if the short-term inflationary pressures derails the rate cut narrative that the world financial market is now still banking on, we could see even short-term risk or correction going into risk assets, stock market, and so on. But beyond the short term, if we do see the growth impact, including that on the U.S., come back to haunt the economy, depressing growth, when that's become obvious, we would see central banks, U.S., Europe, other countries will go back to the rate cut path, which in turn will help risk asset going forward. So from an investment perspective, short term, we are likely to see correction in risk assets, but then beyond the short term, we may we could see a rebound in the risk asset prices.
How would you define the non-short term? Beyond 1 year, I mean, 1 year is short term?
Between half a year and 1 year, that's typically we see the inflationary impact of tariffs on prices.
Okay. Louis, what would you expect would be the US Fed's reaction this year? No cuts or one cut? But more importantly, what's the impact on growth? Global growth takes a hit. Are we going to, for instance, when we are counting Indian growth, would you lower it from S&P?
Yeah, so we are in the camp that expects the impact of tariffs to be pretty negative, negative in the US itself, also, of course, negative for those countries that are facing those tariffs. But then there will be spillover, right? And when country A grows less, it will import less from others. So also we should not underestimate the impact of the uncertainty. If you're a company right now and you're deciding on your investment plans, what are you going to do? You will end up delaying things, and that uncertainty may in the end actually be the largest drag on growth. So all in all, this is definitely a negative for growth. And coming back to that US Fed picture, yes, we also expect that, already in recent months, right, we had to adjust our narrative on the US Fed. When the news about the Trump plans came in, we had to adjust our plans, and we now see already less room for the US Fed to cut its rates, even in the absence of those tariffs. If those tariffs were to actually go ahead, the ones on Canada and Mexico, then we would not see room for any cut this year, and only late next year would then they be able to start cutting again. So that impact is quite significant.
Okay. Just a very quick last question. Chi, what's the level you are looking for the Chinese yuan itself? 7.4, 7.5, or even worse?
We are looking at around 7.6 by year end if the tariffs are sustained. But an important factor that we have to monitor is the Chinese policy to stimulate growth in China. If they are successful, we could see a turnaround investment sentiment, portfolio flows back to China, that could push the CNY US dollar back down to below 7. So we are looking at two scenarios, but base case is going to be more weakness in the short term.
Immediately weakness, yeah, which is why I think today the weakness is reflected on the rupee as well. Although the dollar has fallen, the rupee has also weakened. Thank you very much, gentlemen. This is just a teaser. We will have a longer conversation because I think we will have a lot of reasons for this conversation. Thank you very much for joining us. Have to wrap up on Bazaar. Chartbusters coming up.
जनता का पैसा जनता के लिए। आदरणीय सभापति जी, आजकल मीडिया में ज्यादा ही चर्चा हो रही है, सोशल मीडिया में और अधिक हो रही है। कुछ नेताओं का फोकस घरों में जकूजी पर, स्टाइलिश शावर्स पर, लेकिन हमारा फोकस तो हर घर जल पहुंचाने पर है। आदरणीय सभापति जी, हमने ये जो अलग अलग कदम उठाए, उससे लाखों करोड़ रुपए की बचत हुई, लेकिन उन पैसों का उपयोग हमने शीश महल बनाने के लिए नहीं किया। इसका उपयोग हमने देश बनाने के लिए किया है।
Asian Paints slips almost 4% on the back of soft quarter that could be attributed to muted demand conditions, weak festive season. Management in their call said that the demand conditions continue to remain challenging in the fourth quarter. Brokerages cut estimates.
Max Financial climbs more than 3%. The company's third quarter results shows that the new business premium climbs 11% on a year-on-year basis, which is in line with estimate. The company has also announced that it will begin its subsidiary Axis Max Life's listing process once there is clarity.
Angel One rallies 5% on the back of its monthly business updates. The company's client base increases 2.1% from a month ago. Number of orders as well rise 5.5% compared to last month.
Torrent Park climbs more than 3% despite a soft set of numbers in the third quarter. Brokerage firm Motilal Oswal issues an overweight rating on the stock with a target price of around 2,026 rupees. They cite that the subdued core was offset by merchant gains. Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel and with me is Manglam. Manglam, good run in the last few trading sessions. The Nifty is more or less flattish as we speak. but you can feel that the mood is much better because of the broader markets. The breadth of the market is fairly good.
Yes, Nigel, no matter how high we go from the Nifty here, the good part is that the street believes that the lows are protected. Yes. And as that happens, the broader markets always outperform. And currently, the mid-cap index at the high point of trade. Even the Nifty is actually, notched gains in just the last 15 odd minutes or so from the lows. The Nifty now up almost 33 odd points. Maybe the street wants to, give it a bit of a pause after this big rally ahead of the big events which are likely. You have, the RBI policy that is coming by and a lot of other things that the street will be keeping an eye out on as well. But as that happens, let's get you an idea for profit coming in from our colleagues at Money Control Pro. We have Varsha Bang, who's joining in with a stock that she's tracking.
Today we are going to discuss about Bikaji International Foods. Is a well-known Indian brand specialized in wide range of traditional snacks and ready-to-eat foods, known for products like namkeen, bhujia, matris and sweets such as son papdi. The company offers over 300 items which serve domestic and international markets. With a robust distribution network, Bikaji plans to expand to 3.5 lakh outlets by FY26, covering urban and rural areas. The brand has strong presence in core markets like Rajasthan, Assam and Bihar, while focusing on expanding in markets like Haryana, UP, Delhi and Punjab, which currently contributes 15% to its sales. Bikaji plans to double its market share in UP and accelerate growth in this focus market 1.5 times faster than in core regions. Bikaji is also diversified into premium sweets and quick service restaurant. The company intends to invest rupees 130 crore to acquire a 53% stake in the Hazelnut Factory, a successful cafe and artisanal sweet brand. Additionally, the company is expanding its frozen food segment with a new export-focused facility in Bikaner. The company aims to boost export revenue by 20 to 25% annually. The stock is currently trading at 48 times its FY26 earning.
Right, with that, we'll step into a short break. On the other side, we'll get our conversation with Gaurav Pandey, who's the MD and CEO of Godrej Properties, to discuss their cotton gourmet. Stay tuned.
We're telling Ukraine they have very valuable rare earth. We want what we put up to go in terms of a guarantee. We want a guarantee. We're handing them money hand over fist. We're giving them equipment. European is not keeping up with us. They should equalize. And look, we have an ocean in between. They don't. It's more important for them than it is for us. But they're way below us in terms of money. And they should be paying at least equal. They should really be paying much more than us, but let's say equal to us, and they're billions and billions of dollars below. So we're looking to do a deal with Ukraine where they're going to secure what we're giving them with their rare earth and other things.
investing.
Welcome back. Kirloskar Ferris is the next stock on our radar. The past quarter's numbers were weak. However, going ahead, they have some cost-saving plans which could help them in terms of their margins. To understand more, we have Mr. Gumaste, who's joining us on the phone line. Hi, Mr. Gumaste, and thanks a lot for joining in. Mr. Gumaste, give us a couple of details. Your casting business, earlier you were talking about around 1.5 lakh tons for the year. That doesn't seem achievable because for 9 months you've done only around 1 lakh tons. Could you tell us what should the revised guidance be on the casting business, and also if you could give us a volume number for pig iron as well as steel, an absolute number. Please go ahead, sir.
Yeah, thank you very much for inviting me. I think, as you know, the casting business, we have gone through sluggish demand from the tractor industry. We did one quarter very well. We went almost up to 38,000 metric ton in a quarter, but 2 quarters have gone soft. I am seeing some green spouts, and I expect this quarter to be better for tractor. There is better schedules. We hope to look forward to once again go back beyond 36,000, 12,000 per month. And if you see the market right now, I think commercial vehicles as well as tractors are doing well. Earth moving equipments are doing well. I hope that this should support us in achieving these numbers. And iron and steel industry, as you know, it's a terrible position. The margins are under pressure. Whereas volume, we have been operating all the 3 blast furnaces and selling full quantity. Marginally, it has been down compared to the third quarter of last year. But if you look at overall, last 9 months, we are up 26% on volume. And but we are only 9% up on the casting and tube. We are down by 3%. But overall, we have a small growth of about 4 to 5%. But I think we try to do better in the remaining 1 quarter to catch up with the numbers.
Okay, all right. So for your casting business, you should clock around 1.35 to 1.4 lakh tons for this year. With pig iron business should do around 5 lakh tons for the year. Should that be the gettable numbers?
Yeah, I think so. Yeah, those are the numbers we are looking at.
Right, which is a little bit lower than what you projected at the start of the year. But let's focus on the margin parameters. The hope is that realizations have bottomed out and they should start looking up. And also you have mentioned various cost-saving measures with regard to coke, with regard to renewable energy as well, which should hold you all in good stead. Your consolidated margins have come down to 11%. What's the scope for improvement, and by when do you get to mid-teens margins in the coming quarters?
If you look at the margins are reasonably maintained in case of castings as well as in case of tubes, though tubes have tapered down a little bit because the mix has changed. But the real impact is on the pig iron business. As you know, during the quarter, we have commissioned the oxygen enrichment, and we have also increased the pulverized coal injection from the level of 80 kg for the steel grade to 120 kg, and for the foundry grade from 50 kg to going up to 100 kg, 80 kg. So this increased pulverized coal injection reduces the coke consumption, and it brings down also the cost of manufacturing. We are doing whatever possible, but the market is what is not in our hands. And I hope that the pig iron market has bottomed out, and there should be some green spouts, and there should be some improvement. Basically, coming out of the steel, people not doing well, and they are
right. Mr. Gumaste, we understand that the steel industry. Mr. Gumaste, we understand that the steel industry is not doing well. You've made that point, and others also have made that point as well. But in that, the oxygen enrichment and pulverized coal injection, etc., these cost measures that you're taking, and also you are increasingly, sourcing your iron ore captively as well. If you could give us a sense of how much will all of this save on your costs, and irrespective of anything, what proportion of margin improvement should we see on account of these measures?
The first thing, let me quickly take the iron ore one. I think Bharat Mines is up and running, but we got only 3 months. I expect maybe we will consume 50,000 ton in this year. But going forward next year, we should be able to consume very close to at least 2 lakh tons of our own mined material. I expect a benefit of close to 40 crores coming because of this iron ore mining. I think another very important aspect which you touched, I would like to cover that, is we have commissioned almost completely 70 megawatts of solar. 69 is what we are running right now. I think we will close that 1 megawatt shortly. And this is going to give us a substantial benefit. The benefit expected is 70 crores per annum. I think these are the two important measures other than the pulverized coal injection, which should give us the advantage and bringing the cost down.
So the cost savings will be nearly around 100 crores on the back of both these two parameters. Is that correct?
Absolutely right.
Okay, very quickly, sir, what is the net debt number in your books as of now?
Our debt numbers remain more or less same. It's in the range of long-term debt around 700 crores with short-term debt of about 300 to 400. Total, I think we are around 1,000 plus minus 100 crores in that range. No major change or increase over the last 1 year.
And it is peaked out at 1,000 crores, right?
Around 1,000 crores, yes.
All right. And Q4 margins will see an improvement versus Q3?
I think so. It has to be. Markets have improved. I will definitely try to get the better realization.
Appreciate you joining in, Mr. Gumaste. A weak quarter, but you're guiding for better times ahead. In FY26, you'll see a benefit of around 100 crores on cost savings. We'll hold you to that particular point. But time to move on then. Let's focus on Godrej Properties. The company's revenue surges on a year-on-year basis. The company has achieved 71% of its annual booking value in FY26. Vinay Motiwala spoke to Gaurav Pandey, who is the MD and CEO of the company, began by asking him whether he would be able to beat the FY25 guidance that it laid out earlier. Let's hear out what he had to say.
Today it's great to hear this question. So yes, reasonably confident that we should be able to meet our guidance or beat that guidance. I think it's a little ahead of time from a FY26 point of view because it all depends on the launch calendar for how much can we squeeze in Q4, how is the launch calendar looking like for next year. So I would be in a better position, say, after Q4 to have a specific answer when we actually deliberate on the annual guidance. But yes, quite excited overall.
Okay. And okay, for FY26, but FY25, you'll meet the guidance, right? That's what you're saying. And will you be able to do better than the guidance?
There is a likelihood, of course, fingers crossed. I mean, if we get all our launches, there is a probability of doing that. But yeah, one step at a time, this is a business that can make you humble the very next day. So yeah, I mean, reasonably confident to meet it. And yeah, there's a probability we can even beat it.
Okay. And collection, 15,000 crores, that's what you've spoken about as well in terms of collection guidance. 10,000 crores already done. 5,000 crores, which is still to be made in this Q4. Is that doable? Does it seem like, given the launches, given that everything that you've come up with right now, it's doable, right?
Very much doable. Actually, if you study our numbers every year, Q4 is a lumpy quarter, unlike other sectors where it's more like every quarter is very predictable. In real estate, it's a very lumpy business. So when you have occupancy certificates, deliveries, those are times when your operating cash flow collections tend to be slightly higher. And whenever you have approvals coming in, your booking value or sales number tend to be a little higher. So there is some amount of convergence of these variables when they happen. So Q4 has started very well on a good note from a collections point of view, and I think hopefully we should be able to meet the guidance.
Okay, Q4 surely has started on a good note, especially on the collection terms. You did highlight that launch pipeline. So now I'm going to ask on that. Q4 launch pipeline, FY26 launch pipeline. What are we watching out for from Godrej Properties there? And is it largely going to be mainly focused on Mumbai region or the newer cities that you have come into? Could we expect something on that front as well?
I think we're the only platform which has a very strong presence in different geographies of India for the last 15, 20 years. So, we've always been a very diversified portfolio. In fact, calendar year 2024, we did about 28,800 plus crores, which was like a 69% growth over the previous calendar year. And about close to 900 crores came from North India. and 92-9300 crores came from Mumbai, and the rest came from South and West. So yes, fairly diversified portfolio. Now, in terms of launch calendar for Q4 and beyond, I think a very robust calendar. If I had to go maybe geography specific, in North we have launches in Sector 44 in Noida. This is the heart of Noida, which is known for extremely strong end user demand. And we have a project by the name of Godrej Reverie, and it's just hitting the market as we speak, and we're getting some very strong initial response. Then in Gurgaon, we have something coming up in the heart of Golf Course Road. So very excited about that launch. In Mumbai, practically every micro market will have a strong presence of launches. Then Pune, we are going to have something in Hinjewadi as a micro market launch. We'll have something Indore as a plotted development, high probability launch. We're also looking at a plotted development opportunity launch in Calcutta. Then we're entering into Hyderabad as a new entry strategy of a new project and a new city. And we're very excited about that opportunity, which is just hitting the market as we speak. Then there is something, we have a large land parcel in North Bangalore of 66 acres. A portion of this will also get launched this quarter. So very robust, Q4 calendar. And if we are able to meet most of these beta guidance, if all of it happens, we will, of course, we might even cross the guidance. So it depends on how many of these launches we are able to bring in Q4.
Okay, absolutely. I just want to pick point on that Hyderabad one as well, right? That's the newer city that you've just recently entered into. What is the gross development value here? What is the revenue potential that we could be watching out for from the company here?
See, Hyderabad has been a long-term strategic choice that we've made. Currently, we've bought 2 large, interesting land parcels. The first one is in this micro market called Kokapet. It's a very prime micro market of Hyderabad. Booking value potential about 1,200-1,300 crores. And then there is a bigger land parcel we have in Rajendra Nagar, a different micro market of Hyderabad. But that is going to be a much larger booking value potential. So the first one that we're hitting the market in this January-February period is the Kokapet launch. And yes, there is an aspirational opportunity to try and see if we can pull the second one also within the quarter or Q1 at worst. But yeah, both of these are extremely exciting products with very passionate team that we built for Hyderabad market. And from the initial response for Hyderabad, which project is name is Godrej Madison Avenue, it's actually making a reasonable amount of rave in the city. Yeah.
And just the last word in terms of the debt, we're seeing a significant reduction versus last quarter. Anything specific there, and what is the debt outlook that we're watching out for? Furthermore, we could expect it to reduce quicker?
I think our focus has been to build a very robust balance sheet. And it's a combination of, if I were to ask, give a Q3 specific combination of 2 major strategic interventions. One is a QIP. I think we were very aptly timed to ensure that we're able to raise 6,000 crores worth of capital, significantly strengthening our balance sheet, growing our equity base by 50%, and bringing our net debt to equity from 0.75 sort of levels to 0.23 levels. So that was one. And the second strategic intervention has been more of a long term for the last, say, 18 months or so, that we've been very focused on collections and therefore net operating cash flow. So if you look at a 9-month performance on a collection, was about 10,000 crores. This is a very big milestone for us, and our net operating cash flow grew to like 3,400 crores, which is like a close to 99% of Y-on-Y growth. So again, that strengthens your balance sheet, and therefore your debt reduces, and it looks all healthy. So yeah, I think this is be a very important area of focus for us. We'll always be very counter to the cycle. So right now, if you ask me, our heavy focus is, I think sales is hygiene for us. I think we have very strong teams which deliver that very well. Business development always has been a strength. Now, most of our focus is great execution excellence. Because if you get the operating part of the business perfectly right, whether it's a collections, gearing ratio, or profitability, are mostly an outcome of that game. So yes, it's just a sort of a strategic roadmap we prepared for ourselves, just sticking to the script.
That was the management of Godrej Properties. Let's cut across to OpenAI CEO Sam Altman, who arrived in India earlier today and is currently in an engaging conversation around the industry itself. That's the fireside chat. Let's listen.
Precipice of being incredible at software engineering, and that'll be great for a lot of things. I think software engineering by the end of 2025 looks very different than software engineering at the beginning of 2025 does, but it will have huge impacts, good and bad, for cybersecurity, and we've got to get ahead on the good.
For sure. No, sir, please.
That's what that guy is saying, time's up. I just wanted to make the best use of every second that I have with you, Sam. And thanks a lot for coming to India. We are super excited that you have come here. And really, this entire team, entire startup community is so excited, so supercharged. But guys, I cannot see that energy. Show it, man. Come on. That's the way. That's our India today, right?
Thank you very much for having me today, and really excited to do a lot more together.
Yeah, absolutely. Looking forward, sir. Thank you so much for all the ideas. And I think this is the right room to start. And we have a lot to cover, so we are going to get on with it. And with OpenAI right there to support the developers, the ecosystem, the government, we'd love to do more together. And hopefully next year when Sam is here, we'll have already many of these partnerships in place. So looking forward. Thank you, Sam.
Thank you.
Thank you.
investing.
Welcome back. A couple of stocks bouncing back after a big gash that they saw in the earlier part of the week. So a couple of these capital goods names, Siemens, for instance, was among the big losers after the budget itself because Money Street believed would shift out of capital goods. But now that stocks moved to the high point of trade, maybe some recovery from the lows is what we're seeing. The other one is Kalyan Jewellers. Remember, the stock had been beaten out of shape, but over the last few trading sessions, it's actually made a smart comeback. So from the lows itself, it's seen a big recovery, lows of around 430, 440 odd. The stocks made a smart recovery of almost 140, 150 odd rupees as well. So just keep an eye out on that stock, though we are seeing continued weakness in a couple of these names. So Godrej Properties, has fallen about 5% from the highs. We just heard the management earlier. We have Whirlpool as well. which has moved lower. So just keep an eye out on Whirlpool. And then after the big move that we saw in Avenue Supermart's post-budget, we're seeing some profit taking out there. That stocks moved to the low point as well. No real worries for the market. Holding on for the Nifty, doing a lot better for the broader markets. Keep an eye out. We do have Trading Hour coming up next after the short break.
I think we are now getting into a phase where growth will surprise to the upside. The budget reaffirms that. I think this is a growth-oriented budget. In fact, the phrase I've used for this budget is that it's a magic budget, and I'll come to that in a moment. And my expectation is that the monetary policy will back this budget, and the monetary policy will also become growth-oriented. So as far as India is concerned and what we control, I think things are looking up.
I think it is one of the best budgets that we've seen in many, many years, and I tweeted it's a dream budget. So first thing is that you normally want money with the public rather than with government. It should just be the general thumb rule of looking at anything, that money with public is better than money with the government. You have not said that, oh, you cut a tax rate across the board, therefore the rich will get much more. It has come to the correct audience in that sense. So it has to be travel, it has to be savings, it has to be these car consumer durable types. As I said, we are not buying those, but they could.
Presently, taxpayers can claim the annual value of self-occupied properties as nil only on the fulfillment of certain conditions. Considering the difficulties faced by taxpayers, it is proposed to allow the benefit of 2 such self-occupied properties without any condition. To streamline the process of transfer pricing and to provide an alternative to yearly examination, I propose to introduce a scheme for determining arm's length price of international transaction for a block period of 3 years. This will be in line with global best practices. With a view to reduce litigation and provide certainty in international taxation, the scope of safe harbor rules is being expanded. A number of senior and very senior citizens have very old national savings schemes accounts. As interest is no longer payable on such accounts, I propose to exempt withdrawals made from NSS by individuals on or after 29th August 2024. I am also proposing to allow similar treatment to NPS Vatsalya accounts as is available to normal NPS accounts subject to overall limits.
Good morning. Welcome to Trading Hour. It's a Wednesday morning, absolutely flat on the benchmark indices, but mid-caps are outperforming today. The mid-cap index is a gain of more than about 1%, 1.2%. The small-cap index is up nearly 0.5%. But on the way down, consumption stocks are sulking. So Asian Paints Titan in the red posts the numbers. Asian Paints is the top loser. But other names like Nestle, Tata Consumer, Britannia, if you look at the top 5 names, they all belong to the consumer basket. In some cases, the weak consumer demand is hurting. In other times, it's aggressive competition across the board. There is red when it comes to the consumer names. On the way up, oil marketing companies are looking smart. There is a Goldman Sachs upgrade on the oil marketing companies. They believe that the under-recovery, LPG under-recovery concerns are priced in. And even going forward, the setup for oil marketing companies is a lot more positive because the upside on crude prices could be capped. The top gainers are BPCL, ONGC. And then you've got strength in the banking names. So banks today are outperforming. So the Nifty banking index is up 0.5%, while the frontline indices are absolutely flat.
Good morning, Rima. Like you mentioned, the banks are the ones that are outperforming today. Hopeful that there could be a rate cut, in the next coming days, and that is something that's keeping the entire banking pack quite excited in today's trading session. Like you mentioned, it's the broader end of the market that are doing very well. Let's look at a couple of stocks today that are buzzing. First has to be Trent. Yesterday, the stock saw almost a 6% downtick on fears of heightened competition, but today there's been a very smart recovery. In fact, Elara put out a note yesterday saying that there may not be too much of an overlap when it comes to the target market as well as the price point. So Trent today is up over 2%. Like you mentioned, FMCG stocks have cooled off. Have a look at two stocks from the power space. Torrent Power as well as Tata Power, both of them came out with a set of numbers. Tata Power, very lot of one-offs in this particular quarter, but the street has liked the results. Torrent Power, steady growth on a year-on-year basis, but quite a few negatives as well. Torrent Power saw, but remember, both of these stocks, especially in the run-up to the budget, saw quite a bit of selling pressure, and both of them have recovered quite smartly. You spoke about IGL, you spoke about IGL today, in fact, has moved up. So the entire oil and gas pack, ONGC brokerages are bullish. IGL, CLSA says that there could be some price hikes that could be undertaken post the Delhi elections. So that could help maintain the margins that IGL enjoys. And this is after the fears, after the domestic gas allocation was reduced quite significantly. So the oil and gas pack, especially IGL today, is up over 6% in the session, Rima.
Okay, let's get to Asian Paints because that's the top Nifty loser today. Stocks down more than 4%. Post the Q3 numbers. Mangalam is here with the conference call, takeaways and the brokerage views. Mangalam.
Well, the management was quite subdued when it came to the near-term demand itself. Yes, the third quarter numbers weren't particularly good. The volumes grew by just about 1.5%. Management said that the demand conditions continue to remain challenging in the fourth quarter as well. There is continued stress in urban demand. They expect volumes to recover quarter on quarter, but value growth will still take about 2 quarters to reach low single digit itself. While they're positive on the margin guidance of 18 to 20% that they've given, in the medium term, they expect single-digit volume growth and value growth led only by product mix. On the back of which, brokerages have actually cut their estimates. So Jefferies, for instance, has cut EPS estimates by 4 to 8%, highlighting tough demand conditions. They have an underperformed rating on the stock. Goldman Sachs as well has said that the near-term demand conditions are subdued. Competitive intensity is intense as well. So as a result of which, their estimates also stand lowered by 4 to 5%. And we have CLSA and MS as well as Macquarie, all of them cutting their estimates on the stock.
Right. Thanks so much, Mangalam. Let's quickly cut across to Shireen Ban at the CII National Council meet in Kolkata.
Live, so just give me a moment to get a cue from our production control room. This is meant to be interactive, so I'm going to be walking around, putting all of you on the spot on different aspects of your businesses as well as the state of the economy. So feel free to jump in, and I will, of course, kickstart the conversation as soon as we go live. So I'm just waiting to get a cue from our production control room, and then we will get started. Good morning, ladies and gentlemen. Many thanks for joining us here on the CNBC-TV18 CII Budget Town Hall. It's great to be here at the CII National Council meeting. We've got a room full of industry leaders joining us. Last count, I think it's about 65 CEOs representing different sectors, different aspects of the economy here with us to give us their sense of where Budget 2025 leaves the economy. Broadly, if I can put it for all of our viewers who are tuning in online, on TV, and here, of course, at the CII National Council meeting, the budget has tried to address the 3 C's, and it has prioritized consumption over capex this time around, not abandoned capex. It has continued on the path of capex, and it has remained steadfast on consolidation. So those are the 3 C's: consumption, consolidation, and capex, and that's been the focus of Budget 2025. Outside of that, there have been many announcements that have come in. Deregulation has been the overarching theme of the economic survey, which was taken forward in the budget as well. But the promise of deregulation will start to take shape only over the course of the year as a committee is set up, and then the committee will, of course, give its recommendations. But the big one, and that I think is something that industry will look forward to, maybe not so much the tax experts, is the direct tax code overhaul. And what we've heard here on CNBC TV18 from the secretaries themselves, they are promising to halve the number of chapters, halve the number of words, and bring in significant amount of simplification as far as the direct tax code is concerned. So that is going to be something to watch out for as well. well. But the mood, if I could call it, as far as CII was concerned, going into the budget was a fairly positive, strong mood of confidence. What does the budget deliver on now is the big question. So let me start by doing a quick dipstick here of the CII National Council. At the end of what the budget has been able to deliver in terms of capex, consumption and consolidation, the first question to each one of you, and please raise your hands, do you believe that you are going to invest more in FY26 to add capacity to deliver on the promise of consumption? Those of you who are going to feel the need to invest more to add capacity because you expect a consumption boost, could you raise your hands, please? Well, that's a sizable number here that have raised their hands in order to add capacity. But let me throw it open to Sanjeev Puri, the president of CII. Mr. Puri, we spoke on the day of the budget itself, and now the fine print has been digested. The question to you, how soon do you expect this consumption bump up to take off?
Well, thank you, Shireen, for being here with us. And let me start by again saying that CII has welcomed the budget. It's a budget that has been, of course, fiscally prudent, at the same time growth-oriented. And what is good is that it's focused on the domestic drivers, given that the world is in very difficult situations right now. Leaving aside the tariff issues, but there are many more other concerns globally. So it's focused on the domestic drivers. It's focused on some of the areas that CII have also been advocating on labor-intensive sectors, consumption boost, also continued thrust on capex and making the economy future-ready with investments in certain areas. And one very strong point in the budget was the focus on reforms. And which is very critical to unlock the potential of the economy in the medium term. So the journey of economic, it's a journey of economic transformation. It's not that, things change overnight.
Yeah.
But I think all the factors are favorable. So progressively, we do feel that improvement will happen. And the consumption boost is welcome. I think with the weather being better and agriculture crops being better, and hopefully we are also expecting some, the liquidity part the RBI has been acting on.
Yeah.
We also expect the interest rates to moderate soon. So all of this
we won't
together
have to wait very long to find out. The
Yes.
MPC meets on the 7th, so that's right around the corner.
So with all this, I think it's...
So
it's going to be
25 basis
progress.
point cut?
25, 50 hopefully.
25, 50, hopefully. Let's do another dipstick. How many here at the CII National Council believe that the MPC will deliver on a 25 basis point rate cut? Those of you who expect a 25 basis point rate cut, anyone in the 50 camp? It's a CII president all by himself, but in this industry voting for a 25 basis point cut. Let's start by talking about the consumption story, and let me go straight across to Sunil D'Souza because he has his finger on the pulse. Sunil, what should we expect now? How much more Starbucks coffee are people going to partake in at the end of Budget 2025?
As I think Sanjeev said rightly, this is a very balanced budget. I think, and as you mentioned, I think capex being maintained and consumption getting driven. I do expect rural, there is a focus on growth with the Jal Yojana and the Kisan credit. So rural will continue and hopefully continue driving double-digit growth. Urban, I see the focus on MSMEs and therefore the focus on employment, coupled with, of course, the tax break. And most importantly, food inflation starting to come down. So I think most companies, you've started to see volume growth starting to come back. I do expect an acceleration in 3 to 6 months.
When you talk about an acceleration, can you quantify that acceleration for us? And you said that January perhaps is an indication of things having bottomed out and a start of a pickup from here on. Can you give me some color on what that could potentially mean?
So if you look at the results of most companies, right, it's been very low single-digit top-line growths. I would expect mid to high single-digit, if not double-digit numbers coming back very quickly.
Double-digit numbers coming back very quickly. Expansion plans for you across the businesses to cater to the consumption boost that has been talked about?
Oh, absolutely. For us, we've always guided for a double-digit volume growth, and therefore we're very, very clear we will need capacity to grow. We're just in the middle of putting our budget numbers in place, and there is a huge focus on making sure both manufacturing and logistics comes up to the challenge.
So on both engines, you are expected to fire. Let me bring the CapEx man into the question as well. Kaushik Chatterjee, many thanks for joining us here. On the CapEx front, what we had seen was that there was a slowdown as far as spend was concerned on account of elections and so on and so forth. The hope is that we will meet the target for this financial year. And then, of course, between the state as well as the center, the government says that there's a 17% increase as far as CapEx is concerned. I know Vinayak won't agree with that, but how do you see the CapEx story playing out from here?
I think India is on a multi-decadal path from a growth perspective. The enablers of CapEx, last year when we had about 11 lakh crores on infra spending, and obviously public spending is a big part of the push. So I think there is going to be, at least from a heavy CapEx perspective, there are opportunities to grow, but the environment, especially because in a company or an industry like steel, it's a globally exposed industry. We just need to ensure that the enablers from a policy point of view do not expose us to...
You mean the safeguard duties?
Yeah, the unfair, because that's unfairly priced imports. And I think Indian industry, from a steel perspective, is very competitive, but it has to also earn its cost of capital. And therefore, we are ready as an industry to expand very significantly. We just need those enablers and efficiency in the system to be in place. I think infrastructure is another important aspect, and I think that is a big enabler, and whether it's rail, road, etc., which we need to ensure that that grows in equal tandem for CapEx to come in. And heavy industries require multi-year CapEx. It's not just 1 year. So 1 year's budget don't determine the flow of CapEx. Once you start, you have to take 2.5, 3 years on a brownfield basis. And therefore, we need those kind of policy certainties to ensure that the CapEx growth is in place.
In terms of domestic demand, question number one, what's the outlook now as we look out at 2025 and FY26? And more importantly, with the tariff wars, the escalation, the de-escalation, but now, of course, the tariffs between US and China, how do you see all of that impacting the global steel prices and the global steel demand?
So first of all, I think from a domestic consumption point of view, sectorally, we've seen some weaknesses, but I think it will come back, whether it is spending on infrastructure or automotive, etc. The prices is what gets affected by these unfairly priced imports. I think with the tariffs coming in at this point of time on China, the key issue will be what will be the impact on the rest of the world, because it's not that the Chinese imports or exports made big difference to the steel prices in the US. But I think it will be important to see as to where that goes in. More importantly, the domestic policy and the stimuluses in China is going to determine where the exports come in. China has always exported about 60 million to 70 million tons. But when it crosses over to 110, 112 million tons, which is almost 80% of consumption of EU and similarly for India, that actually affects. So I think we are going to look at policy changes across the globe and see as to how it works. But in the meanwhile, as there are almost about 30 countries doing investigation on China, we need to see as to how the Indian government plays up. And if that safeguard duty does come in, it will certainly have a policy certainty in terms of making CapEx investment in steel industry more attractive, which we want to do. And the underlying domestic consumption is way below the global average. So there is no question on the consumption story, and that will certainly continue to happen.
That will pick up, and of course, we're waiting for a decision as far as the safeguard duty is concerned. Let me bring the other steel man into the conversation very quickly. Jayant Acharya, also here with us. Mr. Acharya, many thanks. Would you agree with what you heard there from Mr. Kaushik Chatterjee? And the expectation on the safeguard duty, I'll get the mic to you. We understand that the investigation is on. Has there been any feedback from the government on that front?
Yeah, so I think, the Indian demand, as Kaushik rightly said, is really good. On the medium term to the decadal visibility what we have, I think India is going to see a very good story. So the steel industry has a large opportunity. I think incrementally, Shireen, what we see is that every year, about 15 million tons of demand will be generated additionally. This year, we're going to generate about 14 million tons of demand. To put in that kind of capacity, about 7,000, let's say $1 billion to 1 million tons, the industry requires to earn to be able to plow that back. What we are investing in heavily, what we are worried about is that the trade flows which are coming into the country, we need to put up policies to see that we don't get hurt. Otherwise, I think from a consumption story, the budget has been really good. while CapEx, we would have expected a little better, but I think I understand her constraints, and they have continued CapEx to be at a level of 11 lakh crores, 10% or 17% up, whatever you said. Should be good. I think only the restriction which we see is trade flows, especially from China and FTA countries.
And FTA countries, and as I pointed out, that is something we'll have to wait to see. Let me come to Mr. Umesh Chaudhary as well, since we're talking about CapEx and, you know, your outlook on the back of what the budget has been able to deliver on that and what that means as far as your plans are concerned. How confident do you feel about being able to rev up the engines of growth from here?
Hi, Shireen. So I think the railways has been continuing to make the CapEx expenditure. This year, we were, of course, expecting a higher CapEx. They'll always mang more. But 2,60,000 crore, I think, is a sizable CapEx. So I really do not see the slowdown happening in terms of our growth plans, particularly in terms of both the freight loading. The government is very, very clear that they are still on the path to achieve 3 billion tons by 2030. For that, they will actually have to almost double the size of the fleet that they have. And in order to do that, the CapEx cannot slow down. Also on the passenger train front, we've seen 300 new Vande Bharat trains being announced. So I think it's perfectly online as we expected.
The railway capex, of course, as you said, dil mange more across sectors. That was, it's a little bit like Oliver Twist. Everybody wants a little bit more, but the government has to balance its books as well, and they've delivered pretty much long expected lines as far as railway capex goes. But let me bring Bharat Puri into the conversation as well. Mr. Puri, many thanks for joining us, both on domestic demand as well as what we can see in terms of growth accelerators from here on.
I would say, Shireen, this budget is very welcome. In our opinion, the economy needed capex, it needed consumption, and it needs jobs. Capex is continuing. Hopefully, consumption will get a boost. It will take 3 to 6 months, but it will definitely get a boost. And jobs will obviously follow both consumption and capex, and hopefully skilling and ease of doing business. So overall, from a demand perspective, I would say we're now positively optimistic rather than cautiously optimistic, but it may take a little bit more time.
What is the difference between positively and cautiously optimistic in numbers? If you can quantify the difference so that we can get a sense of, how you move from caution to positivity and what that will translate into.
Very simply, cautiously optimistic is growing at GDP rates, and positively is 1.5 to 2 times GDP.
So you moved now to positively optimistic, so ahead of the GDP growth rates. Well, that's Bharat Puri giving us a sizable headline there as well, since we're talking about numbers. But let me come to Sandeep Patil. And Sandeep, let's talk about what's happened on the services side as well. And there's been plenty that the budget has put forward, including, of course, formulating a framework for GCCs. GCCs have been the big story out of India. And now the government saying the centre and states will work together to formulate a GCC framework. I don't know how happy the Indian IT services companies are likely to be on account of that, but what does this mean for GCCs in India?
I think it does a few things. And just going back to the point that Bharat made, I think this enables us to start moving the development that we've been seeing in metros out to tier 2 and 3 cities. Now, can't talk about it for the industry as such, but I'll talk about it from our perspective. We have actually been very bullish about moving and expanding to tier 2 and 3 cities. We've been doing it for the last few years. I think what this does is it enables, through this development of GCCs and others moving out to tier 2 and 3 cities, I think it opens up the ability for us to build out ecosystems for skilling, for driving infrastructure into these tier 2 and 3 cities, and actually driving the employment angle, which I think will be very, very welcome. So I think it's a great move. And I think it'll help to start to balance the metros and move some of these skill sets out into where it needs to be.
They are formulating the framework in light of the experiences that we've already had. What are the 2 or 3 things that you believe we need to be mindful of? What should the government focus on as this framework is put together?
I've always been a big proponent of what I refer to as precision regulation, which means let us encourage skilling, development, creation of ecosystems, the growth of MSMEs in the right space. Because if all of those components grow, I think it will call for a much greater development of these two and three cities where we'll start to move the metros out into the hinterland.
I've heard many terms being used this time around. Precision regulation, removing the regulatory cholesterol is another one that's come in through the course of the conversations that we've had on the budget. Rajiv Mamani, if all of the regulatory cholesterol is going to go, what are you going to be doing?
Yeah, no, we are all animals of growth. So as long as there's growth, I think it's good for
Which
everyone.
animal are you identifying with today?
Anyone that can demonstrate greater growth and greater optimism. But no, overall, Shireen, I think couple of things that you raised. One was on the new IT Act that's likely to come. And I think that in a series of these ease of doing business and addressing some of the issues that the budget has raised, I would say the new IT Act would be very important. And I think the government has been very clear that they want to focus on reducing litigation, on reducing the number of steps that has to be taken, on taking out obsolete provisions and just focusing on simplification. So there is no additional tax that's going to come or reduction in tax that will happen. It's very focused on just simplifying everything, which will be very positive. On the consumption thing, I just wanted to, I know you asked that question, but 70% of the amount that people will benefit will be in the category of 12 lakhs to 50 lakhs. So I think definitely in the more sort of premium products in consumer durables, I think the upside of this should be visible very, very quickly. So the choice that the government has taken, one is to achieve fiscal consolidation, but also making the choice between capex and consumption. I think it's very good because for the last 3 years, personal tax is growing at more than 22%. So I think individual taxpayers have taken a lot of brunt, and I think it's good that the government has found a way to reward them. And in spite of that, the growth in personal tax is still being taken as almost 14%.
14%, yeah.
So I think there is still optimism that in spite of this reduction, because of better compliance, because of growth in the economy, this will grow. And
an interesting conversation taking place at the CII National Meet. For now, we need to slip into a very short break, though. On the other side, we'll continue to track the markets for you. Stay tuned.
Detail the indirect tax reforms and changes in direct taxes in Part B. Financial sector reforms. The FDI limit for the insurance sector will be raised from 74 to 100%. This enhanced limit will be available for those companies which invest the entire premium in India. The current guardrails and conditionalities associated with foreign investment will be reviewed and simplified. The services of India Post Payment Bank will be deepened and expanded in rural areas. NABFID will set up a partial credit enhancement facility for corporate bonds for infrastructure. Public sector banks will develop Grameen Credit Score Framework to serve the credit needs of SHG members and people in rural areas. A forum for regulatory coordination and development of pension products will be set up. To implement the earlier announcement on simplifying the KYC processes, the revamped Central KYC Registry will be rolled out in 2025. We will also implement a streamlined system for periodic updating.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC Budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis.
Welcome back to Trading Hour. Well, even as we speak, the small cap index has now scaled the 2% mark. It's now up over 2%. And what's driving the markets higher? Well, the entire oil and gas pack. Have a look at Oil India today. Oil India is up over 6%. Even names like IGL, MGL, HPCL, IOCL, BPCL, all of these stocks doing very well. Well, let's now cut across to Prime Minister Narendra Modi as he heads to the Kumbh Mela. Okay, as we can see on the screen, Prime Minister Modi has headed to the Mahakumbh Mela. Earlier today, we believed that he had taken a dip in this auspicious waters. And as we can see, quite a lot of large crowds gathered over there. And on the screen, you can see him taking this auspicious dip. Very, appealing visuals that you can see on the screen. And this is something that, very auspicious. And Indians, especially, when it comes to Prayagraj and it comes to this Kumbh Mela, is something that we take it's a very spiritual occasion and something that we take quite seriously.
And it's turned out to be such a large spiritual and cultural gathering. So many, famous people have gone there. Prime Minister Modi, of course, taking the holy dip earlier today in the morning, and then he's likely to participate in the rituals as well. And this Mahakumbh is likely to continue. The event is likely to continue till the 26th of February. That's Mahashiv Ratri. But that's, the latest there. But let's get to the markets then. Mitesh is now with us for a quick technical check on the markets. Mitesh, morning. Quiet on the frontline indices, but the action continues in the mid-cap space individual stocks. What are your thoughts on the morning so far and the ideas that you have?
I think, Anima, what you're suggesting is a very important point. The Nifty Midcap Index, that's something, which had been underperforming but seeing a lot of selling pressure, has had two gap-up openings. One was yesterday, which sustained close at the highs of the day. Today is also gap-up opening, which is doing well. My sense is that the Nifty Midcap also is now showing signs what the Bank Nifty was showing about 7 days back of a, a temporary low at least being confirmed. The Nifty Midcap Index, which is now at about 54,400, I'm looking at a first target of 55, 300, 400 zones, and then maybe even higher. So, yes, there will be action in the broader market. On the stock side, I have a buy on Muthoot Finance. Keep a stop at 22.55, look for targets of 23.60. And the other one is MCX, which I would recommend buying with the stop below 6,000. So let's say 59.90, and look for a target of 6,300.
Thank you so much, Mitesh, for joining us and taking us through both your views on the market as well as stock-specific calls. Let's now take a short break. Up next, we'll discuss market fundamentals with Sani Agarwal from SBI Securities.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
कुछ लोगों को अब जब एआई की बात होती है, कुछ लोगों को अब ये शब्द फैशन में है तो बोला जाता है, लेकिन मेरे लिए सिंगल एआई नहीं है, डबल एआई। भारत की डबल ताकत है। एक एआई आर्टिफिशियल इंटेलिजेंस, दूसरा एआई एस्पिरेशनल इंडिया। हमने स्कूलों में 10,000 टिंकरिंग लैब्स शुरू किए और आज उन टिंकरिंग लैब से निकले बच्चे रोबोटिक्स बना करके लोगों को चकित कर रहे हैं। और इस बजट में 50
Welcome back. We have Sunny Agarwal from SBI Securities now joining in to talk about the way forward. Sunny, you like some of these railway companies and you've been recommending stocks like a Titagarh, Texmaco, Jupiter Wagons. Now, over the last couple of days, these stocks have corrected because the street is disappointed that, well, the railway budget capex has not gone up and stocks have been in correction mode. Would you approach the weakness as a buying opportunity, or do you think there is more of a fall left in the names?
Yeah, good morning and thanks for having me on the show. I think although there may not be an YOY increase in railway capex budget, but I think the number of close to 1.8 lakh crore that itself is enough. I feel that at least order inflow is something which is one of the key metrics which we track for all these cap goods or order book driven businesses. So I think order inflow is something which will continue. And coming specifically to wagon companies like Titagarh, Jupiter, Texmaco, they are already sitting on a very robust order book. And I think next 4 to 8 quarters is the time where we will see an execution on this wagon front. So we continue to remain bullish on all the 3 names. And in fact, we are advising our client also to add on this deep and use this opportunity to add in the long-term portfolio.
Sunny, the capital goods defense names have, even railway stocks have seen a bit of a bounce back in the last couple of trading sessions post-budget. 2 names you like Zentech, we believe, and also one name, interesting name from the auto ancillary pack, Lumax Autotech. That's the name that you've mentioned. So what's the rationale over here?
Vivek, we have recently initiated coverage on Lumax, and we believe that the company is basically technology agnostic company. So they, if you look at their product profile, they basically supply products like head and tail lamp, plastic tank door panel switches, so on and so forth. And at the same time, when it comes to the OEM breakup, majority of the business is from Mahindra and Mahindra, which is a clear outlier, at least in terms of volume growth since last 1 year. Bajaj Auto, especially on EV side, Chetak is doing well, Maruti. So I think, again, a technology agnostic player, and with the recent 2 acquisition of IAC India and Green Fuel, we are bullish and we expect that company is likely to post 50% CAGR in profit during the next 2 years. And our estimate is that in FY26, the company should post profit of close to 300 crore. I think trading at a reasonable valuation, less than 50x price to earning multiple. So our fair value or price target here is 857 and investment horizon of 12 to 24 months.
And Zen Technologies?
Yeah, coming to Zen, again, we believe that during the first half, the order book was close to 957 crore. And we are expecting order inflow to the tune of 1200 to 1500 crore over the period of next 6 months. So again, I'm sitting on a very robust order book. I think a full year, we believe company is on track to deliver 900 crore kind of revenue guidance which company has given. And we are penciling close to 2000 crore revenue number for FY27, which is which will double the revenue in next 2 years. So close to 330 crore PAT is our estimate for FY26 with 25% ROCE. So our price target in Zen is 2500.
Allied Blenders and Distillers is a stock that you like. The company went public only last year, and just about yesterday there was an announcement, an acquisition that they've done. They will be acquiring Pimori Gin, Woodburn's whiskey, so just expanding their premium spirits portfolio. What have you made of the acquisition? And is this a big game changer for the company? What would be your key thoughts on this?
Yeah, definitely. I think post-IPO, we have seen a deleveraging of the balance sheet. So that was one of the main purpose of IPO as far as Allied Blender is concerned. And if you see the trend across the liquor space or alcoholic beverages space, the trend is clearly towards shifting the portfolio towards the premium product, and that will add value to the company, or maybe you can say to the margin profile. So again, a story on premiumization coupled with the balance sheet deleveraging.
Thank you so much, Sunny, for joining us, taking us through your top picks and the fundamental rationale for the same. Time now for a short break. We'll get you the management of Interarch Building Products to discuss the company's third quarter performance.
टिंकरिंग लैब्स उसका प्रावधान किया गया। भारत वो देश है जिसके इंडिया एआई मिशन को लेकर के पूरी दुनिया बहुत आशावादी है, और विश्व के एआई प्लेटफॉर्म में भारत की मौजूदगी एक महत्वपूर्ण स्थान प्राप्त कर चुकी है।
This was the third consecutive year that the BMC budget was presented to an administrator and not to a standing committee. Why? Because the term of the corporators ended in March 2022 and the elections for the new term and the new corporators are yet to be held. Now this 74,427 crore rupees budget, out of this an allocation of 43,162 crore was made for capital expenditure, 5,100 crore rupees for roads and traffic department, 5,807 crore rupees for Mumbai Coastal Road project, 3,039 crore rupees for storm water drain department, and 650 crore rupees for sewage operation department. For key public services, rupees over 4,000 crores were allotted to education department, over 7,000 crore for health department, 261 crore rupees for fire department, 309 crore rupees for disaster management, and 220 crore rupees for the garden department. BMC announced that it's going to start 250 new public clinics, also known as Apla Dawakhana, all over the city. One interesting initiative announced by the BMC was the introduction of cyber awareness program for students. It will serve two key purposes. One will be to ensure that the students learn how to use the internet in a safe manner and to keep them safe from cyber fraud. BMC also focused on environment initiatives and projects like promoting eco-friendly cremation and proper disposal of residue from idle immersion. These are the projects which will take place under environmental related initiatives in the next few months. We also spoke to Bhushan Gagrani, the BMC Commissioner himself. This was the first time that he presented the BMC budget. Listen to what he has to say about this BMC budget. So your budget also mentioned that you guys are planning on imposing a tax on the commercial properties in slum areas.
That's right.
If you can elaborate that. So from when this new tax will be levied?
It is actually not a new tax. In fact, we are enhancing our assessment net. Under the assessment net, the properties which are in the slum, however, which are being used for the purpose of commercial, they were not covered. So this is for the first time we are doing the survey and bringing them in the tax net. Not necessarily that we will be imposing huge tax. It's a normal tax. It's not a very huge tax. However, the coverage will be given to our commercial properties.
So BMC has not introduced any.
Welcome back to Trading Hour. Well, as promised, Interaj Building Products, which reported a good set of Q3 numbers. Remember, the company saw a revenue growth of 15% as well as a rise in profit after tax of 28%. To discuss more on the company's performance in Q3, we are joined by Arvind Nanda, Managing Director of Interaj Building Products. Thank you so much for joining us, Mr. Nanda. First up, could you reiterate your guidance as far as FY25 is concerned? Last time you spoke to us, you told us that 10% top line growth is what you're expecting, and you had further guided for a top line growth in the range of 10 to 15%. Is there any change? Would you be looking to revise it upwards?
No, there is no change at present. We are hopeful that it might go up a little bit, considering our completion of the orders a little faster, and our profitability and other guidelines are in place. We are trying our level best to increase it a little bit, but a lot depends on how we can execute the orders which we have in hand. That is the key. The sites are clear and the customers have clearances for us. So we are hopeful that it might go up a little bit, but certainly we are on track.
Mr. Nanda, the other point that we just noticed is that the order book on a sequential basis seems to have moderated close to at 1,305 crore. Currently, what is the installed capacity? Last time you told us, it's not an issue of demand, more an issue of capacity. We also understand that there is one capacity, the manufacturing facility at Andhra Pradesh, which has been inaugurated. Currently, what is the total installed capacity? What are the orders in hand, and how is the order prospect pipeline?
See, the capacity that we have, like we have mentioned earlier in pre-engineered building, it is capacity right from engineering to execution. Of course, production is a very critical part of it as well. So currently, we are at about 130 to 140 crores. We are trying to build it up with these new plants coming up to 150 crores by next financial year, next first quarter of the next financial. Currently, it is about 130 to 140 crores. So we feel that, most of the orders today which we are getting are very, very fast track. Even a large order of 100 crores, 120 crores, people want it to be done in 8 to 9 months. So the timelines are becoming shorter. So while the order book doesn't look like it's growing, but we can only take orders up to our capacity to deliver in 8 to 9 months. So I think the execution will become faster as we go, and therefore we should be, as capacities build up, be able to take a bigger slice of the business available in the market. So currently it is about 8 to 9, I would say 9 months we'll have to execute all this that we have got. So we will pick up the order intakes starting from sometime March, April onward, because the capacity will also go up.
Understood that. So you're saying most of the orders are short cycle orders with visibility, or you just need an order book with a visibility of close to 8 to 9 months. We also understand in January, you received a couple of orders from Tata Projects for close to 220 crores. Number one, do you disclose customer information? We believe it is in the public domain. Number two, what is the visibility that you're having from the private side, especially given the fact that you also now have an interesting tie-up with JSPL? So what is it that you bring to the table? What is it that they bring to the table? And is it mainly for the Jindal Group?
See, there is a lot of visibility of the orders. As we can see, again, the budget has incentivized electronics, batteries, solar. This is the new age sector which we are very prominently present, and where all the large projects are. Both these projects of Tata's are battery as well as semiconductor. So therefore, these are the sectors which are growing very fast, and there may be 20, 30 companies currently planning where we are bidding for these kind of products, solar or lithium battery or semiconductors. So, and the budget has incentivized that. So the pipeline of inquiries is excellent going forward. A lot depends on the kind of pricing we get and the kind of dates we get so that we can execute them. Both the Tata orders were a landmark for us in terms that one is for a lithium battery plant, which is the first for Tata's, and second one is for a semiconductor plant in Assam. Both semiconductor, we are also doing one for them for Tata projects for Micron in Gujarat already. So this is a very good entry point for us. And the JSPL tie-up is more for heavier structures. You see, a lot of these buildings which we are doing currently also, they require heavy structures which we are not very productive and competitive in. Going forward, even high-rise buildings, data centers, these buildings require what we term as heavy structures, which are a little different than what we are doing. So JSPL has a very large facility for that. And they have a very good name. It's not JSPL as a steel provider, but JSPL as a fabrication company which they have. So they have a what they call the fabricated structure company. So we are dealing with them. JSPL, a steel company, we have been dealing for decades. So we will tie up with them to sort of market and sell more of the heavier structure buildings, which are data centers, which could be high-rise buildings. High-rise buildings are going big time into steel.
Mr. Nanda, thank you so much. We'll get you once again on the show today. We have a paucity of time. We'll move on. Time now for a short break. We'll get you on the markets on the other side.
Time. In fact, you have focused. Correct.
Yeah.
But sir, does it mean that is there any cause for fiscal concern, sir?
No, there is no fiscal constraint. We have enough adequate cash flow as well as resources.
हमारे देश में एक प्रधानमंत्री हुआ करते थे, उनको मिस्टर क्लीन करने कहने की एक फैशन हो गई थी। उस प्रधानमंत्री जी को मिस्टर क्लीन कहने की फैशन हो गई थी। उन्होंने एक समस्या को पहचाना था और उन्होंने कहा था कि दिल्ली से 1 रुपया निकलता है तो गांव में 15 पैसा पहुंचता है। अब उस समय तो पंचायत से लेकर पार्लियामेंट तक एक ही पार्टी का राज था। पंचायत से पार्लियामेंट तक एक ही पार्टी का राज था और उस समय उन्होंने सार्वजनिक रूप से कहा था कि 1 रुपया निकलता है 15 पैसा पहुंचता है। बहुत गजब की हाथ सफाई थी। पंद्रह पैसा किसके पास जाता था ये देश का सामान्य मानवी भी आसानी से समझ सकता है। आदरणीय सभापति जी, देश ने हमें अवसर दिया, हमने समाधान खोजने का प्रयास किया। हमारा मॉडल है बचत भी विकास भी। जनता का पैसा जनता के लिए। आदरणीय सभापति जी, आजकल मीडिया में ज्यादा ही चर्चा हो रही है, सोशल मीडिया में और अधिक हो रही है। कुछ नेताओं का फोकस घरों में जकूजी पर, स्टाइलिश शावर्स पर लेकिन हमारा फोकस तो हर घर जल पहुंचाने पर है। आदरणीय सभापति जी, हम
Welcome back. We've been listening to the Titans of India Inc. at CII, and here's another one, Titan. Now, the stock is under pressure because of the Q3 performance. Margins was a miss. Profits came in below street expectation. Now, we had a chat with C.K. Venkatraman, the managing director at Titan Company. Listen into what he had to say about the sustainable growth rate and the outlook on margins.
The growth which we typically look at every year is in the ballpark of 20% from an annual point of view. And that's the kind of thing that we would be satisfied with rather than continuing to maintain the 25 in every quarter. So the long runway in terms of growth and our having just a single-digit market share, our focus continues to be on sales growth and with a stable margin around that 11% ballpark. That's what I would gun for. That's what we are pushing for.
ये जो अलग अलग कदम उठाए उससे लाखों करोड़ रुपए की बचत हुई, लेकिन उन पैसों का उपयोग हमने शीश महल बनाने के लिए नहीं किया। इसका उपयोग हमने देश बनाने के लिए किया है।
telling Ukraine they have very valuable rare earth. We want what we put up to go in terms of a guarantee. We want a guarantee. We're handing them money hand over fist. We're giving them equipment. European is not keeping up with us. They should equalize. And look, we have an ocean in between. They don't. It's more important for them than it is for us. But they're way below us in terms of money. And they should be paying at least equal. They should really be paying much more than us, but let's say equal to us, and they're billions and billions.
Welcome back. Trent has rebounded after yesterday's 6% fall. It's up nearly 2%. There's an interesting note from Goldman Sachs with regard to the Shein competition. Now, they're saying that Zudio operates largely in below $9.99 as a price point. Now, if an online-only player has to scale up, then the price point cannot be so low because they have delivery costs. Also, in an online model, pure online model, generally there are more returns. So therefore, the costs go up. And therefore, it's very difficult for an online-only player to compete aggressively in the space that Zudio is. That's point number one. And secondly, they're saying Zudio over the last 5 years has literally perfected the model. They started in 2014, but they scaled up only in the last 5 years. So they've had a very long learning curve, and therefore it'll be hard, according to them. And, GS believes that it's a buying opportunity on trend. But that brings us to a close in trading hour. Thank you for watching.
Dollars below. So we're looking to do a deal with Ukraine where they're going to secure what we're giving them with their rare earth and other things.
You're watching us here on Halftime Report. I'm Mangalam Malu, with me Hormas Fatakia, and as we look at the market, absolutely flat for the Nifty, though that's good outcome given the rally that we've seen already, no sell-off, and the good part is that your portfolios might be feeling good with the kind of outperformance that we're seeing from the broader markets itself. The Midcap Index up almost 600 points, nearly 2,000 stocks advancing for 500 stocks which are in the red. But let's talk about the biggest loser on the Nifty today. You are, talking about Asian Paints out here. Let's talk about, the company's third quarter numbers. It was a weak set that the company reported, and we do have with us the management. Amit Singhal, who's the MD, joins in now. Amit, thank you for joining in. The stock is losing right now. In the conference call post-earnings, the management did say that we expect the demand conditions to remain challenging. And let's talk about that itself, because the consumers are down trading, the sentiment is weak, then there is competition. As the leader, the question is, what are you doing to ensure that you pick up growth and that growth sustains?
There has been down trading in terms of the market, in terms of what we've seen. I think what was more complex also that, the festive season was very, very short. It was a shorter Diwali to that extent. So as we see, I think the month of October really kind of impacted us very highly in this quarter to that extent. So I think that is what possibly has impacted the overall growths in terms of what has come in. We've still registered a volume growth of about 1.6%. However, going forward, we are seeing three things happening. One, what we are looking at is definitely in terms of a little bit of an uptick in terms of the rural demand. Second, we feel that given the fact that the government spending is now a little bit on an upsurge, we will definitely see slightly better kind of business with respect to the whole area of hospitality projects, government spending, and so on and so forth in terms of what will happen. Even the industrial sector has been doing well. In Q3 also, it has done well. Overall, the area of protective paints, powder paints will continue to do well overall to that extent. There might be a little bit of a cyclical downturn as far as the auto business is concerned. However, I think the big point is that the urban centers seem to be kind of going slow, and we don't see an upsurge there even in Q4 happening to that extent. So we are therefore a little bit cautiously optimistic about it. From our side, we are looking at newer products on the anvil. We are looking at more activity in terms of looking at what we can do in the secondaries in the market.
Right. Amit, good afternoon. Thank you for joining in. This budget has announced some more money in the hands of people, right? Particularly directed at urban consumers itself. Now, do you see that as a sentiment boost, at least in terms of growth coming in terms of urban volumes?
So overall, I think it's a very positive step in terms of what the government has done. I think it's definitely got more money in the hands of the middle class overall in terms of what we see. And that will definitely boost overall consumption, especially in the urban centers. What we need to kind of wait and watch is that which are the sectors where the consumption will straightway come in, because we must remember that, paint is a segment where basically the spends are always deferred. And it is one of those segments where the painting of the home and so on and so forth comes the last to that extent. So we'll have to wait and watch in terms of where the consumption levels kick off to that extent. But we are expecting that definitely this will give some better consumption levels coming in the urban centers for sure. As we go ahead, we are looking at single-digit volume growths for Q4 for definitely in terms of what we would kind of really endeavor to get as we kind of go forward. As of now, possibly we will wait for Q4 to kind of look at in terms of what are the kind of signals we give for the coming year.
All right, that's about the decorative business. On home improvement, Amit, I have to ask you, because it's been a personal passion project for you as well. Growth has been subdued for a very long time now. We've also seen a couple of management changes out there as well, some abrupt exits and, reappointments. What's the company's overall thought process here, and how long do you continue to invest behind it before it actually makes a significant inroads into your overall numbers?
So overall, I think it's an initiative which possibly really we are looking at in terms of a larger decor positioning of the overall brand in terms of going forward. So we are talking of basically a shift from a share of surface to a share of space within the home to that extent. So from that point of view, definitely it's something which possibly we are passionate about in terms of taking it. As we look forward, I think the overall consumer sentiment, the spendings across homes and so on and so forth has impacted some of the categories here as well. Although we see definitely some growth, which is definitely there to that extent, we still kind of pursue putting up newer stores in terms of various cities in terms of what we are putting. This year also we have put about 8 to 10 additional stores which have come into that extent. I think it is too early to kind of really look at saying that we wanted to kind of not kind of get further into this segment. I think having started it, we would like to kind of take it to a logical conclusion in terms of what we are able to kind of do around this to that extent, because it has a direct correlation with the core business as well. So it's not something which is running parallelly separate to that extent in terms of going forward. So I think given the fact that there is a correlation, I think we would definitely look at still, concentrating on this. Possibly we might still do some adjustment in terms of how we look at our overall spends in terms of the core category versus possibly the category of home decor as we go forward.
Amit, you're guided for around about 18 to 20% in terms of margins. Now, do you think that this is achievable? Is there some more pressure on the downside that you see going forward?
See, as of now, I think what we are very clear is that we are still kind of pursuing, strong portfolios in terms of the premium luxury segments to that extent. I think where you possibly kind of lose out is some of the economy segments in terms of what is there as we kind of go forward. Our entire endeavor is to kind of look at more innovation, more investment in these segments, look at more secondary demand in terms of what we can churn out as we go forward, more in terms of building brands here, a set of new packaging in terms of what we are bringing overall, a set of new products in the premium luxury space. So I think as we go forward, possibly we are still kind of maintaining the guidance of 18-20 as we go ahead to that extent, because that's the larger focus in terms of what we want to maintain.
All right, you will maintain 18 to 20% EBITDA margin guidance. Amit, the last time we spoke, you did say that, you are interested in parts of Akzo Nobel. Let me ask you point blank. Have you put in a bid for Akzo Nobel?
No, not as yet.
All right, not as yet. Well, that's enough clarification coming in. Asian Paints has not put a bid for Akzo Nobel. But, also I'm very curious to know, what is the promoter families or the directors, what are they saying, given the sort of prolonged weakness that we've seen, not only the consumer sentiment, but your own business performance, the stock's own underperformance as well? What is their direction of thinking right now? I want to understand from the promoter / board of directors standpoint.
See, overall, if you look at from the point of view of last 4 years, we have seen a big uptick in terms of what we saw from COVID for the next 3.5 years to that extent. So I think it has been a very, very strong surge where we have almost doubled the numbers from a top line, and in terms of even profitability, it's been a strong surge in terms of what we have seen. So I think today both the promoters as well as the board is aware that there are cycles which are tough to that extent, but I think they totally have a belief in the brand. They have a belief in the management in terms of taking it forward to that extent. And I think there is strong resilience there in terms of saying that they are willing to wait and watch in terms of seeing how possibly the brand bounces back.
They are willing to wait and watch, but what about your employees, Amit? How are you motivating them to put their best foot forward? How do you ensure that they don't leave like we saw earlier in the home decor business? How are you navigating through this period?
See, overall, I think the employees also understand that what is the value of the brand and what is their equity in the brand to that extent. So overall, at least in the management, we have not seen too much attrition in terms of what is really overall happening to that extent. There are a couple of positions here and there in terms of what we have seen overall to that extent. But I think today, it's crucial at this point of time that, leaders are there in the market. They are standing behind the troops. They are kind of guiding them in terms of what needs to be done. And there is innovation and empowerment at play in terms of what we are bringing to that extent. So I think the need of the hour is really kind of getting behind the troops and kind of really guiding them in terms of what can be done and what is innovation all about. So I think we are well in control in terms of looking at how we are looking at the current scenario and how we are kind of going to emerge out of this.
Right, let's address the elephant in the room then straight up. This is the first full festive season that we've seen from the competitor, the Birlas, that is. How did that go on the ground, and how long before we see double-digit volume growth return for you?
So see, the competitive intensity has been pretty strong in terms of what we have seen in the first 9 months. However, I see is that, given the fact that it's not only about 5 players at the top, it's also about, 10 to 12 players now batting to that extent. There have been even more competition which has come in terms of a lot of newer players other than one of the bigger players which has kind of really stepped into that extent. So I think we are definitely seeing, some readjustment of shares across a lot of players to that extent. So it's not something which is only one player is kind of experiencing it. It is all across, and a lot of these shares are getting adjusted across the unorganized sector as well to that extent. So I think this intensity is going to remain for some time. I think the important part is that which companies, which brands are able to play to their strengths, put their clear direction in terms of the work, in terms of what they're doing in the market and really see that possibly they are able to do things very, very differently rather than being predictable in the market to that extent. Overall, I see that it will take some time. I think I'm betting it that it will take definitely about 2 quarters forward in terms of looking at really the double digits kind of coming in very strongly.
All right, double-digit volumes are at least 2 quarters away. Amit, thank you so much for joining in. A candid conversation, not just around numbers, but around what's happening in the space as well. Wish we had it in the backdrop of a better performance coming in from Asian paints. The stock down about 30-35% from the highs. Another top Nifty loser in today's trading session as well. Though, wish you good luck for bouncing back. As you said, the promoters and directors behind the brand and the leadership of the company itself. Take a short break, come back on the other side. We get you trading strategies come by on the market. Even as the Nifty is consolidating, we do have the mid-caps doing a lot better. So we have Somil Mehta of Mirae Asset Sharekhan joining in with his views on the market.
I think we are now getting into a phase where growth will surprise to the upside. The budget reaffirms that. I think this is a growth-oriented budget. In fact, the phrase I've used for this budget is that it's a magic budget, and I'll come to that in a moment. And my expectation is that the monetary policy will back this budget, and the monetary policy will also become growth-oriented. So as far as India is concerned and what we control, I think things are looking up.
I think it is one of the best budgets that we've seen in many, many years, and I tweeted it's a dream budget. So first thing is that you normally want money with the public rather than with government. It should just be the general thumb rule of looking at anything, that money with public is better than money with the government. You have not said that, oh, you cut a tax rate across the board, therefore the rich will get much more. It has come to the correct audience in that sense. So it has to be travel, it has to be savings.
You're watching us here on Halftime Report, halfway through the trading session, and it's a brilliant looking screen if you are, thinking of your portfolio. Yes, the Nifty is holding on to gains that we made yesterday, a mild give up, but nothing really to worry about. The Nifty Bank's holding up with about 1/3% as well, close to 50,350. And the Midcap Index, which is doing a lot better. So if you want to understand, the health of the market, just look at the advanced decline. On the Sensex, you have 20 stocks declining. That explains the underperformance of the frontline index. Nifty, it's a 50-50 in terms of advances and declines. But if you look at the BSE, nearly 2,600 stocks advancing. NSE, 2,000 stocks advancing. The number of stocks which are declining are just about 33% of the stocks which are advancing. So that's good news, because that, when typically happens, the street believes that, there is support at lower levels for the frontline index. On the way up, there could be, a bit of a technical resistance as well coming in from the 50-day moving average of the Nifty, which is very close to 23,784. We have the Nifty Bank, 50,781. So those are a couple of levels that we'll have to watch out for. The other couple of factors could also be, the key things that we'll be watching out for. Tomorrow's the weekly options expiry. Day after is the RBI policy. So ahead of those events, maybe the market is biding time on the frontline end of things. But because it's weekly options expiry, we have, a lot of straddle writers, which is the call and the put together, active in the market. So 23,750 call, which has a premium of 50 rupees, and pull up the 23,750 put as well. That comes up for you on the screen. That has another 100 rupees on offer. So if you're selling this straddle, which is a call and put at 23,750, you're playing for a premium of 150 rupees on either side. What does that tell you? That tells you that there is support at 23,600, and on the way up around 23,900 could face some sort of resistance. We're still seeing action on the 23,800 call too. A lot of stocks on our radar as well. A smart recovery is what we've seen from lows on Kalyan Jewellers. Some of the long positions being added on that counter. We'll keep an eye out on this one, known to be very, sort of volatile. And the other one is Max Financial, seeing a lot of short positions being stuck on the wrong side. So as a result of which, there is short covering that we're seeing on Max Financial.
Interesting levels to watch on the index. Is still hovering around those, is what Mangalam highlighted as well. But Somil Mehta, the head of alternative research of capital market strategy at Mirae Asset, Sher Khan, is joining in now. Somil, good afternoon. Thank you for joining in. Yesterday was, you can call it a trending day of sorts after the up move, is being a bit of a consolidation that you're seeing on the index. Does it have enough legs to get to 24,000, say, by the end of the February series? And if so, what further for the index, and couple that up with your stock strategies as well?
Yes, definitely. I believe that the markets can go to 24,000 levels for Nifty. It is holding on to 200 daily exponential moving average. Both Bank Nifty and Nifty both are above 200 daily moving average, creating higher tops, higher bottoms. There are a lot of stocks which are having good momentum, like Reliance. Is looking good on the charts. So I think enough legs to go up till 24,000. Maybe a little bit of consolidation in this area, because we have a little bit of resistance around 22,800, and I think within a few weeks we'll be at 24,000. Short term remains positive. Short term bias remains positive. Even the medium term bias remains positive now, because it's trading about 200 daily moving average. And I think I would like to bet on mid-caps today. That will be LTIM. That will be my first pick. Stop loss would be 5,835, and the target would be 6,200. The next one which I would like to bet on is Zomato, and the stop loss would be around 225, and the target would be 255.
What about Swiggy, Somil, since you mentioned Zomato, because it's almost from a 620 rupee high, stock went down to 400, even slipped below its IPO price, still hovering around those levels. Do you see that the IPO price is a kind of a floor for now, considering also that it's reporting results today?
Overall, if you see in the short term, it's just consolidating in a range. There was a fall in the last couple of days, but it's a broad range, and has been, I think it will stay in this range. However, the medium-term outlook definitely looks negative. Trading below 20 and 40 daily moving average, which is not good. The momentum indicators have given fresh sell signal. So I think the medium-term outlook definitely looks bad. And in the short term, I would not say we can go short at these levels. However, I would definitely not go and buy. I think in the very short term, 400 and 390 levels are possible in the very short term.
All right, we take that point. Thank you so much, Saumil, for joining in and giving us your views on the markets and a lot of individual stocks as well. Speaking about individual stocks, moments ago we were speaking with the management of Asian Paints. While they see no respite in the very near term, the stock has seen some respite. From the lows, the stock has actually seen a recovery of around 2.5%. Still sitting with a cut of 2.5%. Remember, the stock has corrected about 30% from the highs, but the management's comment with regards to the promoters and the directors standing behind the strength of the brand and the leadership is something that perhaps the street likes, and also the fact that they are not bidding for Akzo Nobel, so takes away fears of any sort of irrational exuberance, along with them recalibrating their expenditure towards home improvement as against paints. So we'll watch out for that. It's still a business not out of the woods, and that explains why the stock is still lower, but we have seen a smidge of a recovery. Take a short break, come back, get you more on the markets and stock-specific action.
Consumer durable types, as I said, we are not buying those, but they could.
Presently, taxpayers can claim the annual value of self-occupied properties as nil only on the fulfillment of certain conditions. Considering the difficulties faced by taxpayers, it is proposed to allow the benefit of 2 such self-occupied properties without any condition. To streamline the process of transfer pricing and to provide an alternative to yearly examination, I propose to introduce a scheme for determining arm's length price of international transaction for a block period of 3 years. This will be in line with global best practices. With a view to reduce litigation and provide certainty in international taxation, the scope of safe harbor rules is being expanded. A number of senior and very senior citizens have very old national savings schemes accounts. As interest is no longer payable on such accounts, I propose to exempt withdrawals made from NSS by individuals on or after 29th August 2024. I am also proposing to allow similar treatment to NPS Vatsalya accounts as is available to normal NPS accounts subject to overall limits. Detail the indirect tax reforms and changes in direct taxes in Part B. Financial sector reforms. The FDI limit for the insurance sector will be raised from 74 to 100%. This enhanced limit will be available for those companies which invest the entire premium in India. The current guardrails and conditionalities associated with foreign investment will be reviewed and simplified. The services of India Post Payment Bank will be deepened and expanded in rural areas. NABFID will set up a partial credit enhancement facility for corporate bonds for infrastructure. Public sector banks will develop Grameen Credit Score Framework to serve the credit needs of SHG members and people in rural areas. A forum for regulatory coordination and development of pension products will be set up. To implement the earlier announcement on simplifying the KYC processes, the revamped Central KYC Registry will be rolled out in 2025. We will also implement a streamlined system for periodic updating.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters as we've done for the last...
Welcome back. Just before we went into the break, Mangalam was mentioning the fact that the broader markets are doing fairly well for themselves, and one of them is Motilal Oswal. That stock is up 14% now in today's trading session, and the top gainer on the Nifty 500 index. The stock had done well yesterday as well, and that now up almost 14% at the highest point of the day is Motilal Oswal. Jubilant Pharmova as well, that too is up 10%, as is Eris Life Sciences. So a lot of these pharma slash hospital slash diagnostic chains are doing well for themselves. Eris Life is up 10, Vijaya Diagnostics is up 10, Global Health, of course, is an earnings reaction. That too is trading with gains of around 10%. And speaking of pharma, Zydus Life's numbers flashing on your screen, a revenue growth of 17% at 50 to 69 crores. Profit growth too stood at around 30%. Yes, it is 30% at 1,023 crore compared to 789 crore last year. The stock a bit choppy, but has recovered from the lows of the day after the results announcement. We'll get you more on that in just a bit. But speaking of numbers, the other one that's reporting results today is Cummins India, and that is up in today's session after its parent company projected double-digit revenue growth in the India operations. Vamakshi is joining in with more details on that. Vamakshi, tell us what the parent company said.
Well, absolutely, Hormaz. In the con call, the parent company has given 3 important pointers. First one is the guidance on the India business. Now, in India, the company is projecting revenue, including all of its JVs, to rise by almost 10%. Now, this growth, they say, will primarily be driven by stronger power generation demand. Now, keep in mind that Cummins has several entities in India, and Cummins India is the only listed entity. So, the 10% growth that they're talking about is for all of these entities combined and not just Cummins India. Now, the second commentary that came through was on the power gen side. Now, they have given very strong commentary out here. They say that revenues in global power generation markets are expected to rise anywhere between 5 to 15% in 2025. They see continued high demand in the data center market, and they are excited about the continued impressive performance and growth potential for their power systems business. So given that kind of growth that they're predicting, they've also gone ahead and made an announcement in terms of adding capacity. They've said that they will be raising capacity to meet rising power generation demand. They will be investing nearly $200 million across US, England and India manufacturing sites. So these 3 main points bode very well for Cummins India. It has a positive read-through for the company, which is why the stock is up in trade. But keep in mind that Cummins India is expected to results later today, so we'll be watching out for that as well.
We will indeed. Vamakshi, just hold on to that thought. We'll come to you in just a bit. Just keep an eye out on Zydus Life once again. The stock spiked earlier when the profit rose by about 30%. There you can see the net profit up 30% at 1,023 crores. But thereafter, those gains have been swiftly given up. The reason why that has happened is because, the profit surge can be attributed to forex gains. The forex gains this time around, the company's posted is a little over 180 crores. This compares with just about 20 crores. So a large part of the net profit growth has come in on account of forex, and that's exactly what may not have impressed the street as much as the initial flash of that 30% profit growth would have come by, which is why we see the stock earlier spiking up and now has fallen currently right just below the red line, if you must, because the revenue of 17% in terms of growth, not particularly bad as well. But Vamakshi, the one stock which is buzzing around is Angel One. Good update coming in from January. The stock up nearly 7%.
Well, absolutely, Mangalam. When we look at the gross client addition, it came in at 6.6 lakh. This is down nearly 15.4% on a month-on-month basis. And in fact, client acquisition has slowed down yet again after seeing a good growth that we saw in the month of December. But that's the only negative so far that I see in Angel One, and that is because the client base has steadily risen by almost 2.1% on a month-on-month basis. When we look at the average daily turnover, that is now recovering. It is up nearly 6.3% month-on-month. Remember, in the month of December, we had seen a very sharp fall of almost 32%, and that has seen a bit of an improvement, so which is a big positive for Angel One. Apart from that, when you look at the average daily orders, they are down nearly 3.7% on a month-on-month basis. But when we look at the company's market share, that has picked up across the board. Equity market share is up nearly 31 basis points month-on-month to 19.7%, and this has improved after seeing a decline over the last 2 consecutive months. F&O market share has also improved by 15 basis points month-on-month to 21.8% after declining in the month of December, and commodity market share has seen a very sharp surge of 133 basis points month-on-month to 61.2%. So largely there is a slight bit of a moderation in their gross client addition, but the rest of the factors are more than making up for it, and resultantly Angel One is up in trade.
Indeed, and it's a much needed relief for Angel One, because most of these capital market names up almost 100, 150, 200%. Angel One is almost down 35 to 40% from its peak, which was close to 4,000 rupees. The stock now trading at around 2,500. But among the top performers of the day, 7% higher after its business update. We take a short break. We get you more on the markets and put the spotlight on Titan in our Insight Edge segment. Stay tuned. Back on the other side.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
कुछ लोगों को अब जब एआई की बात होती है, कुछ लोगों को अब ये शब्द फैशन में है तो बोला जाता है, लेकिन मेरे लिए सिंगल एआई नहीं है, डबल एआई।
Welcome back onto our special Insight Edge segment, and Mangalam is here to put the spotlight on Titan, which is under pressure on the back of its Q3 numbers. The business update gave away quite a bit, but what is impacting the numbers this time around?
Well, what's impacting the numbers this time around is that one-off that came by. You know, the company had taken an inventory hit of almost 250 odd crores. That's largely because of the duty cut that came by in the previous budget put out by Finance Minister. There was a positive from a revenue standpoint, not so much from an inventory standpoint, because they had to do a bit of inventory markdowns as well. But the good part is that all of that has been gone away. We spoke with the management. The jewelry business in the third quarter grew at about 25%. On an annual basis, the management targets 20% growth rate. The reason why it's slower than others is because the third quarter is the festive season quarter. So obviously, the growth rate would be a lot higher. The other part that they said is that margins, they would like to maintain their margins around that 11% mark. Remember, from the peak of around early teens, mid-teens, Titan's margins have steadily kept coming lower. The fact that 11 to 11.5% seems to be a bit of a bottom for here on is something that, the street may perhaps adjust to once again. But the fact that it's not going to go below that is something that we will, keep an eye out on. What also we need to keep an eye out on is the lab-grown foray. That was the key insight that came in from the management conversation that we had today. They spoke about lab-growns, but they kept their cards very close to the chest. The management went ahead and said that, we have some plans, but we are not going to announce them in public. So I think the street would await any announcement coming in from Titan on this front, because if this were to happen, then it would be the first large jewelry player and the largest one in the country actually acknowledging its foray here. And that would mean, a bit of more acceptance coming in from lab-grown diamonds. And in the very near term, it would increase propensity of jewelry that is bought just for adornment as against store of value. And that's positive from a revenue standpoint. How much does that do to their margins or not is something that we'll keep an eye out on. But lab-grown diamond is the talk of the town. And if Titan keeps its cards close to the chest and at some point reveals its strategy out there, maybe the street will eye that favorably. But all of those details kept by the management very close to their chest.
As they say, Jaisa Des Vaisa Bhe. So maybe trying to get onto that lab-grown diamond bandwagon. We'll wait more announcements there from Titan. But we spoke to the management, C.K. Venkatraman, the managing director of the company, and listening to what he had to say.
The growth which we typically look at every year is in the ballpark of 20% from an annual point of view. And that's the kind of thing that we would be satisfied with rather than continuing to maintain the 25 in every quarter. So the long runway in terms of growth and our having just a single-digit market share, our focus continues to be on sales growth and with a stable margin around that 11% ballpark. That's what I would gun for. That's what we are pushing for.
And just while we were talking about Titan, there was a flash at the bottom of your screen about Zydus Life and its US formulation sales. That has grown by 29% compared to the previous year. And that's at $285 million. That figure has come in. And there was an estimate of $270 million. So US formulation sales surpassing expectations, but a one-time forex gain that has contributed to the profitability. The stock, though, continues to see some choppy moves after that initial spurt seen on the profit number and then, of course, on the US formulation sales. So on the formulation sales business, it was a healthy number there from Zydus Life, but a forex gain contributing to the profitability. Take a short break. More on the markets on the other side. Stay tuned.
भारत की डबल ताकत है। एक एआई, आर्टिफिशियल इंटेलिजेंस, दूसरा एआई, एस्पिरेशनल इंडिया। हमने स्कूलों में 10,000 टिंकरिंग लैब्स शुरू किए और आज उन टिंकरिंग लैब से निकले बच्चे रोबोटिक्स बना करके लोगों को चकित कर रहे हैं। और इस बजट में 50,000 नए टिंकरिंग लैब्स उसका प्रावधान किया गया। भारत वो देश है जिसके इंडिया एआई मिशन को लेकर के पूरी दुनिया बहुत आशावादी है और विश्व के एआई प्लेटफॉर्म में भारत की मौजूदगी एक महत्वपूर्ण स्थान प्राप्त कर चुकी है।
This was the third consecutive year that the BMC budget was presented to an administrator and not to a standing committee. Why? Because the term of the corporators ended in March 2022 and the elections for the new term and the new corporators are yet to be held. Now this 74,427 crore rupees budget, out of this, an allocation of 43,162 crore was made for capital expenditure. 5,100 crore rupees for roads and traffic department, 5,807 crore rupees for Mumbai Coastal Road project, 3,039 crore rupees for storm water drain department and 650 crore rupees for sewage operation department. For key public services, over 4,000 crores were allotted to education department, over 7,000 crore for health department, 261 crore rupees for fire department, 309 crore rupees for disaster management and 220 crore rupees for the garden department. BMC announced that it's going to start 250 new public clinics, also known as Apla Dawakhana, all over the city. One interesting initiative announced by the BMC was the introduction of cyber awareness program for students. It will serve two key purposes. One will be to ensure that the students learn how to use the internet in a safe manner and to keep them safe from cyber fraud. BMC also focused on environment initiatives and projects like promoting eco-friendly cremation and proper disposal of residue from idle immersion. These are the projects which will take place under environmental related initiatives in the next few months. We also spoke to Bhushan Gagrani, the BMC commissioner himself. This was the first time that he presented the BMC budget. Listen to what he has to say about this BMC budget. So your budget also mentioned that you guys are planning on imposing a tax on the commercial properties in slum areas.
That's right.
If you can elaborate that. So from when this new tax will be levied?
It is actually not a new tax. In fact, we are enhancing our assessment net. Under the assessment net, the properties which are in the slum, however, which are being used for the purpose of commercial, they were not covered. So this is for the first time we are staying.
Welcome back. We spoke about some gainers on the other side of the break, but there are some losers as well in the broader markets in today's trading session. Sobha is one of them. That's down at the lowest point of the day, 5.5% lower on the stock. Fine Organics is one of them, almost trading with losses of close to 5%. And we have Sirma SGS. That too is trading with losses of close to 4%. Actually, real estate as a pack is not doing well in today's session, be it Sobha, be it Prestige Estates, be it Phoenix Mills, most of them seeing losses of anywhere between 3 to 5%. And of course, it is these consumption-oriented names that had seen a sharp run-up post the budget. They are witnessing some profit booking in today's trading session, be it Westlife Food World, be it Honasa Consumers, also be it the likes of Sapphire Foods or even Nestle for that matter, coming in under a bit of pressure in today's session. Westlife Food World, though, has recovered from the lows of the day, but Honasa still trading with losses of around 3%. But most global investors are still very cautious on India, according to Prateek Gupta, who is the CEO and co-head of Kotak Institutional Equities. He also added that the valuation comfort is not there in a lot of these consumption names. Listen in.
I think at Kotak, when we speak to most of our global investors, they're still very, very cautious. Most of them are seeing India, they still see India as quite an expensive market, trading at 20 times FY26 earnings on the Nifty, trading at 100% premium to the MSCI. And more importantly, India is a growth market. People come to India for growth. And growth is where I think we've been disappointing last few quarters. And even the outlook going forward isn't that great. I think the main point is the valuation comfort, which you highlighted. That is still not there in most of the consumer stocks. In fact, we had Nestle's results yesterday, and Nestle is more in the premium staples category. But even they were highlighting what the weak demand environment. You saw Asian Paints again pretty weak. We think oil prices will stay high, which is why we actually prefer more the ONGCs of the world rather than the OMCs. The OMCs are also subject to all kinds of regulatory intervention. There's a lot of heavy capex going on as well. But I think off the lot, I would say the AMCs or the mutual fund companies are probably the best bets. They have corrected quite a bit, 20-25%. In fact, today we've upgraded some of them. We had negative ratings on them until recently, but given the stock price correction last few months, we're turning a bit more constructive.
Take a short break now. With that, on the other side, we will have Manisha Gupta joining in with Chirag Sheth, who's the principal consultant South Asia at Metals. Stay tuned.
And bringing them in the tax net, not necessarily that we will be imposing huge tax. It's a normal tax. It's not a very huge tax. However, the coverage will be given to our commercial properties.
So BMC has not introduced any new project this time. In fact, you have focused. Correct.
Yeah.
But sir, does it mean that is there any cause for fiscal concern, sir?
No, there is no fiscal constraint. We have enough adequate cash flow as well as resources.
हमारे देश में एक प्रधानमंत्री हुआ करते थे, उनको मिस्टर क्लीन करने कहने की एक फैशन हो गई थी। उस प्रधानमंत्री जी को मिस्टर क्लीन कहने की फैशन हो गई थी। उन्होंने एक समस्या को पहचाना था और उन्होंने कहा था कि दिल्ली से 1 रुपया निकलता है तो गांव में 15 पैसा पहुंचता है। अब उस समय तो पंचायत से लेकर पार्लियामेंट तक एक ही पार्टी का राज था। पंचायत से पार्लियामेंट तक एक ही पार्टी का राज था और उस समय उन्होंने सार्वजनिक रूप से कहा था कि 1 रुपया निकलता है 15 पैसा पहुंचता है। बहुत गजब की हाथ सफाई थी। पंद्रह पैसा किसके पास जाता था ये देश का सामान्य मानवी भी आसानी से समझ सकता है। आदरणीय सभापति जी, देश ने हमें अवसर दिया, हमने समाधान खोजने का प्रयास किया। हमारा मॉडल है बचत भी विकास भी। जनता का पैसा जनता के लिए। आदरणीय सभापति जी, आजकल मीडिया में ज्यादा ही चर्चा हो रही है, सोशल मीडिया में और अधिक हो रही है। कुछ नेताओं का फोकस घरों में जकूजी पर, स्टाइलिश शावर्स पर, लेकिन हमारा फोकस तो हर घर जल पहुंचाने पर है।
Welcome back, and joining us now is Chirag Sheth, Principal Consultant, South Asia at Metal Focus. Chirag, hi, welcome. And there's just so much happening in the global markets, but a lot is happening with gold itself. And the latest World Gold Council report does show us that India is now #1 when it comes to jewelry consumption in the world. What are the kind of numbers that we're looking at?
Hi, good afternoon, Manisha. So, yes, if you actually look at 2024 was a pretty strong year for India. Given the circumstances that we were, where we saw gold prices touch record highs. And I think what has really shown the strength in the Indian market are a couple of things. One is the fact that jewelry still continues to remain a key mode of investment for Indian consumers, and also the fact that there was a bit of pent-up demand which came into the market post the duty cut. So I think both these factors played out quite well for India in 2024.
Chirag, I also want to get your sense on the kind of buying that we've seen in gold in the physical markets in US. I mean, there are so many reports on how gold is being flown into US from Dubai and Singapore and various other locations. And there are those numbers as well, the kind of millions of ounces which seems to be going into US. This was ahead of tariff. This is also because of uncertainty there.
That's true. So I think, we've seen this, if we go back to 2020, we also saw certain amount of dislocation which happened where metal moved from one part of the world to another part of the world. And this is something that we are again seeing in 2025 where, and 2024 end, where the whole fear of tariff by Trump led to metal move from LBMA vaults in London to the CME vaults in New York. And I think there is fear among a lot of participants in the US and in the global market where these tariffs would be more blanket in nature, which would then impact supply chains, which would then disrupt the demand as well. So I think what is happening is that there is movement happening in anticipation to these blanket tariffs, which Trump did announce on Mexico and Canada, but have given them some bit of breather.
Do you see this futures to physical and this gold moving from one location to another continue even now?
So, Manisha, I always say this gold is like water. It finds its way. So, if tariffs continue, then we will see bit of dislocation happening. So probably then what may happen is that gold may move from countries where there are tariffs to countries where there are no tariffs and then to US. So these things may happen, but then what it does is increases the premium, it increases the cost of transportation, something that we've already seen happening.
Oh, well, absolutely. Just coming back to numbers yet again, Chirag, and what a relief of sigh, because we haven't really overshot much higher when it comes to imports in 2024. 711 tons is a number that we can live with.
Yeah, absolutely. And I think that is something which we've always consumed. So on an average, if you look at India's imports, it ranges between 600 to 800, 900 tons and thereabouts. Only in times of, I would say, uncertainties or certain, special events, we see this jump in imports. But usually India's import range between 650 to 800 tons, and this is what we've done this year as well. Despite the strength in investment demand or the resilience of jewelry demand, our imports still range within a range that people would be comfortable with.
The other strong number, Chirag, that I'm looking at the report is the RBI buying. I mean, 4 times more than what we saw in the previous year. How do you look at this very strong one, central bank buying, which continues to be above 1,000 tons, and the India's role in this?
Yeah, I think, what has been very interesting is that last 3 years, central banks have bought more than 1,000 tons of gold on a consistent, basis, something that we've seen central bank move from on an average 550, 600 tons to 1,000 tons. And India has been at the forefront. If you actually look at India is among the major purchaser of gold and among the large countries, right? I think we bought roughly about 70 to 80 tons of gold last year. And I think to some extent, it's 2 parts. One, India is trying to build its gold reserve, but B, also what India is trying to do is move away from dollar denominated assets. Given the volatility that we've seen in US dollar, and also we've seen the weaponization of US dollar, I think a lot of central banks are looking at moving away as much as possible from dollar denominated assets.
Oh, well, absolutely. Chirag, if you break this all down, while jewelry demand has been the highest, investment demand seems to have picked up as well. The recycled gold hasn't really shown a very strong picture. Would you say that even at these higher prices, especially at these all-time high prices, people are holding on to their gold, not bringing into the market?
So that's actually true. And Manisha, I think if you look at it, what has also happened is that probably we did see some bit of recycling gold come out in 2022, 2023. But then people realize that, the moment they keep on selling, the prices tend to go up. So obviously that's there. But also in India, essentially there is a big exchange market, which actually helps. And also the fact that our gold loan market has expanded quite a lot in the last 2-3 years. So a lot of gold is actually getting pledged rather than being sold in the market.
Take that point. Thank you so much, Chirag, for joining in and giving us, the outlook on the gold space right now. The only line that stayed with me, Manisha, was the fact that he said gold is like water. Obviously, it was in a different context, but comparing gold and water was something that, only
Not the way it's priced for sure.
made, a serious amount of money in gold can say that gold is like water. That's what people say, right? But, just keep an eye out on the broader markets. You're doing extremely well. JSW Energy extending its gains, currently at the high point of trade. Dalmia Bharat is the other one. Balkrishna Industries, KPIT Tech, Kalyan Jewelers. So across the board, we're seeing traction in the broader markets. And in the frontline end of things, HDFC Bank continues to power ahead at the high point of trade, taking the Nifty bank higher as well. What does all of this mean for the Nifty itself? From marginally being in the red, it's now moved marginally into the green. So that's the perfect time for us to take a short break, come back on the other side. We have business lunch, take all the market action forward.
आदरणीय सभापति जी, हमने ये जो अलग अलग कदम उठाए, उससे लाखों करोड़ रुपए की बचत हुई, लेकिन उन पैसों का उपयोग हमने शीश महल बनाने के लिए नहीं किया। इसका उपयोग हमने देश बनाने के लिए किया है।
Telling Ukraine they have very valuable rare earth. We want what we put up to go in terms of a guarantee. We want a guarantee. We're handing them money hand over fist. We're giving them equipment. European is not keeping up with us. They should equalize. And look, we have an ocean in between. They don't. It's more important for them than it is for us. But they're way below us in terms of money. And they should be paying at least equal. They should really.
Midcaps push higher even as frontline indices see range-bound trade amid trade uncertainties and ahead of the RBI's rate verdict. Energy and utilities gain while consumption drags. Asian Paints in its investor call points to the challenging demand conditions that will keep volume and value growth in check, especially continuing slowdown in urban centers. The stock gets a coat of red. Titan misses margin estimates following a one-off inventory loss due to import duty revision on gold. The company tells CNBC-TV18 accelerated formalization of the jewelry sector bodes well for the growth. OpenAI CEO Sam Altman engages with Minister of Electronics and IT Ashwini Vaishnaw in Delhi on a potential application for the company's technologies in India. Altman's visit follows the DeepSeek challenge and the copyright issues and tussles with media. The meeting of the RBI MPC begins today, the first under the new governor Sanjay Malhotra. Industry expects the Monetary Policy Committee to deliver a 25 basis point cut on Friday. Hello, good afternoon and welcome to Business Lunch live from CNBC-TV18 Motilal Oswal Studios. I'm Vinny Motiwala and thank you so much for tuning in this afternoon. A quick look at what's actually happening to the markets. While it did open up on the bit of the green side, today what we're seeing is Nifty is moving in a very range-bound trading session. 23,724 is what the Nifty is at, down almost 0.06%. So very range-bound trading session. Contributors, what is supporting the growth? HDFC Bank, ICICI Bank, Infosys, Hindalco is pulling up the markets, while in terms of the top drags, we do have those names coming in from the FMCG side, especially we have ITC, Titan, Asian Paints and SBI, which is among the top drags coming in for the Nifty 50. Now, let's move on and actually look at the mid and small cap, because that outperformance today is coming in from the Nifty mid as well as the small cap. Nifty mid cap holding on to gains of almost more than 1% in trade, almost near that day's high that is trading at, and small cap also holding on to gains of 2% in trade. So outperformance coming in from the broader end of the market. Nifty Bank, let's pull that up because we saw those private bank names coming in and supporting Nifty. So Nifty Bank is also trading in the green comfortably and much better than what the benchmark indices are doing. So Nifty Bank is holding on to gains of 0.5%. Look at some of these earning movers and coming in from the healthcare side and pharma side. We do have Global Health that's managing to hold on to very good gains. That is Medanta. Good numbers coming in from the company, so keep an eye on that. Eris Life Sciences reported their numbers yesterday, but we're seeing a good move continuing in the stock today as well. At one point of time, it was up 10%. Today, also holding on to gains of almost 9% as of now. Other movers, let's keep an eye out on MOSL. There was an update that came in from Angel One, and we have CAMS also that's managing to hold on to gains today. So these are some of the movers that we're keeping an eye out on in terms of trade. But let's get the show started, and we'll talk about certain updates that we have coming in. Now, the CII President Sanjeev Puri as well as Pidilite's Bharat Puri have welcomed the budget as they expect the announcements to boost consumption. The industry is also expecting a rate cut by the RBI on Friday. Listen in to what they had to say.
A very strong point in the budget was the focus on reforms, and which is very critical to unlock the potential of the economy in the medium term. So the journey of economic it's a journey of economic transformation. It's not that things change overnight.
Yeah.
But I think all the factors are favorable. So progressively, we do feel that improvement will happen. And the consumption boost is welcome. I think with the weather being better and agriculture crops being better, and hopefully we are also expecting some, the liquidity part the RBI has been acting on.
Yeah.
We also expect the interest rates to moderate soon.
I would say, Shireen, this budget is very welcome. In our opinion, the economy needed capex, it needed consumption, and it needs jobs. Capex is continuing. Hopefully, consumption will get a boost. It will take 3 to 6 months, but it will definitely get a boost. And jobs will obviously follow both consumption and capex, and hopefully skilling and ease of doing business. So overall, from a demand perspective, I would say we're now positively optimistic rather than cautiously optimistic.
And meanwhile, the steel industry is still hopeful for some protection from for the domestic steel industry, I beg your pardon, and hope to hear from the government soon. Listen in to what was the update coming in on that front.
prices is what gets affected by these unfairly priced imports. I think with the tariffs coming in at this point of time on China, the key issue will be what will be the impact on the rest of the world, because it's not that the Chinese imports or exports made big difference to the steel prices in the US. But I think it will be important to see as to where that goes in. More importantly, the domestic policy and the stimuluses in China is going to determine where the exports come in.
Indian demand, as Kaushik rightly said, is really good. On the medium term to the decadal visibility what we have, I think India is going to see a very good story. So the steel industry has a large opportunity. I think incrementally, Shireen, what we see is that every year, about 15 million tons of demand will be generated additionally. This year, we're going to generate about 14 million tons of demand.
And the top government bureaucrats have played down the threat of US imposing tariffs on India. Finance Secretary Tun Kantapande told CNBC-TV18 at the Budget Verdict program that the apprehensions are unwarranted, added that India has already streamlined its tariffs. Electronics Secretary S. Krishnan feels that India must build a domestic value chain to insulate itself. Listen in.
I think it's right now a wait-and-watch perspective. I mean, on the one hand, straight away you could say that it might be advantageous to us because tariffs may come down more heavily on other trade rivals, so there could be that issue. But if you look at it from another perspective, you could have a scenario where if the sourcing is from the same country, then will you have a problem in further exports? So we are not yet clear as to how this will play out, and we need to be prepared for all scenarios. I think there is reason for hope, and I think there is reason to assume that electronics as an export from India, which has suddenly become very big in especially what we send out to the US, we need to sort of ensure that we build the domestic value chain more significantly and increase domestic value add so that we protect ourselves against any possible pushback on the value addition point of what happens in India.
We should not really anticipate something which is not really stated. The kind of thing which you say, tariff against India, this has not been stated. I mean, if the US admin or anybody has not really stated, so why should we really be saying so? So that will be premature and not warranted, because these are different grounds on which the tariff is being put in. So far as we are concerned, we are a very open economy. If you really look at the US imports into India, most of them are into a very, the tariffs are very low. They're in the range of, up to 10%. They are in 2.5 category, they are 0 category, 0%, 5%, 7.5, 10. Incidentally, if you look at our industrial goods, out of 8,400 odd tariff lines, 6,000 tariff lines are already below 100, close to the ASEAN rates. And these are MFN rates, which are equally applicable to US as well. So therefore, India is not protectionist and neither intends to be protectionist.
Okay, on that note, we're going to step into a very short break. But after the break, when we return, OpenAI CEO is in India and we get you the key takeaways from his event with the IT Minister up next.
But let's say equal to us, and they're billions and billions of dollars below. So we're looking to do a deal with Ukraine where they're going to secure what we're giving them with their rare earth and other things.
Welcome back. Thanks for staying tuned into Business Lunch on CNBC-TV18. Now let's shift our focus to our top story for today. OpenAI CEO Sam Altman is in India and hosted an event with the Union IT Minister Ashwini Vaishnaw earlier today, where actually they were discussing a whole range of topics, including India's role in AI development, increasing opportunities for AI startups. In fact, my colleague Ashmith was at the event and is joining him with us to give us and tell us the key highlights that he's picking up from this. Ashmith.
Well, Sam Altman undertaking a whirlwind tour of Asia is concerned. In fact, from the Korean leg of the journey, he landed in India late last night. This morning, he met with the minister, and they had an interesting fireside where interesting cues being dropped by Sam Altman. Number one, he said that India, there's a focus on the Indian market, given as how it is now the largest market outside of the US, had seen 3x growth as far as 2024 is concerned. Went on to also talk about addressing his comments, his faux pas from 2023, when he had said that it was hopeless for countries like India to develop their own foundational models. Today, he said, he clarified that that was taken out of context. That's not what he meant. In fact, he said that with the falling costs of building these models, there's a great deal of excitement. In fact, even calling on Indian developers, the Indian startup community, the likes of Vijay Shekhar Sharma, Kunal Bal were here. They talked about how there's a role to be played by these Indian startups, by the innovation ecosystems to build solutions such as for healthcare, such as for education, on top of the technology that OpenAI provides by way of its LLMs, its large language models. Also on the question of India and having its own aspirations, that is clearly in focus. As far as India having its own aspirations are concerned, Ashwini Vaishnaw was also here, the IT minister, today said and gave the example of sending the Chandrayaan to the moon, saying that if that mission can be sent at a fraction of a cost that, say, for example, a NASA does, there's no reason why India can't replicate the same ChatGPT, DeepSeek success here in India in a much more cost-effective manner. In fact, on that note, let's go across. Let's listen into those comments coming in from Sam Altman as well as from the Indian IT minister, Ashwini Vaishnaw.
India is an incredibly important market for AI in general, for OpenAI in particular. It's our second biggest market, tripled users here in the last year, but mostly seeing what people in India are building with AI at all levels of the stack, chips, models, all of the incredible applications. So I think India should be doing everything. I think India should be one of the leaders of the AI revolution. It's really quite amazing to see what the country has done and embraced the technology and building, again, the entire stack of things on top of it. Other side of it, the cost for a given unit of intelligence 1 year later seems to fall by about 10x. Moore's Law was a 2x every 18 months for the number of transistors on a chip, and that changed the world if you waited a few decades. But what's happening with the reduction in cost in AI models is extraordinary. Now, I don't think it means that the world's going to need any less AI hardware, because you bring the cost down and just the people are going to use it for a lot more things. The total number of dollars will go up. But, that's a really exciting thing happening.
Every year, it's 10x reduction in the cost of intelligence. That kind of innovation can come from anywhere in the world. Why shouldn't it come from India? That's the point. Oh. And our young entrepreneurs, our startups, our researchers, they are really, really focused on getting that next level of innovation, which will reduce the cost. See, our country sent a mission to the moon at a fraction of the cost that many other countries did, right? Why can't we do a model which will be a fraction of the cost that many other countries do? Our focus, of course, is on all the three layers, and within the applications in healthcare, in education, in agriculture, in weather forecasting, in disaster management, in transportation, multiple different things we are working. And I request the entire startup community to come up with very unique solutions, and we'll be open. We are very soon starting a kind of open competition for it, open empanelment competition kind of thing. So that will be huge. So many problems can be solved, and why don't we use this latest technology that we have for solving these problems, right?
Let's move on. Now, Prime Minister Narendra Modi will be visiting the United States next week, and we understand that Elon Musk is likely to call on the PM. And let's go across to Parikshit, who's joining with us to give us more details on this one. Parikshit, good afternoon.
Yes, the Prime Minister's visit to the United States between the 12th and the 14th of February, that is as early as next week, is a highly anticipated one. And we're getting a sense that Elon Musk, the Tesla CEO, is likely to call on the Prime Minister and the Indian government delegation. Now, this is likely to be a part of a roundtable of US CEOs, which is being organized by the White House. And these CEOs will be calling on the Prime Minister on 13th of February in all probability. Now, what's going to happen in this meeting? We've been told that if this meeting happens, and if there is a one-on-one, it's going to be a positive meeting in terms of messaging, but immediate outcomes may be unlikely. Donald Trump, also because he has Elon Musk in his advisory team, and Elon Musk heads the Department of Government Efficiency. Therefore, both Musk and Donald Trump are going to seek lower tariffs on fully built electric cars being imported into India. Musk has several times in the last few years considered India as a destination, but has complained about very high tariffs. So reducing tariffs and entry barriers to Tesla's cars into India will be one pitch, also seeking a level playing field with domestic car manufacturers in the country. Now, there's not just Tesla. He would also like to seek clarity on Starlink's approvals in the Indian market, when Starlink can begin operations, and also a deeper collaboration between SpaceX and ISRO. So these would be the 3 or 4 things on Elon Musk's agenda. We would also have to see what is the broader partnership, trade partnership, that Prime Minister Modi and Donald Trump work towards.
Okay, Parikshit, thank you so much for the latest update coming in there. Surely an important one to watch out for next week. Now, moving on to some national news update that is coming in from the capital city of Delhi, comes out to vote for Eid's assembly elections. Now, we have Abhimanyu joining with us to give us the latest from the national capital. Abhimanyu?
Voter turnout has already crossed 25% in the national capital. In the past few elections, we have witnessed voter turnout between 50% and 60% in the national capital, though appeals have been made not just by the Election Commission, but also by political parties, celebrities and corporate captains to general voters to come out in huge numbers and cast their ballot. It's not just a holiday, but also insignia and hot air balloons have been put across the city as part of a constant appeal to voters to come out in huge numbers and cast their ballot. Also, voting is being carried out on a weekday, right in the midst of a week on a Wednesday, to ensure that the off which is given to people from work is not misused or not utilized as part of a vacation, in case such an off would have been given at a time around Monday or a Friday. It's a 3-way contest in the national capital, with the incumbent Aam Aadmi Party looking to defend its turf and get a third time lucky. The BJP is aiming to gain from anti-incumbency, whereas the Congress is trying to make a comeback into the national capital. It remains to be seen what is going to be the voter turnout by the end of the day, and based on that itself, which party is going to get a majority in the Delhi Assembly this time around.
Thanks so much for that, Abhimanyu. But let's move on. And we also caught up with the corporate India as they came out to vote and what they are expecting out of the Delhi's new administration that will take charge. Listen in.
It's become a very busy, very crowded, and a city which now gets challenged by the air quality, by the traffic, by the ability to manage its own waste disposal, and the ability to offer people easy living and low cost and no cost entertainment.
Okay, time we step into a break. When we return, we will get you the latest updates from the White House as Donald Trump meets with Israel's Prime Minister. Stay tuned in.
I think we are now getting into a phase where growth will surprise to the upside. The budget reaffirms that. I think this is a growth-oriented budget. In fact, the phrase I've used for this budget is that it's a magic budget, and I'll come to that in a moment. And my expectation is that the monetary policy will back this budget, and the monetary policy will also become growth-oriented. So as far as India is concerned and what we control, I think things are looking up.
I think it is one of the best budgets that we've seen in many, many years, and I tweeted it's a dream budget. So first thing is that you normally want money with the public rather than with government. It should just be the general thumb rule of looking at anything, that money with public is better than money with the government. You have not said that, oh, you cut a tax rate across the board, therefore the rich will get much more. It has come to the correct audience in that sense. So it has to be travel, it has to be savings, it has to be these car consumer durable types. As I said, we are not buying those, but they could.
Presently, taxpayers can claim the annual value of self-occupied properties as nil only on the fulfillment of certain conditions. Considering the difficulties faced by taxpayers, it is proposed to allow the benefit of 2 such self-occupied properties without any condition. To streamline the process of transfer pricing and to provide an alternative to yearly examination, I propose to introduce a scheme for determining arm's length price of international transaction for a block period of 3 years. This will be in line with global best practices. With a view to reduce litigation and provide certainty in international taxation, the scope of safe harbor rules is being expanded.
Welcome back to Business Lunch on CNBC TV18. Let's move on. And U.S. President Donald Trump welcomed Israel's Prime Minister Benjamin Netanyahu to the White House. The two leaders discussed the situation in Gaza. And they later held a joint press conference where Trump revealed that the U.S. planned to take over the war-ravaged Gaza and create a Riviera of the Middle East after resettling the Palestinians elsewhere. Let's listen in.
The U.S. will take over the Gaza Strip, and we will do a job with it, too. We'll own it and be responsible for dismantling all of the dangerous unexploded bombs and other weapons on the site, level the site and get rid of the destroyed buildings, level it out, create an economic development that will supply unlimited numbers of jobs and housing for the people of the area. I can tell you, I spoke to other leaders of countries in the Middle East, and they love the idea. They say it would really bring stability, and what we need is stability. And I don't want to be cute, I don't want to be a wise guy, but the Riviera of the Middle East, this could be something that could be so bad, this could be so magnificent.
On that note, we are absolutely out of time on this edition of Business Lunch on CNBC TV18. Thank you so much for tuning in, but we leave you with some visuals of Prime Minister Modi, who took the holy dip and offered prayers at the Sangam in Prayagraj.
Of senior and very senior citizens have very old national savings schemes accounts. As interest is no longer payable on such accounts, I propose to exempt withdrawals made from NSS by individuals on or after 29th August 2024. I am also proposing to allow similar treatment to NPS Vatsalya accounts as is available to normal NPS accounts subject to overall limits. detail the indirect tax reforms and changes in direct taxes in Part B. Financial sector reforms. The FDI limit for the insurance sector will be raised from 74 to 100%. This enhanced limit will be available for those companies which invest the entire premium in India. The current guardrails and conditionalities associated with foreign investment will be reviewed and simplified. The services of India Post Payment Bank will be deepened and expanded in rural areas. NABFID will set up a partial credit enhancement facility for corporate bonds for infrastructure. Public sector banks will develop Grameen Credit Score Framework to serve the credit needs of SHG members and people in rural areas. A forum for regulatory coordination and development of pension products will be set up. To implement the earlier announcement on simplifying the KYC processes, the revamped Central KYC Registry will be rolled out in 2025. We will also implement a streamlined system for periodic updating.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Well, the indices are quiet, but there is plenty of action in the broader markets, and we'll take you through all of that over the next 30 minutes on Midcap Radar on CNBC-TV18 live from the CNBC-TV18 Motilal Oswal studios. I'm Hormas Fatakia. With me as always is Vivek Iyer. Vivek, good afternoon. It's a quiet day after yesterday's rally, but there is a lot of earnings activity and plenty of action in the broader market.
Absolutely right, Hormas, and the broader markets are showing a healthy green on the screen. Small cap index are up 1.9%, but we have quite a lot lined up on the show. Let's start off with the top headlines. Mid-caps push higher even as frontline indices see range trades and trade uncertainty ahead of RBI's rate verdict. Metal and PSU banks gain while realty drags.
Oil marketing companies are surging today on the back of a positive brokerage note from Goldman Sachs, who has upgraded BPCL and HPCL to a buy and Indian Oil to neutral, and it has set a target for the latter at 110 rupees a share. It says that the FY26-27 setup is improving for these OMCs.
Angel One rallies 7% on the back of its monthly business update. The company's client base increases 2.1% from a month ago. Number of orders also rise 5.4% compared to last month.
Metropolis gains after its third quarter results. Revenues are up 11% on a year-on-year basis. Margins are flat. Management in its earnings call said that they are looking at inorganic opportunities, which are independent labs in cities with a high ROCE and high EBITDA margins.
Q3 numbers weigh on JK Tyre. Stock under pressure as material costs weigh on earnings. Margins declined 630 basis points while profit falls 77% on a year-on-year basis. Welcome to Midcap Movers. Like we mentioned, this particular segment, what Vamakshi will do for us. She's standing by the wall. Vamakshi will highlight all of the top stocks in the broader end of the markets that are making the moves. Vamakshi, over to you.
Well, Vivek, the broader end of the market is doing quite well in trade today, outperforming the benchmark indices. The Midcap index as of now is up nearly 1%. And on that note, let me pull out the list of the top gainers today. Jubilant Pharmova, that stock is seeing an uptick of almost 10%. In fact, this is the biggest intraday advance since September 2024 for the company. Eris Life Sciences is another big mover. The stock is close to the highest point of the day, up nearly 8%. And this is the biggest intraday advance since May 2021 for the company. Jyoti CNC also seeing a strong uptick of 7%, Vijaya Diagnostics also nearly 7% higher. Apart from that, as a theme, we're seeing all of these capital market theme stocks abuzz in trade today. Motilal Oswal is seeing a surge of 14%. Angel One on the back of a good monthly update is up nearly 7%. KFIN and CAMS both are up somewhere around 7 to 8% in the trading session today. Let's also look at some of the stocks that are reacting to their numbers. We have Global Health, that is Medanta, reacting to a good set of numbers. That stock is seeing an uptick of almost 9%, trading at the highest point of the day. Maxfin is another counter. Prism Johnson is also seeing good gains. On the flip side, we also have Fine Organics. That stock is down and out nearly 5%. And JK Tyre is also seeing a mild uptick, a mild downtick rather, of 1.79%. Next, let's also look at some stocks that are moving on the back of strong volumes. We have IGL in focus, very strong volumes out here. The stock started at the day's lowest point and now is trading much higher, 5.6%. Hin Zinc trading at the highest point of the day, up nearly 6.8%. Nippon Life India and Fortis Healthcare are some other counters that are abuzz in trade on the back of strong volumes as well. And lastly, let's take a look at the stocks that are declining in such a strong market. That includes Thermax. The company reported a weak set of numbers during market hours yesterday. The stock continues to tank in trade today. Phoenix Mills, Sirma, SGS Tech as well as Soba are some other counters that are down nearly 4 to 5%.
Vamakshi, thanks a lot for that. It just get you a sight on the rupee as well. That continues to tumble towards record lows, are crossing levels of 87, and we'll get to the rupee in just a bit as the show goes by. But corporate conversations continue on the show today. There you can see the rupee now 87.33 on the currency. But Lemon Tree Hotels is the stock that we are putting the spotlight on after a good performance in a seasonally strong quarter. The company also reported its highest ever revenue, EBITDA and profit during the quarter as well. To discuss this and more, we are being joined by Mr. Patanjali Keswani, who is the Chairman and Managing Director at Lemon Tree. Mr. Keswani, good afternoon. Thank you for joining in. Let's start off with some multiple short questions actually. What has been the occupancy rate this quarter? 1. What do you see that going into this fourth quarter? 2. And how has Orica picked up during the quarter? Because your occupancy in the end of the quarter was at 71%. Do you see that going further higher?
Good afternoon. Well, we closed this quarter at 74%, which is about over 8% over the previous year same quarter, which was 66%. Orica had just been launched in the previous year same quarter, and it had done about a little under 40%, and this year it did 72%. So overall, it was obviously, it deflated our occupancy. We would have, without Orica, we were a little higher than 74.5%. But how going forward, I see Orica just going from strength to strength. So this quarter, certainly it will do much better than Q3. And as a company overall, we will also do much better than Q3. And in fact, I don't like to give guidance, but this Q4 will be the best ever quarter in the history of this company.
Mr. Keswani, you're saying that Q4 will be much better than Q3. Q4 will be the best quarter. Earlier, you had given an FY25 revenue guidance of 1,250 crore at over 50% margins. In fact, the 9-month margins at 47%. Will you be revising that guidance upwards, and can you give a fresh guidance as far as FY26 is concerned?
No, I don't want to give guidance. Well, I think Q4 will be such that we will be, what I had said is we will be around 50%, and I think I stick to that. We will be around 50%. And as far as revenue goes, well, for the full year, I have some numbers here. Let me have a look.
Sure, sir.
For the full year, yes, I think we will be there, if not slightly better.
We'll be there, if not slightly better, Mr. Keswani. Interesting. Well, how would your you split your growth for the future in between your ARRs and occupancies. Here, ARRs were up 7% during the quarter, and you had also mentioned that both ARR and occupancies will increase drastically in the second half. What are you penciling in for FY26?
Well, that's guidance. I don't want to give it, but I can tell you FY25 Q4 will be outstanding. And I'm pretty sanguine that this performance will continue into Q5. The advantage into the next financial year. The advantage of, what will happen is two things. Aurika will get fully stable next year, as it's showing signs already in Q4. And the Keys portfolio will start giving significantly higher returns. So these two added with the normal growth of the remaining portfolio, which is normally over 75% anyway, should lead to a significant improvement in FY26 over FY25.
Understood that, Keswani. So you're expecting occupancy rates to improve. Give us an expectation in terms of capacity addition. What is it further that is expected, especially when you're talking about Aurika as well as the Keys Hotel? Occupancy, could you give us a trend? What is it that you're anticipating? Also, as far as your entire portfolio is concerned, what are the number of rooms that have been refurbished and how are the economics of the renovated rooms playing out?
So we have, as I had said, I think earlier, that we want to refurbish all the hotel rooms we would have normally done during COVID. So those 2 years and then continuing into 1 year after COVID, where our balance sheet was obviously in a repair format, we were not able to renovate anything. Now, typically in those 3 years, we would have renovated 50% of the portfolio, of our own portfolio, which is 3,000 rooms. So including catch-up, because every year we renovate 1/6, we are planning starting from last year, this year, and the following year to renovate about 4,000 rooms. Okay. And that costs typically 7.5 lakhs a key. So basically 300 crores in renovation. And I think when that gets over, then we'll go back to our normal renovation, which is about 1.5–2% of revenue. And therefore our EBITDA margins will then, on a very sustained basis, cross 50%. And actually, well, if things continue as they are, then it will be north of 52–53%.
One final quick question, Mr. Keswani. You're expecting fourth quarter to be a historic one. So what does that do to your debt? You had around 18 to 1900 crores at the end of the first half. Where does it stand now? And do you tend to bring it down over the future?
No, what I had said is we'll be debt-free in 3 to 4 years, which I'm sticking to. Of course, if we list Fleur, which is our joint venture, where we own a majority, if we list it in the next year or two, then we will go debt-free instantly. Our total debt by the end of this year will be about 1,600 crores, and next year will be 1,200, maybe 1,200, because we are spending a fair amount in capex, as I said. So our target is very simple. I think the ideal debt to EBITDA should be less than 2. So we will be well less than that.
Okay, Mr. Keswani, thank you so much for joining us. You're facing a paucity of time. Else would have loved to ask you many more questions, but we'll get you soon on the channel to get further insights into the business. Let's now slip into a short break. On the other side, Lata will focus on the rupee as it continues to remain under pressure, as it is now trading at a record low.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
We've had a lot of evidence so far that Trump's tariffs are looking transactional rather than actual tariffs. In other words, we've seen tariff announcements for Colombia, for Mexico and Canada, all either reversed or delayed. And the only country where we really do have increased tariffs with retaliation, of course, is in China. And so I think that's generating a huge amount of uncertainty. I mean, investors do not like uncertainty. Companies don't like uncertainty.
Welcome back to Midcap Radar. Well, one very important development has been the further weakening of the rupee. Lata is here with more details.
The rupee's fall is a shocker today because overnight we actually saw the dollar falling from an overnight level of about 108.6 or thereabouts. Today, early morning trades, it was at 107.6. It was a 1% fall. The expectation was also that because the FPIs bought after a long gap, almost a month's gap, you had a positive 800 crore purchase figure. The expectation was that the rupee will be stronger today, but that was not to be. Actually, in early morning trades, even the yuan, which was opening after the lunar holidays, and other Asian currencies seemed a little under pressure versus the dollar, which was surprising. But late afternoon, the way in which the rupee weakened came as quite a shocker. So it looks like FPIs are pressing sales. It also looks like, or at least the dealers tell us that offshore markets are almost taking on the RBI. So they still believe that there is a scope for the rupee to weaken. And there are even dealers imputing motives saying that Indian dealers are taking money from the Reserve Bank in repo and buying dollars, arbitraging with the offshore market and thereby adding to the pressure on the rupee. Be that as it may, it looked at one point that the rupee will go towards 87.50 mark, but around 87.47, we appear to have seen the hand of the Reserve Bank because there was a bit of natural support coming for the Indian rupee. But clearly, whatever the growth positives we have in the budget or the rate cuts, whatever softness we saw in the dollar, all that is not enough. The rupee is still under pressure.
Indeed, is under pressure. 87.40 now is the currency. Lata, thanks a lot for that. Take a short break. The management of Symphony joins us on the other side to discuss their Q3 numbers and the road ahead. Stay tuned.
Where we go from here, I do not assume that we've seen the end of any possibility of tariffs on countries like Mexico and Canada.
But my word, the speed of events is very confusing, and investors, I think, are therefore very nervous about it. And it's interesting, the US is underperforming the developed markets this year. As you've noted recently, the dollar's lower. So this is all, I think, creating a lot of uncertainty, which I think will have an impact on investor behavior.
कुछ लोगों को अब जब एआई की बात होती है, कुछ लोगों को अब ये शब्द फैशन में है तो बोला जाता है, लेकिन मेरे लिए सिंगल एआई नहीं है, डबल एआई। भारत की डबल ताकत है। एक एआई आर्टिफिशियल इंटेलिजेंस, दूसरा एआई एस्पिरेशनल इंडिया। हमने स्कूलों में 10,000 टिंकरिंग लैब्स शुरू किए और आज उन टिंकरिंग लैब से निकले बच्चे रोबोटिक्स बना करके लोगों को चकित कर रहे हैं। और इस बजट में 50,000 नए टिंकरिंग लैब्स उसका प्रावधान किया गया। भारत वो देश है जिसके इंडिया एआई मिशन को लेकर के पूरी दुनिया बहुत आशावादी है और विश्व के एआई प्लेटफॉर्म में भारत की मौजूदगी एक महत्वपूर्ण स्थान प्राप्त कर चुकी है।
This was the third consecutive year that the BMC budget was presented to an administrator and not to a standing committee. Why? Because the term of the corporators ended in March 2022 and the elections for the new term and the new corporators are yet to be held. Now this 74,427 crore rupees budget, out of this an allocation of 43,162 crore was made for capital expenditure. 5,100 crore rupees for roads and traffic department, 5,807 crore rupees for Mumbai Coastal Road project, 3,039 crore rupees for storm water drain department and 650 crore rupees for sewage operation department. For key public services, rupees over 4,000 crores were allotted to education department, over 7,000 crore for health department, 261 crore rupees for fire department, 309 crore rupees for disaster management and 220 crore rupees for the garden department. BMC announced that it's going to start 250 new
Welcome back to Midcap Radar. Well, a few minutes back, you saw the results of Symphony, the Q3 FY25 results that came by. It was a weak set of numbers, but we now have the management. Mr. Rupee Shah, the MD of Corporate Affairs at Symphony, joins us now. Mr. Shah, anyway we look at these numbers, it appears to be a muted set. Earlier, you had indicated at the end of Q2 that there was a demand spillover, especially as far as the domestic business was concerned. This time around, the revenue decline in the domestic business seems to be a bit of a negative surprise. What exactly transpired over here? In fact, in Q2, you saw a 24% growth in that particular segment of the business. What exactly has transpired?
So as far as demand is concerned, it's very robust. There is a decent traction across the geography, across the trade channels. However, what has happened, as on 31st December, we are sitting on record unbilled advances, and unbilled advances are far higher than even our domestic sales, what we achieved in December quarter. In fact, it is more than 2.5 times of our historical December and domestic unbilled advances. What has happened? Most of those advances pertain to new models and new models production. Their dispatches we have lined up since middle of December and January, and hence there is a spillover of actual dispatch and sales to March quarter. as far as consumer sales are concerned. That happens during summer. So by this spillover, there is zero loss in terms of the end-to-end sales and profitability.
Mr. Shah, good afternoon. Thank you for joining in. You said demand is robust and you also spoke of unbilled inventory, unbilled advances. But that happened from the middle of December, right? But for the better part of the quarter, was there a lack of demand that led to this revenue drop that you saw during the quarter?
No, what I said, from middle of December, our new models production commenced. As far as advances and collection are concerned, they have continued throughout the quarter. But we could not bill and dispatch them because production of new models, and most of those unbilled advances pertain to new 17 models that was and has been lined up since middle of December and current month, that January and February, and hence there is a spillover of sales.
Mr. Shah, I wanted to get to your provision that you have made this quarter, this 46 crore rupees for doubtful debt, which is for Messrs Pathway Retailers. You've mentioned that the provision for this account is fully complete now. How much have you provided for so far, including the 46 crores this time? And do you expect this amount, whatever that is, if you could tell us, to be recovered anytime soon?
It has been now fully provided for. So whatever was the net receivable, in addition to that, in earlier quarters also, we had provided for as required by accounting standard, which was in September quarter, June quarter, as well as March 24 quarter. All put together, including 46, it's about 58 crore, and now no more provision, no more receivable remains to provide for on Pathway.
Okay, Mr. Shah, you've said that demand remained robust as far as the new models were concerned, but you are unable to ramp up your own capacity and the operations. Q4, what is the status of operations? Have you started deliveries? How's the inventory in the system? Number two, the second question is, what is the situation as far as the subsidiaries business is concerned? We continue to see demand weakness over there. When do we see that recovering?
So there is no question of ramping up the production capacity. When we design and develop new models, they were always slated to launch since middle of December, because these new models were launched only in July, August of current year and were slated to produce like this. And they are fully as it was expected. And we are very confident that in current quarter, entire unbilled advances and whatever additional orders we will receive, whether for existing or new models, we will very much be in a position to sell as well as dispatch, and we are slated for quite decent March quarter sales and performance as per all the signals. Coming to subsidiaries, yes, climate technology is not performing well, as it is very clearly evident. In climate technology, phase 1 of CODB reduction has already materialized. Phase 2, launch of new models converting into asset-light, capital-light, is now complete, and we expect its result to bear the fruit in the quarters to come. However, as you can see, IMCO Mexico as well as GSK China, both in 9 months and during the quarter, along with Brazil, have done very well. In fact, GSK China is a phenomenal turnaround story. Otherwise, GSK China was also at a similar stage where the climate technology is currently. And same about IMCO Mexico few years before. So, barring climate technology, IMCO Mexico and GSK China are performing well.
Right. All right, Mr. Shah, thank you so much for sparing time joining us today on the show. Wish you good luck for the road ahead. That was the management there of Symphony talking to us about the quarter gone by and the road ahead. By the way, numbers of Page Industries on your screen, a profit of 35% at 205 crores. EBITDA is up 34%. The stock seeing a surge from these numbers. At the highest point of the day now is Page Industries. It has also declared a dividend of 150 rupees a share. So keep Page Industries on your radar at the highest point of the day after its quarterly results. But with that, it's a wrap on this edition of Midcap Radar. From Vivek, me and the team that put this show together, thank you so much for watching. Your stocks on the other side.
Also known as Apla Dawakhana, all over the city. One interesting initiative announced by the BMC was the introduction of cyber awareness program for students. It will serve two key purposes. One will be to ensure that the students learn how to use the internet in a safe manner and to keep them safe from cyber fraud. BMC also focused on environment initiatives and projects like promoting eco-friendly cremation and proper disposal of residue from idle immersion. These are the projects which will take place under environmental related initiatives in the next few months. We also spoke to Bhushan Gagrani, the BMC commissioner himself. This was the first time that he presented the BMC budget. Listen to what he has to say about this BMC budget. So your budget also mentioned that you guys are planning on imposing a tax on the commercial properties in slum areas.
That's right.
If you can elaborate that. So from when this new tax will be levied?
It is actually not a new tax. In fact, we are enhancing our assessment net. Under the assessment net, the properties which are in the slum, however, which are being used for the purpose of commercial, they were not covered. So this is for the first time we are doing the survey and bringing them in the tax net. Not necessarily that we will be imposing huge tax. It's a normal tax. It's not a very huge tax. However, the coverage will be given to our commercial properties.
So BMC has not introduced any new project this time. In fact, you have focused. Correct.
Yeah.
But sir, does it mean that is there any cause for fiscal concern, sir?
No, there is no fiscal constraint. We have enough adequate cash flow as well as resources.
हमारे देश में एक प्रधानमंत्री हुआ करते थे, उनको मिस्टर क्लीन करने कहने की एक फैशन हो गई थी। उस प्रधानमंत्री जी को मिस्टर क्लीन कहने की फैशन हो गई थी। उन्होंने एक समस्या को पहचाना था और उन्होंने कहा था कि दिल्ली से 1 रुपया निकलता है तो गांव में 15 पैसा पहुंचता है।
Hello, good afternoon, and thank you so much for tuning in to CNBC-TV18. You're watching Your Stocks with me, Vinny Motiwala, coming from the Motilal Oswal studios. Let's take a quick look at just the market, what it's doing. Nifty as of now is trading with gains of 28 points, up 0.1%. So yes, that range is where the Nifty is continuing to move in, right? Not much of an up move, down move from that, but recovered from the day's lowest point, and in that range is what the Nifty is trading at. Broader markets that continue to see an outperformance coming in. Page Industries reported their numbers. Margins seem quite strong as well, 23% versus 18.4%, and Hormuz was marking there a short while ago. But on that note, let's get started with the show, and this is a show where we solve all your stock-related queries. And to solve all of that, today we have our experts joining with us, Ruchit Jain from Motilal Oswal Financial Services, as well as Partha Shah of Tracom Stockbrokers, to solve all your stock-related doubts. Thank you so much, gentlemen, for joining in with us as always this afternoon. And I'll start with the first query for today, and this one is coming in on Zomato. We have Sheetal Jain, who's writing to us from New Delhi. She's holding 80 shares of Zomato at a price of 120 rupees per share. Wants to know if she should continue to hold this or maybe look to exit it currently. The stock is trading at 233 rupees. She's making a good amount of profit. Partha, let me take it to you first. Good afternoon, and what's your view on Zomato?
Good afternoon, Vinny, and good afternoon, all our viewers. See, I think if you see what has happened to Zomato is after they talked about raising additional 8,500 crores by the QIP, I think they already had a 10,000 crore kind of watches. They probably realized the fact that the quick commerce competitive intensity is going to increase, and there could be more cash burn in order to ensure that they retain and try to grow their market share and try and also increase their gross order values. But I think this is kind of played out likely in the last quarter when we saw that the results were slightly dampener in the quick commerce space. We are also seeing a lot of other unlisted peers like Zepto who have raised a lot of funds. Swiggy raised funds through IPO, and now besides these three, I think a lot other bigger, deep-pocketed players are talking about entering big time into a quick commerce space. I think that is the reason why Zomato has kind of languished from its very high levels. We believe next 2-3 quarters, I think, could be a little challenging for players like Zomato. It'll be very interesting to see whether at all, they're able to mitigate the cost and whether they're going to burn further cash or not. So our sense is, I think, probably partial book your profits. You're almost more than doubling your money and leave the rest of the position for long term.
Okay, Sheetal, can partial book up profits? Maybe some bit of the competition, quick commerce side concerns, in terms of the competitive intensity. That's a factor that is also highlighted here. But, Ruchit, let me come to you. Same story, what is panning out on the charts and technicals as well. Last 1 month, 12% decline. That muted and sluggishness is what has come in for Zomato stock. What are you expecting?
Yeah, hi, very good afternoon. Well, we have seen a corrective phase in last 1 month, but if we look at some longer term charts, then this just seems to be a correction within an uptrend. One should not forget the stock had also seen a very sharp up move right from around 60 rupees in April 23 to 300 rupees without any corrective phase. So I think this is just a correction within a long term uptrend. We anticipate that we might time-wise correction at least for next 2 to 3 months, where the stock would continue to trade within the range of 200 to 260 to 70 on the higher side. So if it's a long-term view, then I would recommend to continue to hold on. And if we get any near-term dips around that 200, 195 range, that would be a good opportunity to add more positions to your portfolio.
Okay. Let's move on to the next query for today. That is on ITC. We have Rajiv Sharma who's writing to us from Chandigarh, holding 50 shares of ITC at a price of 150 rupees per share. So really making a good amount of profit right now. 447 is what the stock is trading at. Wants to know what is the outlook on the stock going forward. Partha, let me take it to you first. ITC, what's the view coming in on this? Normally during those budget times, you wait out if there's any cess or duty coming in. That's not there even this time. ITC as a stock, moved on to 450 levels around that. What are we watching out for now? Should the viewer continue to hold or book out the profits?
Oh, yes, absolutely. I think the viewer should hold on to the stock, especially his cost price is so low. He locks in almost a dividend yield of 8-9%. Besides that, I think what we really liked in terms of the outcome of the budget is that the government has not really overburdened the organized sector in the cigarette space with more taxes and cesses, because I think that kind of deters and encourages a lot of illicit trade in the cigarette space. I think that is something that the markets will like, and even players like ITC will try to take a lot of advantage in terms of market share gains, and they have been the market leader for like unprecedented times. And more importantly, I think their FMCG business should also get an impetus, because we know for the fact that ITC has a more urban-centric FMCG space, FMCG business, and they are targeting more of premiumization. And thanks to the tax cuts availed in the budget, I think this will certainly benefit a lot of players like ITC. So I think two key business components doing well over the time. I think we believe at 25 times forward earnings, ITC is not very expensive. Certainly hold on for the long term.
Okay, hold on for the long term. That's the word coming in, Parthiv. And for you, Ruchit, the ITC, we should continue to hold for the long term?
Yes, I have a similar view that, price-wise also, if we see last 2.5 years, the stock has relatively done quite well. Although last 6 months, the stock has been consolidating within the range, but it has not reached any of its long-term supports yet. 420, 430 immediately is the near-term support level for the stock. Until those levels are intact, I don't think he should worry about it. And since the buy price is very low, I think he has a good margin of safety that in case if he sees some sort of corrective action too, unless it changes its long-term trend, I think he can continue to hold on to this one.
Okay, I'm just going to mark the flashes and what our ticker team is flashing right now. Rupee is trading at record low levels, so just keep an eye out on that one and where that is headed. 87.48 is what the rupee is trading at, record low. But continuing with the next query then, and let's talk about Adani Green. That's the next query what the viewer has on, and Lakshmi Rao is writing to us from Kolkata, holding 25 shares of Adani Green. Price is 2,315 rupees per share. Wants to know whether to hold, sell. What is the view coming in on this one? Parthiv, your view on Adani Green on the fundamentals?
We are upbeat on the very long-term fundamentals of this company because currently, as we know, this company houses renewable energy capacity of around 11 gigawatts. And I think the company is given a very, very ambitious targets of touching 50 gigawatts by 2030. I think we are penciling that even if it were to come by 2032, I think that that is one of the highest capacity additions in renewable energy space by any other company in the country. And I think we have seen the past track record of this group in terms of the execution skills and how well they can execute. I think these are fantastic assets that they're creating. And I think the budget had a lot of impetus coming from the government to kind of give a huge encouragement to this space. And I think this is a company which has a lot of ecosystem in terms of backward integration as well within the other group companies. So we are upbeat on this name for very long 5-year horizon.
Okay, and your view on this, Ruchit? Adani Green, what should the viewer do? Continue to hold, look to sell? They're making a loss right now.
So technical structure is not that positive. We have seen a lot of low bottom structure in the stock, and whatever pullback moves we are witnessing in between, we are not witnessing any volume-based up moves in the stock. So unless we see any kind of volume-based up moves, I would suggest a sell and rise kind of strategy to keep in this one. Resistance for the stock is now around 1150 to 1200 range. So if we get any pullback moves in between towards that range, technical view would be to take an exit from this one.
Okay, sell on rise kind of a view. That's a word coming in from Ruchit on Adani Green. But on that note, we're going to step into a very short break. But after the break, we'll bring you our special segment. That's the Growth Code, an initiative by Grow and CNBC-TV18. We'll address your questions on how to navigate the market and make informed trading decisions. So stay tuned in.
उस समय तो पंचायत से लेकर पार्लियामेंट तक एक ही पार्टी का राज था। पंचायत से पार्लियामेंट तक एक ही पार्टी का राज था और उस समय उन्होंने सार्वजनिक रूप से कहा था कि 1 रुपया निकलता है 15 पैसा पहुंचता है। बहुत गजब की हाथ सफाई थी। पंद्रह पैसा किसके पास जाता था ये देश का सामान्य मानवी भी आसानी से समझ सकता है। आदरणीय सभापति जी, देश ने हमें अवसर दिया, हमने समाधान खोजने का प्रयास किया। हमारा मॉडल है बचत भी विकास भी। जनता का पैसा जनता के लिए। आदरणीय सभापति जी, आजकल मीडिया में ज्यादा ही चर्चा हो रही है, सोशल मीडिया में और अधिक हो रही है। कुछ नेताओं का फोकस घरों में जकूजी पर, स्टाइलिश शावर्स पर, लेकिन हमारा फोकस तो हर घर जल पहुंचाने पर। आदरणीय सभापति जी, हमने ये जो अलग अलग कदम उठाए उससे लाखों करोड़ रुपए की बचत हुई, लेकिन उन पैसों का उपयोग हमने शीश महल बनाने के लिए नहीं किया, इसका उपयोग हमने देश बनाने के लिए किया है।
Welcome back, and it's now time to focus on the Growth Code, a special initiative by Grow and CNBC-TV18. Whether you are new to trading or a seasoned professional, our goal is to provide you with actionable insights and strategies to navigate the market and make informed trading decisions. We still have with us Rupee Jain of Motilal Oswal Financial Services, and we also have Vaishali Parekh, Vice President at Technical Research and at Prabhudas Leeladhar, joining in with us to help you solve all those doubts. Thank you so much, Vaishali, also for joining in with us on the show right now. Let's get started with the first query right now. We have Nikhilesh Das, who's writing to us from Chennai. Now, he's saying that he's recently started trading a small capital, but finds himself taking big positions, hoping for very quick gains. Now, he made some profits initially, but now he is back and facing some losses. They are wiping out his gains, and he wants to know, what should he do? What should he decide the right position in terms of the size to avoid blowing up his account? Vaishali, good afternoon, and let me take this to you first.
Hi, very good afternoon, Rupee, and thanks. This is a myth, actually. I feel everyone thinks that, it's very easy to have quick money and over leverage your position, but that is not so. I think the ideal way is to definitely look for good quality stocks and buy at an appropriate level, because that is what is going to make wealth. But if trading is your preference, then one should have disciplined trading with all the rules. And it's always a known thing that, yes, only put in your money to what you can. It is no point, because when you are over leveraging your positions, in stress, you will not make a right decision, and you may sometimes even make wrong ones. So I guess disciplined trading is a must.
Okay, your view is disciplined trading is a must. Ruchit, what would you advise the viewer to do at such a time?
So I think this is a very common mistake amongst traders, especially the traders who don't have much experience. That when they get some 2 or 3 trades where they make money, then they tend to invest big sum of money in their next trade. But all trades will not work out. So I think focusing on money management is key to accumulate wealth over long term, even in trading. So avoid taking any big positions on any single trade, and rather keep a fixed stop loss on each and every trade. So you should adjust your quantity accordingly, so that you do not lose out much in any single trade. So that would be my advice, to focus more on money management, and that should work quite well for him.
Okay, focus on money management also is an advice coming in. Let's move on to the next query. We have Mithila Jain, who's writing to us from Jaipur. Now, she says that she has heard about 2% rule for risk management, but doesn't know how it applies to her trading. She wants to know if this rule will limit her profit potential, and also wants to know how to balance the risk management along with maximizing gains. Richard, let me take this to you first.
So 2% risk management says that whatever entire trading capital you have, on each and every trade, you should not lose more than 2% of that entire capital. So your stop loss is 2% of the capital that you're holding. So what would happen that keeping this 2% stop loss will limit your losses and not only gains. So look at from that perspective, that in case if the positions go wrong against you, then you would not have any bigger losses if your losses are limited over there. What you can do is during the trended phases, for example, when the markets is in an uptrend, and if you are going long or riding the trend, the stop loss, you can keep it limit to 2%, but not necessarily you would book profits in 2 or 3%. So if you are in a trended phase, then keep trailing stop loss method. So that will help you out to limit your losses. And at the same time, you would have a good balance between the risk management, and you can maximize your gains over there.
And Vaishali, your view on this as well, what would you advise the viewer?
So 2%, of course. Now, this is subject to your the time period that you're following. So if it is for a shorter term and if 2% is what you have decided, then first of all, you look for the trade whereby your risk reward is ratio is favorable. It's not wise to choose a trade whereby you get 2% gain and 2% stop loss. So making an entry at an appropriate level whereby 2% is affordable, that should be the trade which one should focus on, and then right through the rally till you get a reversal. So that is how you will be able to maximize your profit and have a disciplined trade.
Okay, let's move on to the next query. We have Mohan Kumar, who's writing to us from Kerala. He says that he trades on leverage to increase his profits, but he has had some losses that were much bigger than what he had expected. Now, he asks that how does leverage actually impact the position in sizing, and how can he avoid taking too much risk on this? Ruchit, your view?
So leverage does have an advantage that you can make a larger percentage of money on your invested capital, but at the same time it comes with that higher risk as well, where in case if the trade goes against you, then your losses could also be big. So I would suggest that avoid too much leverage on any single particular position, and do not hesitate to miss out the trades where the losses could be big. So that again, that here the risk management comes into the picture. That if you think that the stop losses are too big from your buying price of any particular trade, so do not hesitate to miss out such trades and rather focus on only those trades where the losses would be limited.
Okay, and let's move on. And Vaishali, your view on this?
So I would say, first of all, leverage stocks, I mean, when you're leveraging your stocks, it works well only in a trending market. But the trader has to be very quick when he or she tries to see that, yes, there is some reversal. I think there should be no hesitation in exiting the stock, because once you get into that trap, then it is going to be an endless saga of going through losses. So if it is a leverage, over leverage, or you're taking a MTF or money from outside, I think it works very well in the trend. So you should know your trend, and if there is any adverse movement going on, please exit. So that is the way to do it.
Okay, let's move on to the next query. We have Arundhati Iyer, who's writing to us from Bangalore. She says that sometimes she's adding to her loss-making trades only in the hope that actually one would start recovering later. She's asking if she should cut her losses sooner, and what is the best strategy to manage capital in a speculative trading. Vaishali, what's your view on this one?
Again, I think for such trades, I think full knowledge is really essential. So I guess if she's interested in doing this kind of trading, technical analysis is the way to go, because that is the only way where you will be able to follow your disciplined trading, making your own strategies, because random thinking of entry and exit will never help.
Okay, and your view on this one, Ruchit? What should Arundhati be doing?
That's very difficult to find out that which stocks you should average and which stocks you should not. So typically one way of to find out that is when the stock is correcting, you should see whether the stock is in a downtrend or that correction is just a corrective phase within an uptrend. So look to average out stocks only when you find out such stocks are correcting within an uptrend, and avoid averaging stocks when they are in a downtrend. So there is a in technical analysis Dow theory which you can follow, which would help you to find out the trends. And if the stock is in a downtrend, then definitely you should avoid averaging such names.
Okay, let's move on to the next query then. We have Rajat Arora, who's writing to us from New Delhi. He's saying that he trades a mix of speculative and relatively safe stocks, but doesn't have a clear strategy actually for allocating his capital between them. Now, he wants to know if there is a recommended way to divide his portfolio to balance the risk and reward. Vaishali?
So I would say first, your main prime focus should be on investments. And the balance, so I would say 60% of investment, 20 to 25% of positional trading, and 20% of aggressive trading. So that is how I would say, because at least that way you can, afford to make these trades. Because if you're putting your full chunk of money in trading, I don't think there will be anything left if you don't follow any strategies. So I would say that yes, first get into investment, and once you start making money, then start taking risks.
Okay, and your view on this, Richard, what should the viewer be doing?
So I think when it comes to allocating between the relative safer stocks and the riskier stocks, you can use that 60-40 rule where 60% of your capital goes to safer stocks which are not very high beta, and 40% of your capital goes to a bit high beta stocks. But of course, money management should be done in that too. But in the bull markets, you can lean to be more speculative when we are in a trended phase, and when the markets are in a corrective phase, I think you should shift more towards the safer holdings.
Okay, that's the view coming in from Ruchit also on the query. But, that was the last query for today. So thank you so much, Vaishali, as well as Ruchit, for joining in with us on the show and helping solve all our viewer-related doubts. But that's all the time we have on this edition of Your Stocks on CNBC TV18. Remember, you can always write to us on the email address that is flashing on the screens. And remember, experts will take these queries and solve all your doubts. But with that, we're out of time. Thank you so much for tuning in. Closing bell up next to take you through the last hour of trade.
We're telling Ukraine they have very valuable rare earth. We want what we put up to go in terms of a guarantee. We want a guarantee. We're handing them money hand over fist. We're giving them equipment. European is not keeping up with us. They should equalize. And look, we have an ocean in between. They don't. It's more important for them than it is for us. But they're way below us in terms of money. And they should be paying at least equal. They should really be paying much more than us, but let's say equal to us, and they're billions and billions of dollars below. So we're looking to do a deal with Ukraine where they're going to secure what we're giving them with their rare earth and other things.
Welcome to India's #1 budget headquarters. Decoding key policies, delivering market-shaping insights, and unlocking the potential of India's growth blueprint. Beaming live from the CNBC-TV18 Motilal Oswal Budget Headquarters.
Nikkei is absolutely flat. The Kospi, though, is trading with gains of over 1%.
Immediate resistance will be the upper end of the falling channel from the highs, which is 23,790.
2 lakh voters are just in the age group of 18 and 19 years old, which is a very interesting demographic.
Almost 23,800 there, 40 high. The Sensex is up about 85 points.
I think the structural story is quite intact in the case of the MCs.
Growth, which we typically look at every year, is in the ballpark of 20% from an annual point of view.
The stock is corrected about 30% from highs, but still trading anywhere between 48 to 49 times FY26 price to earnings.
They expect mid to high single digit, if not double digit numbers coming back very quickly.
We'll have to wait and watch in terms of where the consumption levels kick off.
CEOs will be calling on the Prime Minister on 13th of February in all probability.
Voter turnout has already crossed 25% in the national capital.
It's a quiet day after yesterday's rally, but there is a lot of earnings activity.
Well, there is a lot of earnings activity. That is the day so far. This is Closing Bell, and we are coming to you from the CNBC-TV18 Motilal Oswal Budget Headquarters. Markets are blinking red and green, at least on the Nifty. It's like a traffic signal. But broader markets are surging. I'm Prashant. With me, my colleagues Nigel, Rupee, and Rima. Guys, hi. Good afternoon.
Hi. Afternoon. What a strong session for the mid and the small cap stocks.
Yeah, absolutely, because it's all about individual, stock movers today more than the index level action. Index, I think, is consolidating, trying to digest some of those gains.
Yeah.
Individual stocks flying away.
Well, that's right, and I think we made this point earlier today as well. The broader markets have underperformed. Now, in fact, maybe if the market stabilizes, the headline index, maybe the broader markets outperform, and that's precisely what's happened. A reverse of what we have seen in the last few days. Headline otherwise was doing relatively better, and the broader market's under some pressure. So your portfolio will be feeling quite good. 3:1 to the advancing stocks.
Just to quickly take it from the top, Nifty flat, Bank Nifty slightly higher, about 0.4% in the green. I'll just put out the levels straight up. Nifty resistance is at about 23,790. We, by the way, crossed it today. Then that's basically the upper end of the falling channel from the highs. The high is only about 10-15 points above that, and then, of course, the market sold off from there. Nifty Bank, the resistance is 59.83. We've not gotten to it at the day high point of the day, but those are numbers to watch out for. Small and mid caps are playing catch up. The small cap index was down 17.5% high to low. As of yesterday's close, it had recovered about 3% from the lows. It's doing more today. So that's about almost 2% gain on the 1.9% gain on the small cap and about 1%, just under 1% on the mid cap index. Catch up there. Capital market index is the top gaining index. Now, it's been a while since we've seen that, haven't we? 5% on the Nifty capital market index. And, we've got Vamakshi joining us in just a bit. Defense, PSU, metal names are seeing buying as the dollar has cooled off. I think it's helping. Real estate and FMCG on the other side is seeing some pressure. Rima.
Absolutely. One reason why the headline market, the large caps maybe are not surging away is that there's some sense of caution going by the international cues that we're getting. If you're looking at Wall Street futures, they're fairly nervous after that earnings miss from Alphabet. So in the morning, when we were sort of talking to you, Wall Street futures were down about 0.5%. The Nasdaq futures were down 0.5%. Now they're down about 1% because of this sort of issue with large tech and whether that lead to some sell-off or not. But having said that, that's the large cap picture for us over here. Mid caps, there's so many names to report. To talk about this capital market thrust, the market's back with it. And how? Look at stocks like Motilal Oswal, about 12% higher. CAMS is 7.5% higher. Angel itself, which came out with the good update for the month gone by. Angel's up about 6-7% as well. So that's a sort of an extremely strong part of the market. But even some of the asset managers, look at Nippon Life, for instance, mutual fund. So up about 8-9% there as well. So very, very strong. Beyond that, you've got names like AFL, Credit Access, Afcons Infra, many names on the upside today. So yeah, mid caps and small caps, Nigel, that's where the action seems to be.
That's right. And just take a look at Strides Pharma. You know, when the market corrected, I think a week or so ago, or maybe 7-8 trading sessions ago, Strides went down to around 550 rupees. Today, the stock is on the verge of moving to around 750 rupees. There was that corporate action that took place. The stock listed at roughly around 720 rupees. And from there, it corrected close to around 30% in a matter, 25% in a matter of a few sessions. But the pullback as well has been equally swift. And just take a look at that one of the highest traded stocks today at the high point of the day. And, you know, just look at the screen, Religare has been a stock where we've seen massive volumes today. It seems the street believes something's got to give now out here. And that stock as well, I think they have their voting in the next couple of trading sessions. Big volumes on that stock as we speak at the high point of the day. So as you all said, broader markets, plenty of buzz out there. Mitesh Thakkar is back with us though. Mitesh, you know, the index, the Nifty hasn't moved anywhere. But comment on that. I mean, would you look to add some long positions on the Nifty? And the Nifty Bank, that's the one that's leading the way. What's your take on that one?
So, you know, Nigel, been maintaining a positive bias, but, you know, kind of we've seen some slight profit booking happen from the higher level. But I don't think it's something which is very dangerous. I think it's very normal given the fact that we are sitting on a 4 or 5 day kind of a rally. So I think just stay long. Both the indices are showing positive traction on the hourly, 2-hourly charts, suggesting that you know, decline should be used to buy into it. So on a Nifty, if we get levels below 23.7, 680 zones, I think, you know, that's my entry point with the stop below 23,590. And I've maintained targets of 24,200 on the index. That's where we are heading. Similarly on the Bank Nifty, also looking at higher levels. On the stock side, I have a buy on Oil India with a stop at about 422 for targets of around 450. And ONGC is a buy as well with a stop at 258 for targets of 270.
Okay. All right, Mitesh, got that. Thanks very much for the trading calls. We'll come back to you in just a bit. And maybe we'll also, you know, get your take on some of these capital market stocks, because that is the market's big theme today. And it all started in the morning with the Angel One coming out with its update, where though it seems that the net number of clients they're adding, that's reduced actually month on month. But it seems the volumes are picking back up. Let's go across to Vamakshi to figure out what's sparked such fire in the capital market stocks today. Vamakshi?
Well, absolutely, Surbhi. You know, like you rightly pointed out, the first stock that was on our radar was Angel One, and that is because on the back of its monthly update. Now, when you look at the gross client addition, it stood at 6.6 lakh. This is a downtick of almost 15.4% on a month-on-month basis, and this has in fact slowed down yet again after picking up in the month of December. When you look at the client base, however, it is growing steadily at nearly 2.1% month-on-month. The average daily orders, on the other hand, are seeing a downtick of almost 3.7%, but it is the average daily turnover which has picked up almost 6.3% month-on-month, and this has seen a very good recovery after seeing a very sharp fall in the month of December. The market share as well for Angel One has improved. In the equity market share, the company has witnessed an uptick of almost 31 basis points to 19.7% after declining for 2 consecutive months. For F&O, the market share has seen an uptick of 15 basis points month-on-month to 21.8% after declining in the month of December, and the commodity market share has also improved substantially by 133 basis points month-on-month to 61.2%. So overall, the average daily turnover has seen an increase, and the market share has improved for Angel One. Resultantly, the stock is trading higher in trade. But apart from that, lots of capital market themed stocks are in focus today on the back of a note that came in from Kotak. They say that recent correction across AMCs and RTAs offer a more reasonable risk reward. On AMCs, they expect HDFC AMC and Nippon Life AMC to deliver higher AUM growth over the next few quarters. For ABSL AMC and UTI AMC, they say that they are showing signs of performance revival in select large funds. They're awaiting stronger signals to turn more assertive. So they've gone ahead and upgraded their rating on HDFC AMC and Nippon Life AMC to add. They've upgraded their rating on UTI AMC to buy, and they've retained an add rating on ABSL AMC. Apart from that, RTA on RTAs, the brokerage says that they've upgraded CAMs to add from reduced target price at 4,000 rupees per share. They say that the CAM is more reasonable valuations with yield related and capital market headwinds baked into the assumptions. And as far as KFIN is concerned, they like the progress on the non-MF segment, but they're waiting for better entry valuations. So given that factor, they have a sell rating target price of 1,000 rupees per share.
Thank you very much for that. Prakash Diwan is now with us on the show. Prakash, we got a bit of a correction in these names. It's a cyclical, sector per se. We saw a bit of growth rate moderation on account of that cyclicality. But again, there is buying today, which has emerged. So at every decent dips, we are seeing interest emerging. Your thoughts on the capital markets and the recovery today?
No, absolutely, Rima. So, when the budget announcement triggered anticipation of surplus money in the hands of taxpayers, there was this whole anticipation that this will be used for consumption and spent on buying discretionary goods. But, this is also as much as an avenue for people to spend on or allocate more money towards. And I don't believe that given the secular trend that we've been noticing, and there's a very interesting NSE report that's come up in terms of how the gender ratio is changing towards more women participating in equity markets. You have a younger population coming in. With all that, there's no reason why companies which are part of the capital market infrastructure space will have to worry about where the next revenue growth is going to come from. So very obvious, but within that space, I would still be a bit wary about buying into brokerages, given that it's a very commoditized business. So you had a very great Jan, but whether this continues for the whole year the same way, I'm not too sure. But if you were to buy the K-Fintechs and the CAMs of the world, or the CDSL for that matter, depending on what area you feel is going to grow, CAMs in the last couple of days has also demonstrated a very major support and pullback. So there is evidence that people will latch on to this. Their valuations are quite comforting. And I would also like to draw your attention, of course, it's not directly related to capital markets, but it's more e-governance. But there's a company called Protean e-governance, right? I mean, we've heard of this. The numbers are very encouraging. This is a stock that went all the way to some 1350 last month. And it's bounced back $200 from there. And it's still 30% less than its peak valuations. So, of course, at 65 times, I don't think it's cheap. But given the fact that it's a unique business in that space, I think people will kind of see money getting allocated to this on every dip because you don't get these stocks at softer valuations. So if the market's giving you that opportunity, I think it's time to buy these kind of businesses which are unique, which have a moat, and which have clear visibility in terms of the growth ahead. So yeah, it's quite promising. NBFCs and all could be confusing. There's an interest rate cut that you need to kind of anticipate and build in. But these are businesses that will grow irrespective of how things shape up on the economy as a whole.
Yeah, absolutely. Protean e-governance, company that engages in providing a lot of the back-end digital infrastructure when it comes to the whole tax administration system, whether it's PAN cards, etc. That's one of the big businesses that they have. And it seems that's a story that Prakash likes. Okay. Prakash, let's talk about what's happening with consumer stocks. And I want to throw Titan first at you because the debate is wide open. On one side, there is this whole consumption thrust and the rich will spend come what may, tax cut, no tax cut, whatever. But I think, and this quarter, one can still argue and give them the benefit of doubt. There was an inventory issue and all of that. We had a pretty spirited discussion with the management on lab-grown as a threat and whether Titan can overcome this or not, because their studded ratio is also inched down slightly. Carrot Lane's growth is not as much as what it used to be. What's your sense? Is this a great time to buy a stock that has always been super expensive, or would you not jump the gun so quickly?
So, Surbhi, this is a great stock if you have loads of money to allocate, and that kind of makes a lot of institutional investors qualify to buy into this. For you and me, you would need to buy into stocks which have a significant alpha generation potential. From here, if you really ask me, from 3,500, does Titan kind of become a multi-bagger? Given the level of details that we have on these businesses and the sharing that the company does, you'll not be caught unawares, right? So if there's something good that's happening in some of its businesses, and I can tell you their gemstone business, which is under a brand called, I think, Zoya, if I'm not mistaken, that is something which has been doing very well. Anecdotally, I can tell you the kind of response it has and the kind of new launches that they have, the way they're expanding even internationally now. So there are things which will offset this LGD debate that we keep hearing about. And of course, LGD will keep growing because it's a new thing. It's more affordable, different segment that it caters to. But I don't think you can take away the sheen from Titan's business. It's just that it'll probably be a bit range bound for some time, and then the valuations start coming into picture, and that means it's a bit expensive. Even now, you'll probably have to buy it on bad days when something goes wrong somewhere in the world and the market takes a beating. So it's those kind of stocks that you'll need to add on difficult days. But otherwise, I think basis numbers, there's nothing very promising that you need to kind of rush into adding it.
Okay, all right. Prakash, I just wanted to ask you about Page Industries. The numbers came out, didn't look too bad. They're talking about, the management was saying that the last quarter was good because, it was festive season and all. And the commentary, I think, for the way ahead was sounding a little bit skittish. I'm not sure how any additional income or seasons, etc., affect this business. But at least for the time being, the stock has come off close to 4% from the top. What's your take on Page Industries at around at this 46,500?
So, Nigel, this is very similar to Titan. It's a market leader, will keep losing market share and has to claw back to gain market share. The business is nothing which can spectacularly or radically become very different. I mean, is there any disruption that they are likely to come up with which can make things easier on margins or on operating leverage? The answer is possibly not. So it's a fairly steady state, mature business. And this will just go along with the consumption theme. If the consumption picks up and we have this, index that also tracks that in certain quarters, if that index were to do well, of course, Page Industry does well along with. But then there's a huge amount of cost pressure that's attached to this business now. Because the A&P costs have actually not come down. They might have come down as a percentage, but in absolute terms, they still have to spend to manage that market share. And the expansion of stores also has not been so dramatically different. So I would believe it will have to consolidate a bit, and the business will have to kind of start looking up more differently, and maybe some new lines of SKUs that could be added and things like that. So we give it some time. They are trying. I can sense that they're trying to. If you walk into a jockey store, you will see that it's no more, the same products that you had, let's say, 5 years back. There's many more things that they've added, and they'll continue to deepen that as market feedback comes back to them in terms of positivity. But till then, I think they're still work in progress, and you'll have to wait for the stock to really shine.
Okay, that's the view on Page Industries. Oil and gas is having a good day. The Nifty Oil and Gas Index is the top sectoral winner, 1.7% up. Names like ONGC and all the oil marketing companies are higher today. In fact, OMCs have got an upgrade from Goldman Sachs today. Sudarshan joins in with the details. Sudarshan.
So oil marketing companies are down somewhere in the range of 20 to 25% from their peak. But in the last two sessions, all these three oil marketing companies, IOC, BPCL and HPCL, have moved higher somewhere in the range of 4 to 6%. Even today, all these three stocks are higher. And today, Goldman Sachs has come out with a note upgrading all the three stocks. It has upgraded HPCL and BPCL to buy. And for HPCL, target is 400 per share, implying upside of nearly 17 to 18%. For BPCL, target is 360 per share, implying upside of almost 40%. But as far as IOC is concerned, it believes that from current price, it might see a fall. And as for GS, target for IOC is rupees 110 per share. For HPCL, it says it sees 40% EBITDA CAGR over FY25 to FY27. For BPCL, it estimates free cash flow of 10% in FY26. And for IOC, it believes that risk reward is favorable. Now, giving the thesis behind the upgrade, it says as far as risk related to lower crude discounts and LPG under recoveries are concerned, this is factored in the prices. And setup for FY26 and 27 is improving for OMCs, given crude oil price upside being capped. For GS, by 2025 year end, GS believes that Brent crude will be around $70 per barrel. Also, it is constructive on Singapore refining cracks and free cash flow. That is a key metric. It expects that it might recover in FY26. So, considering all these factors, GS has upgraded all the three oil marketing companies.
Thank you very much for that, Prakash. Any pick in the oil marketing companies? Goldman believes that the concerns surrounding LPG under recoveries are priced in, and two, crude oil prices are capped going forward, which sets the companies up well in the coming years.
Yeah, I do agree. I think the theme is very, it's kind of very aligned to what we also feel on this. And remember, because of that LPG subsidy, under recoveries, you already have the stocks having given way from their, recent peaks. What's also, part of the same report, and I agree to this metric, is, the kind of growth that they are anticipating in the next 3-4 years on an EBITDA level is phenomenal. I mean, you don't find these kind of large businesses being able to clock such 40% kind of growth. And look at the replacement cost thesis. I mean, none of these companies would be easy or even possible to make at the same cost that they're available at. So, the only discount to valuation that comes up, Rima, is because of the regulatory overhang. I mean, you really don't have much of freedom that these companies can exhibit in terms of pricing. And when things go adversely on the crude, global crude prices, that is when, they start getting hit and there's no stoppage. So I think primarily it's because of that uncertainty that they've never been richly valued, but they're still available at very decent valuation from a long-term dividend yield portfolio as well. I was just calculating if IOC at this level were to be bought and if it continues to throw up that kind of cash and pays out that as dividend, the yield itself will probably set off a lot of the uncertainties, and at least you'll have something which is not disappointing in terms of a regular income coming on a yearly basis. Till you hold on to it and there's some value appreciation or value migration, as we call it, over the next couple of years. So great stocks to have in portfolios.
Okay, all right. This is, of course, a story coming through from our colleague Parikshit. Now, Prime Minister Narendra Modi will be visiting the US next week. Sources suggest that US President Donald Trump may host PM Modi for a dinner. He's also expected to meet Elon Musk, who's, of course, very much sort of associated with the government and its efforts to cut the size of the US government for one. Let's go across to Parikshit now for details on this important upcoming visit. Parikshit, over to you.
Well, yes, Donald Trump is likely to host Prime Minister Modi at the White House on 12th evening. 13th of February will be the day of substantial meetings where Prime Minister and President Trump will have a one-on-one bilateral meeting and delegation-level talks. There will be a group of CEOs who will also call on Prime Minister Modi. We believe that this meeting of business leaders is being organized by the National Security Council, which is a part of the White House administration as well. There could also be a community event where the Prime Minister will speak to the Indian community, as he has done on previous occasions. What's going to be the larger push? In fact, we're learning from sources that the intent would be to declare a strong feeling, strong support for an early trade deal between India and the United States. In the run-up to the US elections, we've heard how a Republican administration may be very keen on a trade deal with India. And now we hear that there is a clamor on both the Indian and the US side for a trade deal. And Prime Minister Modi and President Trump may not sign a deal immediately because it's too soon, but they may declare their intention to conclude a deal within the next 7 to 8 months and possibly sign it when Donald Trump visits India this year for the Quad Leaders Summit. So that is something we'll have to wait and watch out for. How will we tackle the trade deficit or the trade surplus that we enjoy with the United States? Well, there are a couple of options that the Indian government is working on. On the defense side, it is quite possible that we may offer to buy more P-8I reconnaissance aircraft for the Indian Navy, C-130 Super Hercules aircraft, also for the Indian Armed Forces. So these could be some major purchases from the US government, from the US defense industry, which could help bridge the trade deficit. There could be more energy imports, both crude oil and LNG, which could be on the cards as well.
Okay, all right, Parikshit, got it. Thank you very much. That's a neat summary on what to expect. Thanks. That's quite helpful. High-profile visit all set for next week. Well, with that, we do have to take a very quick break. We'll come back on the other side and, of course, get you more on the markets. Aman Chauhan of Abacus Asset Management will be with us in just a bit.
Okay, welcome back. We've got the market, which of course is flat on the frontline indices, but broader market is buzzing. And now Aman Chauhan is fund manager at Abacus Asset Manager. Aman, good to have you back on the program. Thanks very much for your time. For those with cash, it's your stock to pick, whatever. But you got to have cash, right? When market falls. And I think that's the conundrum many face. They just sort of they went up with the market, came down with the market, and now waiting for the market to repair. Are not able to do very much. But people have cash as well, and they are, I guess, doing stuff. So what is the team at Abacus really doing? And let's just take it sector by sector in that sense. We just had, Vamakshi earlier outlined this Kotak note on capital market plays. The capital market index is up some 5%. K Fintech, CAMS, CDSL, the asset managers. Any thoughts on the space broadly, and have stocks come to attractive levels?
Yeah, so this space looks interesting to us. We also have exposure to some AMC companies. We have exposure to wealth management companies, and that space definitely looks good. Even if the markets were to stay flat for the next 3-6 months, still the earnings growth momentum in most of these names will be strong, and it's a low capex intensive business, so good free cash flow conversion happening here. So we are also positive on this space, and as I mentioned, we do have some exposure here.
Okay, capital market plays and AMCs, not brokers, right, Aman, or brokers as well?
We have all three, but they will be like low single-digit exposure, each of them.
So at these levels, Aman, what are your high conviction bets? If you have fresh money, where are you, putting it, deploying it?
So financials continue to be the top pick for us sectorally, both private banks as well as non-fund based financials. Besides that, we are positive on pharmaceuticals and on the fringe, even IT now started to look interesting, especially the mid-cap IT space, which has corrected. So while the large cap IT is not, the mid-cap definitely has corrected. So that is also now looking good. The currency is benefiting this, and plus if US economy is going to stay strong and the way Trump is announcing the measures, looks like there can be demand pickup for these sectors also. So these three would be the top three priorities as of now.
Okay, all right. Hi, Aman. Good to see you in. Aman, what about the chemical space? That was an ignored sector. Around 18 months or so ago, these stocks ran up maybe ahead of themselves, and then they went through a painful period. But now the recent numbers that have come about, they are showing some encouraging signs. And I think from the next quarter onwards, you'll have the benefit of a lower base. How are you placed on chemicals from here?
So incrementally, we are also positive on chemical. In fact, in the last interaction, I mentioned that the sector is bottoming out. It's not yet bottom out, but it is in the process of bottoming out. And in the next 3 to 6 months, it should happen. We have seen first green shoots of that happening, where we see the numbers from UPL and many other chemical companies where the inventory has come off and even the pricing has stabilized. So clearly, sector looks good. The only caveat being that it is dependent on China. So at least in the near term, I'll not be a very big buyer in chemicals because of the global uncertainty. What happens when the Trump announces certain measures and what counteraction China does, we need some clarity there. Once things stabilize on that front, then we can say that fine, the sector has clearly bottomed out, and based on that, we can take an aggressive call. So on the fringe, we are positive, but not very aggressive in the sector as of now.
Aman, what about a stock like Trent? I know you don't talk about individual stocks, but a high growth consumption name, a darling of investors. I was giving you strong growth. Look at this share price of Trent. It was up 2.5%, rebounding after yesterday's steep loss of 6%. But that's being sold into. Trent is completely flattened out. So investors are concerned about aggressive competition in this particular space.
Not just competition, it's also the valuation, right? So consumer space in India is always traded at premium valuations. While the budget narrative clearly was pro-consumption and these stocks saw a rally post that, I believe just one of the days when people are booking some profit and using that money to get into a farm or get into something else which has underperformed versus the consumer needs. But I don't read too much into today's activity as such. Company is good. The whole sector should do well based on the impetus the budget has given the whole consumption sector as such. So the space looks good. If somebody is not too worried on the valuation front, this sector can still give you decent returns. At Abacus, we follow that value-conscious style of investing. So for us, we feel shy of paying a very significant premium. Even if the growth is decent, we would like to have a decent valuation. And hence, these sectors don't feature much in our portfolio. But overall, sector should continue to do well.
No, sector should continue to do well. Look at Credit Access. I mean, just making a quick mention, there are some big movers in these names. Credit Access is up another 7%. So it's basically back to about 1100 or so. Recent high was about 1120. Medanta is a big mover. That's a 10% jump. Medanta did not correct in this current leg of the market, but of course it made a high back in May of 24, about 1500. And since then has been consolidating. Another hospital name is Fortis. Fortis did come off quite sharply. Jan 2025 was nearly at about 750 and fell to about 580, back at 680 this afternoon today. So, yeah, I mean, there is a lot happening. IGL is up about 6%. There is Oil India, which is up about 6.5%. The capital market plays, I think we already been highlighting. Thangamile reported numbers just about half an hour back. Stocks up 10%, and I think it started moving post the results. Tega Industries, which is largely, I mean, it works in the steel industry. It's a ancillary, but high was 2,400, late 24. It fell to about $1,400 and coming up to about 1,650 with the jump that we are seeing today. So lots of stuff. Hospitals, Aman, do you own them in your portfolio, and what's the thinking?
Not as of now. We are neutral on that sector, so there is no specific bias towards it. But as of now, we don't own it. Something interesting comes up, we are open to that idea of looking at them.
Okay, the three sectors you mentioned, those are which ones, Aman?
Financials is one, pharma is next, IT is, Midcap IT is something that is looking good.
Okay. And in financials, you said both banks and non-banks. How important will this RBI meeting be? So 25 basis point cut now largely is expected, but expectation is that maybe there will be something more on liquidity, etc. as well, and that's important for the system more than it has been for a couple of years now. What's your sense, Aman?
I think RBI has already acted on the liquidity front 2 weeks back, so I'm not expecting any major moves from the liquidity front, and that is something which the RBI can act ad hoc any point of time. So they will not wait for the policy day to do something on that front. So at least that's not what we are expecting. In general, we are expecting 25 to 50 pips rate cut to happen in India. Not a steeper cut than that, because that will have an impact on the currency, and we are already seeing new lows as far as the currency is concerned. So the RBI has to balance that. But nevertheless, we are along with the consensus expecting seeing 25 to 50 pips cut over the next 12 months.
On Midcap IT, Aman, would you go with high growth companies like Persistent, Coforge, where there is visibility of growth continuing, but these stocks are expensive relative to the rest and even relative to their own historical standard? Or would you go with ER&D company, where the growth outlook is moderated a bit given the concerns in Europe, etc., or some of the other midcap IT companies which have struggled on the growth front, but there is valuation comfort?
The preference will be for growth. And obviously, we'll try to find something where the growth is reasonable with a reasonable valuation. So it won't be just blind growth at any price, but clearly the preference is for the growth. So if the company is struggling, in spite of the valuations, that is not something that we'll consider.
And there are companies, because the likes of Persistent, Coforge, for instance, have become very expensive. So are there companies to buy at these levels where there is growth visibility and valuation comfort?
Yeah, definitely. I think it makes sense to look at that segment where growth visibility is high, because this is what India is known for. This is what investors are looking forward to. So in a year when we are expecting a moderate GDP growth to come in the next year, and the markets to be, say, flattish, at least in the near term, it will be individual stock-specific ideas that will make money. And within that, whichever stocks has the growth visibility or delivers growth, I think the investor preference and limelight will be in those names.
Aman, thank you very much for joining in. Need to get into a short break. Before that, let's hear out Titan and Asian Paints, both the stocks under pressure post the Q3 numbers. Listen in to what the management had to say about the quarter gone by and the way forward.
The growth which we typically
look at every year is in the ballpark of 20% from an annual point of view. And that's the kind of thing that we would be satisfied with rather than continuing to maintain the 25 in every quarter. So the long runway in terms of growth and our having just a single-digit market share, our focus continues to be on sales growth and with a stable margin around that 11% ballpark. That's what I would gun for. That's what we are pushing for.
I think what was very clearly visible was that the urban centers were not batting. And as you rightly said, there has been down trading in terms of the market, in terms of what we have seen. I think what was more complex also that, the festive season was very, very short. It was a shorter Diwali to that extent. So as we see, I think the month of October really kind of impacted us very highly in this quarter to that extent. So I think that is what possibly has impacted the overall growths in terms of what has come in. As we go ahead, we are looking at single-digit volume growths for quarter 4 for definitely in terms of what we would kind of really endeavor to get as we kind of go forward. Competitive intensity has been pretty strong in terms of what we have seen in the first 9 months. However, I see is that, given the fact that it's not only about 5 players at the top, it's also about, 10 to 12 players now batting to that extent. There have been even more competition which has come in terms of a lot of newer players other than one of the bigger players which has kind of really stepped into that extent. So I think we are definitely seeing, some readjustment of shares across a lot of players to that extent. So it's not something which is only one player is kind of experiencing it. It is all across, and a lot of these shares are getting adjusted across the unorganized sector as well to that extent.
I think we are now getting into a phase where growth will surprise to the upside. The budget reaffirms that. I think this is a growth-oriented budget. In fact, the phrase I've used for this budget is that it's a magic budget, and I'll come to that in a moment. And my expectation is that the monetary policy will back this budget, and the monetary policy will also become growth-oriented. So as far as India is concerned and what we control, I think things are looking up.
I think it is one of the best budgets that we've seen in many, many years, and I tweeted it's a dream budget. So first thing is that you normally want money with the public rather than with government. It should just be the general thumb rule of looking at anything, that money with public is better than money with the government. You have not said that, oh, you cut a tax rate across the board, therefore the rich will get much more. It has come to the correct audience in that sense. So it has to be travel, it has to be savings, it has to be these car consumer durable types. As I said, we are not buying those, but they could.
Presently, taxpayers can claim the annual value of self-occupied properties as nil only on the fulfillment of certain conditions. Considering the difficulties faced by taxpayers, it is proposed to allow the benefit of 2 such self-occupied properties without any condition. To streamline the process of transfer pricing and to provide an alternative to yearly examination, I propose to introduce a scheme for determining arm's length price of international transaction for a block period of 3 years. This will be in line with global best practices. With a view to reduce litigation and provide certainty in international taxation, the scope of safe harbor rules is being expanded.
Welcome back. Well, markets have come off a little bit from the top, but the big story is actually the broader markets, and that's looking beautiful. 3 stocks advancing for 1 stock that's declining. In the last few minutes, though, if you were to pull up the Nifty and see what's come off a little bit from the top, where we have Adani Ports, that's skimmed off close to 0.5% of the gains, and Power Grid as well. I think that CapEx number is spooking the street. Along with it, you have Axis Bank that was in the green when we started the show. That's moved into the red. But Nimesh is with us to help us out with how are things looking in dealing rooms. Nimesh, first of all, congratulations.
Thank you.
We asked a lot of guests in the last 5 days. Please tell us what about the FIs. Everyone said maybe sometime in the second half. You told me next 3 hours, Nigel, the FI numbers come in, it could be positive.
Yeah.
So good on you on that one. What about today? What's happening?
So Nigel, while I said yesterday the buying was largely passive and it was related to large caps, today there is a MOC basket buying in the broader market stocks, and I guess that's the reason why the broader markets are relatively outperforming today. It may not get showed up in the FI number because if there is a large selling in some large caps, it may just shadow. But clearly, from a flow perspective, there is an MOC basket, is what I understand, in the broader market stocks today. In terms of sectors, again, for the last few days, I've been saying consistently that there is buying in real estate names, and there is a bit of buying back in the PSU stocks as well. So that trend continues even in today's trade. So those 2 sectors, I guess for real estate, it's a bit of a pre-positioning to the RBI policy, and maybe the street is now anticipating or penciling in a 25 basis point rate cut. From a technical point of view, again, 23,300 is a level to watch on the downside. But from a trigger point of view, the RBI policy and the state election outcome is very important trigger to watch out. The exit polls to which we will react tomorrow, and the actual results will react on Monday. But again, the feedback is if there is a positive outcome, you might say a bit of a sentiment booster as well for the bulls to rally from here. So that's the overall feedback. But from a flow perspective, as I said, there is a basket buying, is what I understand, in broader market stocks.
Well, indeed, and that will be good news, right, Nimesh? And if you look at the real story today, it's in the mid-cap space, and the small cap is up nearly around 2%. Yeah. But individual stocks, tell us what you pick up.
So in terms of individual names, the first stock is Paytm. Again, in the last couple of days, the volumes have picked up. I understand some large HNI investors are active buyers as well. And of course, for Paytm, there is an anticipation that it could be a corporate development very soon. Remember, in Paytm, there could be a large block as well that I highlighted a few days back. So that's still pending. But of late, the HNI flows have resumed in that particular stock. The second stock is Union Bank. Within the PSU bank basket, this is one stock which is well bid for the last couple of days. Post earnings, this is the only stock which has relatively outperformed the entire PSU basket, largely on back of FI buying. So looks like some institutional interest is back in Union Bank. The third stock is Signed. From the recent lows, even that stock has pulled back smartly from in the last couple of days. There is buying flows, is what I understand. But for Signed, the biggest trigger will be the appointment of the new CEO. Well, in the call, they've clarified that it will come before the next quarter earnings. But maybe the street is anticipating that can come very soon. So that's the trigger in Signed. And the last is Century Ply. Within the broader market names, this is one stock which is, again, well bid by large institutions. The delivery volumes are going to be quite high in Century Ply today.
All right, Nimesh. Paytm, Union Bank, Signed, Century Ply. That's stocks we'll watch out for. Street expecting a corporate development soon in Paytm. Keep an eye on that one. Stock
and Signed is up 4.5%, the one he was talking about.
CEO development, maybe sooner than expected. So Mitesh is with us, back with us with a quick view on what he's making of the trade so far. And Mitesh, a bit markedly lower now, 45 down on the Nifty. It was absolutely flat, 23,693. But broader markets are looking very strong. What's the trade?
Yeah. So I think, the breadth is still looking good. The Midcap Nifty index has given a bias. The positive bias should be maintained. BTSC and Wipro can be taken with a stop at 314.5, targets of 320, 322 for tomorrow. And the other one is a BTSC and Union Bank with a stop at 117.7 for targets of 122.
Okay, all right. Those are individual trades coming through from Mitesh. Mitesh, thanks very much for that. There was this SEBI rule on when to categorize a company in default. And we'd reported this earlier. This is, of course, something which has put a company or two in a pickle for a while. The latest sort of casualty, if I can call it that, is Arohan Financial Services, which was downgraded to default rating due to an interest payment delay caused by incorrect account details. But it was almost immediately upgraded by the same rating agency. In this case, ICRA. Ritu is here with details. Ritu.
That's right, Prashant. Minor delays due to operational issues often can lead to some big consequences. In this case, it is an A-rated company, that is Aarohan Financial Services, which has faced, the ire because of the SEBI's November 2024 rules that recognize even a 1 rupee delay to any one investor by even 1 day will be categorized as a default, and there's no such thing as technical default that will be allowed for. In this case, Aarohan Financial Services delayed or rather could not pay about 6 debenture holders about 44,000 rupees in total, because of which, the account was downgraded to a default rating by ICRA and subsequently upgraded, recognizing the fact that there is no real liquidity risk there. We had a similar case happening with Axis Finance that you spoke about. That was a AAA rated company, again downgraded to default and then subsequently upgraded, all owing to these SEBI rules. It can cause some kind of issue, especially when it comes to listed companies. There may be volatility, even in the case of unlisted companies, whether there's an NAV hit or something that could happen. So, these are big consequences that can happen because of minor issues. Keep in mind, so far, it's only a couple of NBFCs that have faced these concerns. Could happen with anyone.
Thank you very much for that. By the way, tomorrow is going to be a big earnings day. You've got Bharti, Britannia, Hero MotoCorp, ITC, State Bank of India and Trent. But let's zero in on Trent, because Trent has lost nearly 7% in the last 2 days. And numbers come out during market hours tomorrow. So Mangalam joins in with the street expectations.
Well, for Trent, the company reported a near 39% revenue growth in the last quarter, but that missed street expectations, which were that of 45% sort of growth this time around as well. And from there, we saw the stock correct down about 30% from the highs. The question this time around is that with a slightly, subdued revenue expectation of 35% in the festive season, with 33.5% EBITDA expectations and net profit growth of almost 40%, will the company beat these estimates, meet these estimates, or miss these estimates? The second question that arises after that is, after beating these estimates, will the stock regain its past glory or not? Largely because between the last quarter to now, a lot of the underlying narrative has changed as well. There is competition coming in the value fashion space itself, and everyone talking about the multiples at which Trent trades at as well. So, it's a very interesting set of numbers that the street is anticipating. There would be slight margin compression, and that's largely by design, because the company has been leading, with Zudio store addition, and Zudio typically has lower gross margins and lower EBITDA margins than the overall part of the business. So if Zudio has led growth, then margins will compress. The most important thing we'll be watching out for, apart from these numbers, is what are the new platforms that the company is seeding to replicate the sort of success that Zudio has seen. The street has bet on, its ethnic wear business or even the Star portfolio business. So let's see how that comes about. But for now, 35% revenue growth, 40% PAT growth with 33.5% EBITDA growth is what the street is expecting this time around.
Okay, all right, Mangalam, thanks a lot for that. Mayuresh is joining in. Mayuresh, good afternoon. Good to see you, Ben. What's the view on Trent? I believe you have been shopping. But that aside, what about the stock that around 8,000 rupees was a darling? And from the top, it's seen a good correction, but you've seen it bounce back in the past. I recall it doing a very swift move from 6 to 7,000 rupees. Given the growth, given the competition in the industry, put everything together, and at these valuation, what's your view?
Afternoon, Nigel. No, so as a disclaimer, I think a few months back, we didn't have it in our portfolios, but we did take it out. I think we booked our profits in because I think the valuations were, in our opinion, just not tenable. And even now, our sense is that valuations still look very, very expensive. The ratings are on the softer side as we see it in the markets with India. And therefore, the points that Mangalam put out, how does volume growth take place? What is the core dynamics as far as Zudio is concerned? What are the different lines of segments they are planning and expecting to introduce and execute over the next few quarters? And at the same time, how is the margin performance going to be? Again, I think the base that they are working on over the last 2 years, they had compounded their earnings at a historical run rate. And therefore, I think catching up to that base will be a tall ask. Customer sentiment is obviously weak. You've seen consumption slow down in its real sense, probably play out on a lot of players. And Trent might also probably bear the brunt of it. So again, waiting out for what numbers will come out tomorrow. But even in that scenario, I think the valuations still look very, very expensive for them.
Okay, all right. Mayuresh, we have to take a quick commercial break here. So allow us to do that. We're going to just come back. That's the view on trend, but more stocks with Mayuresh in just a bit.
A number of senior and very senior citizens have very old national savings schemes accounts. As interest is no longer payable on such accounts, I propose to exempt withdrawals made from NSS by individuals on or after 29th August 2024. I am also proposing to allow similar treatment to NPS Vatsalya accounts as is available to normal NPS accounts subject to overall limits. Detail the indirect tax reforms and changes in direct taxes in Part B. Financial sector reforms. The FDI limit for the insurance sector will be raised from 74 to 100%. This enhanced limit will be available for those companies which invest the entire premium in India. The current guardrails and conditionalities associated with foreign investment will be reviewed and simplified. The services of India Post Payment Bank will be deepened and expanded in rural areas. NABFID will set up a partial credit enhancement facility for corporate bonds for infrastructure. Public sector banks will develop Grameen Credit Score Framework to serve the credit needs of SHG members and people in rural areas. A forum for regulatory coordination and development of pension products will be set up. To implement the earlier announcement on simplifying the KYC processes, the revamped Central KYC Registry will be rolled out in 2025. We will also implement a streamlined system for periodic updating.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen. We are stepping into our silver.
Welcome back. Now let's bring you voices from the CII. CII President Sanjeev Puri and Pidilite's Bharat Puri have welcomed the budget as they expect the announcements to boost consumption. On the other hand, the steel industry is still hopeful for some protection and they're hoping to hear from the government very soon. Listen in.
Very strong point in the budget was the focus on reforms, and which is very critical to unlock the potential of the economy in the medium term. So the journey of economic, it's a journey of economic transformation. It's not that things change overnight.
Yeah.
But I think all the factors are favorable. So progressively, we do feel that improvement will happen, and the consumption boost is welcome. I think with the weather being better and agriculture crops being better, and hopefully we are also expecting some, the liquidity part the RBI has been acting on.
Yeah.
We also expect the interest rates to moderate soon.
I would say, Shireen, this budget is very welcome. In our opinion, the economy needed capex, it needed consumption, and it needs jobs. Capex is continuing. Hopefully, consumption will get a boost. It will take 3 to 6 months, but it will definitely get a boost. And jobs will obviously follow both consumption and capex, and hopefully skilling and ease of doing business. So overall, from a demand perspective, I would say we're now positively optimistic rather than cautiously optimistic.
How do you see the CapEx story playing out from here?
So I think India is on a multi-decadal path from a growth perspective. The enablers of CapEx, last year when we had about 11 lakh crores on infra spending, and obviously public spending is a big part of the push. So I think there is going to be, at least from a heavy CapEx perspective, there are opportunities to grow, but the environment, especially because in a company or a industry like steel, it's a globally exposed industry. We just need to ensure that the enablers from a policy point of view do not expose us to...
You mean the safeguard duties?
Yeah, the unfair, because that's unfairly priced imports. And I think Indian industry, from a steel perspective, is very competitive, but it has to also earn its cost of capital. And therefore, we are ready as an industry to expand very significantly. We just need those enablers and efficiency in the system to be in place. The prices is what gets affected by these unfairly priced imports. I think with the tariffs coming in at this point of time on China, the key issue will be what will be the impact on the rest of the world, because it's not that the Chinese imports or exports made big difference to the steel prices in the US. But I think it will be important to see as to where that goes in. More importantly, the domestic policy and the stimuluses in China is going to determine where the exports come in.
Still in conversation with Mayuresh Joshi. Castrol, by the way, has been a big mover today. It was up, in fact, this whole week it's up nearly about 10% on the back of their numbers. Mayuresh, any thoughts on the oil and gas companies or companies which feed into stocks like a Castrol?
So I think, Reema, afternoon to you as well. I think Castrol and its closest competitor, Gulf Oil Lubricants, I think you can probably keep a watch on Gulf Oil Lubricants. Numbers have been relatively better so far. The expectations in terms of volume growth expected to hold out for them. And therefore, I think if you probably look at the entire ecosystem, volume and pricing will both play an effect in terms of how the balance sheet is expected to grow. And therefore, the EPS rating probably looks far stronger at Gulf Oil Lubricants. Having said that, I think the kind of exposure that they might have in terms of data center as an opportunity, they're getting into the charging infrastructure space as well, both through the fast charging and the slow charging module, which they believe can be a game changer going forward as well. So the space is interesting. Gulf Oil Lubricants is something to be kept in mind.
One of your own poems has a beautiful Bengali phrase, Mayer Mukt Swargo Sukh. It translates to a mother's space is the bliss of heaven. It reflects the cultural sentiment in Bengal and beyond, where a mother's love is considered sacred and divine. Empathy for the common people is the guiding principle on all your policies and welfare schemes. This is most striking, seen in your initiatives for the education of the girl child, women's empowerment, and poverty alleviation. All of India needs this kind of inclusive and sustainable model of development so that no Indian is left behind and no region in India is left behind. Thank you for your leadership, Mamta Didi. Esteemed friends, in today's fast-changing world, India has become a beacon of growth and hope. Within this fast-changing India, Bengal has become a source of growth and hope. Therefore, it is the best time for investing in Bengal as we are marching towards leadership based on technology and the power of our youth. Bengal's strategic location and fast improving physical infrastructure gives the state an enviable edge. But the biggest asset of Bengal is its people. Over 100 million hardworking, extremely talented and highly cultured people. In the emerging era of knowledge economy, your state has a special advantage because Bengal has always been a land of super intelligent people. When natural intelligence is enhanced by the capabilities of artificial intelligence, there is no way that Bengal can fail, and no power on earth can stop Bengal's resurgence. Distinguished friends, Reliance's commitment to Bengal's all-around development remains unwavering. In 2016, when I first attended this summit, Reliance's investment stood below 2,000 crores. Today, in less than a decade, our investments in Bengal have increased 20 times, and we are invested over 50,000 crores of rupees. Mamta Didi, we shall double this investment by the end of this decade. More importantly, our investments have created over 1 lakh direct jobs and spurred significant economic growth in West Bengal. Today, I want to make 5 specific commitments. First, digital infrastructure and services. Back in 2016, Jio opened its commercial operations from Calcutta, this very city, the city of joy. This auspicious launch has proved, Didi, very lucky for us. It not only triggered a digital revolution across the whole of India, it transformed India into a digital superpower. Today, Jio is not just the #1 digital services provider or the data company in India. It is the #1 data company in the world, and this started from Calcutta. By the end of 2023, Jio completed the fastest transnational 5G rollout in the world. Jio's network now covers 100% of Bengal's population. I am particularly thankful to the people and our customers in Calcutta city because they continue to maintain the record of the highest users of data in India on our Jio network. From the bottom of my heart, gratitude to each and every citizen of Calcutta who uses Jio. I am especially also pleased to state that Jio has enriched and transformed rural Bengal. 5G has enabled school children and college students to access high-speed internet for their studies. Jio is beaming the world of entertainment and sports into every home and every smartphone. As we speak, Jio is also building Bengal's first cable landing station in Digha so that we have fiber connectivity directly into West Bengal. It will be commissioned early next year and will become a gateway for Bengal's digital leadership in eastern India. I mentioned earlier about the revolutionary power of artificial intelligence. AI is indispensable for India's transformation into a deep tech nation with advanced manufacturing capabilities. Jio is currently building the world's best AI infrastructure in India. Data centers are at the heart of AI infrastructure. It gives me great pleasure to announce today that we have modified our data center in Calcutta to a state-of-the-art AI-ready data center, and that will be ready in the next 9 months. Our fully indigenous 5G stack, coupled with rapid rollout of Jio Fiber and Air Fiber, will enable Bengal to use artificial intelligence, cloud computing, and other disruptive technologies to modernize every sector of its economy. This transformation will unleash new employment and entrepreneurial opportunities to millions in Bengal. Most importantly, I hope that Jio's AI infrastructure will attract the best minds in Bengal's diaspora to return to their state and start new enterprises and professions in their home state. Second, I turn to Reliance Retail. At present, we operate a network of over 1,300 stores in West Bengal, spanning an area of over 8 million square feet across 400 plus cities in West Bengal. We plan to expand our network to 1,700 stores in the next 3 years, operating 2.2 million square feet of warehouses in the state. Our new commerce and express delivery business has empowered lakhs of kiranas in the state by bringing them under the umbrella of modern retail. This has enabled them to increase their productivity and income and reap benefits of scale. Third, Reliance is deeply committed to encourage and expand Bengal's fabulous artisan economy. Swadesh, our new initiative, is supporting the priceless and incredible diverse heritage of India's art and craft. It provides a platform for the best in Bengal to make their products available all over India and now all over the world. For example, we are selling through our Indian and global retail and Swadesh stores, which we will open in London, New York and Paris, Bengal's finest Jamdani and Tant saris, Baluchari, Murshidabad, Bishnupur and Tusar silk saris, Kantha saris, muslin, as well as jute and khadi products made in Bengal. Similarly, in food products, we have partnered with several regional brands like Bisque Farm, Anmol Raja, City Gold, Prabhuji, and Biswa Bangla, which are household names in Bengal, but I believe that they will be popular names across India and the world, providing all these brands unprecedented distribution in India and globally. Fourth, Reliance's new energy initiatives will begin its operation in the end of 2025. It is our endeavor to make India the world's biggest manufacturing hub for clean and green energy. In this, Reliance would like to contribute to Bengal's green economy. Our motto is Solar Bangla for a Sonar Bangla. And we look forward to contributing with solar energy. Fifth, the Reliance Foundation is privileged to partner with the state government and serve in the Kalighat Temple renovation project. Mamta Didi, I have to thank you personally for giving us this opportunity to serve. Most of the excellent work is carried out by the state government, and it has been done with the spirit of devotion. Our foundation remains committed to serving the needs of the state and contribute to various initiatives of the government in making the people's lives better. Dear friends, my family has a deep and reverential attachment to the Punya Bhumi of Bengal. Our investment in Bengal is not only financial. More importantly, it's an emotional investment, most of it led because of our respect for Didi. As one of the leading private sector employers in Bengal, today I have both a recommendation and an appeal to make to potential investors, to those who are present here today and those who are not. Reliance has had a wonderful experience of doing business in this state. Mamta Didi is one of the most ablest administrators in India. With Didi at the helm, the business community receives a red carpet treatment in Bengal. Bountiful Bengal beacons you. So friends, come to Bengal and script new and beautiful chapters in Bengal's growth story. And the Honorable Chief Minister, Mamta Didi, once more, I assure you that Reliance will always be a reliable partner. Your Bengal is our Bengal. Please count on us. Dhanyavad Didi, Dhanyavad Calcutta. Thank you so very much.
Okay, well, that is the chairman of Reliance Industries, Mr. Mukesh Ambani, at that event, Invest Bengal Global Business Summit, and other dignitaries up on the stage, along with the Chief Minister, Mamata Banerjee. There we'll sort of get you snippets of what's happening there with other speeches as well through the course of the day. We're going to take a quick commercial break here. Markets Forward coming up in just a bit.
And we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
We've had a lot of evidence so far that Trump's tariffs are looking transactional rather than actual tariffs. In other words, we've seen tariff announcements for Colombia, for Mexico and Canada, all either reversed or delayed. And the only country where we really do have increased tariffs with retaliation, of course, is in China. And so I think that's generating a huge amount of uncertainty. I mean, investors do not like uncertainty. Companies don't like uncertainty. It's very hard to say where we go from here. I do not assume that we've seen the end of any possibility of tariffs on countries like Mexico and Canada. But my word, the speed of events is very...
A range-bound session sees Sensex and Nifty end in the red. Broader markets outperform. Nifty Bank gains 0.25%, while Midcap Index is up over 0.5%. Consumption names underperform. Capital market plays fly.
Asian Paints gets a coat of red, falls 3%. Investor call points to challenging demand conditions that will keep volume and value growth in check. Titan misses the margin estimates following a one-off inventory loss due to import duty revision on gold. Stock down 3%.
OpenAI CEO Sam Altman says India is the company's second largest market and users have tripled last year. Meets IT Minister Ashwini Vaishnav and is set to meet Prime Minister Modi. OpenAI is facing a copyright lawsuit in India filed by top media outlets. Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we aim to get you everything you need to know as we come back tomorrow. I'm Prashant, with me, my colleague Rima. Rima, hi.
Hi, a good session, right? Particularly for the mid-caps, small caps, which made a comeback.
Absolutely, and I think that was also much needed because large caps had not fallen as much. Small cap index from the high to low was down 17.5%. It had recovered the least, but I think today caught up to some degree. So that basically was the story. By the end of it, Nifty slightly down, Nifty Bank doing a little better, mid-cap index doing much better, and the small cap index doing the best. So, in varying degrees and in ascending order, in that order, and enough and more action. If you want to see what was down in terms of relatively larger names, it was all consumption. Asian Paints, Nestle, Tata Consumer, and so on and so forth, Britannia. These were the 4-5 top losers on the Nifty, all consumption names. On the other side, what came back after a while really is capital market plays. There was that Kotak note, and Vamakshi will outline that in just a bit. But the Nifty Capital Market Index will come up on your screen, and that was up at one point about 5%. Your Novamas of the world and K-Fintech and CAMS and Angel Broking and AMCs, that entire part looked very, very good. And Vivek will have more on that in a bit from now as well. So, a pretty decent session for portfolios for the broader market, even as the Nifty took a bit of a break today. Rima.
Well, it took a break because many of these consumption names, heavyweights, were under pressure. Nifty Realty and the Nifty FMCG Index both down over 1.5%. On the way up, the Nifty Capital Market Index, that was up nearly 4.8%. Metals, PSUs, and even PSU banks were up nearly about 1%. The Midcap Index ending with a gain of about 0.7%, but it did come off from the highs. But let's tell you what we have for you on our show. The top movers and shakers of the day. The stock of the day was Asian Paints, Titan, Angel One. We'll get you more details on these. And then the key market events to watch for. But first up, it's over to Vivek now. He's at the big wall with the top stock movers of the day.
Well, when you're talking about the top stock movers of this particular day, have a look at the entire pack. The list of gainers that will come up on your screen. The oil and gas stocks are the one that we're looking at. There was an upgrade coming in on the OMCs as far as Goldman Sachs was concerned. So names like HPCL, BPCL, IOCL, they did very well. IGL as well as ONGC too, they also topped. In fact, IGL ended the day higher by over 5%. Abbott India, one stock from the broad end of the markets, delivered its results today. Very strong set of numbers. The stock ended higher by over 6%. Remember, the high-price stock on good volumes as well. One from the broad end of the markets, given the fact, like you mentioned, the small cap index that saw maximum moves today. Navneet Education, strong Q3, over 6% higher. And one from the jewelry pack, Tangamail Jewelry, this particular stock at one point of time almost near the upper circuit, but ended the day higher by over 9.5%. And Arif Life Sciences, remember, yesterday was a very strong mover after a good set of results. Yesterday evening, the company in the conference call said that it's launching GLP-1 for the Indian markets. And after that, the stock ended higher by over 11% in today's trading session. On the other hand, which are the list of stocks that actually saw some negative reaction, the entire FMCG pack, muted demand commentary coming in from some of the FMCG majors. So all of these stocks took a bit of a knock and some profit booking as well. Asian Paints, Titan, Nestle, Britannia, IT, all of them saw selling pressure today. And the other set of stocks that ran up and once again saw profit booking coming was the entire real estate pack. In fact, names like Soba, Prestige, Godrej Properties, all of these stocks saw selling pressure today. Thermax, weak set of results yesterday, weak commentary coming in. That stock ended low by over 5%. And Page Industries, volume growth missing estimates, and that stock too, amongst the F&O pack, saw quite a bit of selling pressure emerge, especially in the last half hour of the session.
Thank you very much for that. Even these new age tech companies, Swiggy, Nykaa, down nearly 2 to 3%. Mayuresh Joshi, Head of Equity Research at William O'Neill, and Shrikant Chauhan, EVP at Kotak Securities, are with us on the show now. Shrikant, you go first. Yesterday was a big day for the frontline indices. Today, a bit of a pause, consolidation. How do you expect tomorrow to be, and any trade from an index point of view?
Yeah. Good evening, Rima. Good evening, everyone. I think, Nifty is consolidating, and it seems that it has taken a pause after rallying almost 900 points from the lower levels. Maybe 23,600, 650 going to act as very good support. If we see any correction, then there we should look for taking some long trades in the market with a stop loss close to 23,500. In fact, this particular zone is going to act as major support, and in the near term, I'm expecting Nifty to move towards the levels of 24,000 or maybe 24,200. So certainly it's a buy on dips sort of market, and we should look for adding position if there is any correction in the market.
Mayuresh, you think broader market recovery will continue?
So Prashant, as of yesterday, with the move that we saw, we have put the markets in a confirmed uptrend, which basically means that it does seem plausible that the few large mid-ish names within the broader market might do well. And when earnings are held up, I think selectively pockets within the broader market should continue doing.
Let's get to the stocks of the day. Titan was down nearly about 3% as the company's margins missed the street expectation. Even the commentary. Asian Paints is the other one where the stock was under pressure as the commentary pointed to a challenging demand environment. Mangalam is here with the details.
Well, for Asian Paints, it was the top Nifty loser today. The company reported its numbers yesterday during markets, but post-markets, when we had the conference call where the management did allude to, no improvement in the fourth quarter either. There is continued stress in urban, and they are expecting low single-digit sort of volume growth to continue even as they improve quarter on quarter. The company is still 2 quarters away from double-digit volume growth, and at the same time, the competitive intensity is high as well. That caused the stock to decline in today's trading session. Remember, after having corrected about 30% from the highs, the stock is still trading upwards of 48, 49 times FY26 price to earnings. So brokerages saw limited upside in Asian Paints from current levels, and most of them are awaiting better entry points as well. So the brokerage commentary comes up for you on the screen. Most of them have pared their estimates by around 4 to 5% and have underweight or underperform ratings itself. For Titan, however, remember the company's operating performance was marred by a one-off. We spoke to the management today. They target 20% annual growth in the jewelry business. The third quarter had 25%, obviously, because it had the festive season impact as well. But on a year-to-year basis, they are also expecting 11% margins in the jewelry business, however, to sustain. Remember, the margins earlier for the company were closer to mid-teens itself. So now the street is adjusting itself to the lower new normal for the margin in the jewelry business for Titan. And they haven't yet announced lab-grown plans in public yet, but I'm sure something's under works, is as per the management who spoke to us here on CNBC-TV18 today.
The growth which we typically look at every year is in the ballpark of 20% from an annual point of view. And that's the kind of thing that we would be satisfied with rather than continuing to maintain the 25 in every quarter. So the long runway in terms of growth and our having just a single-digit market share, our focus continues to be on sales growth and with a stable margin around that 11% ballpark. That's what I would gun for. That's what we are pushing for.
I think what was very clearly visible was that the urban centers were not batting. And as you rightly said, there has been down trading in terms of the market, in terms of what we have seen. I think what was more complex also that, the festive season was very, very short. It was a shorter Diwali to that extent. So as we see, I think the month of October really kind of impacted us very highly in this quarter to that extent. So I think that is what possibly has impacted the overall growths in terms of what has come in. As we go ahead, we are looking at single-digit volume growths for quarter 4 for definitely in terms of what we would kind of really endeavor to get as we kind of go forward.
Okay, well, from FMCG names, and we'll come and get some views from our guests in a bit. Capital market plays were the other area, right? The index itself about 4-5% higher. Angel, the broking companies and the capital market infrastructure names, RTAs, AMCs, I mean, you name it. There was that Kotak report as well, which I think added fuel to the fire. Vamakshi is here to wrap up that for us. Vamakshi, over to you.
Well, absolutely, Prashant. All of these capital market plays were in focus today, starting with Angel One on the back of its monthly business update. Cross-client addition was down nearly 15.4%. In fact, the client acquisition slowed down after seeing a good uptick in the month of December. Client base, however, steadily grew by 2.1%. Average daily orders were down 3.7% month-on-month, but the average daily turnover actually recovered. It saw a growth of almost 6.3% on a month-on-month basis as compared to the sharp fall that we had seen in the month of December. The company also managed to improve its market share across segments, which includes equity, F&O, as well as the commodity market. In fact, apart from that, there's a note that came in from Kotak as well on the capital market theme. They say that recent correction across AMCs, RTAs offer a more reasonable risk reward. For AMCs, they expect HDFC, AMC and Nippon Life to deliver high AUM growth over the next couple of quarters. As far as ABSL and UTI AMC are concerned, they say that they have been showing signs of performance revival in select large funds, but they still await stronger signals to turn more assertive. Despite that, they've gone ahead and upgraded HDFC AMC, Nippon Life AMC to add. They've gone ahead and upgraded UTI AMC to buy, and they've retained an add rating on ABSL AMC. RTAs were also in focus today. Kotak has gone ahead and upgraded its rating on CAM to add from reduced target price at 4,000 rupees per share. They say that the valuations here are more reasonable. Yield-related and capital market headwinds are already baked into the assumptions. But that is not the case for KFIN. They believe they like the progress with the non-MF segment execution, but they're waiting for better entry valuation. So given that, they have a sell rating on KFIN, target price at 1,000 rupees per share.
Thank you very much for that. Let's address all these buzzing stocks. Mayuresh, first on Asian Paints, stock prices typically bottom out before business bottoms out. So do you think Asian Paints is at that stage right now, or do you expect more price correction?
There is a possibility because of the downtrading, the competition that is playing out in terms of pricing, and therefore how volume will play out. The management has made it very, very clear that Q4 will also be very, very soft. And therefore, how do discretionary trends come back? Obviously, with the rate cut bonanza announced in the budget, the slab cut bonanza announced in the budget, what you probably expected to see is some element of demand coming back by the first half of the next financial year. But till that point of time, my own sense is that it might just continue with this underperform track.
You know, these capital market plays, what's your view, Srikanth? Any thoughts? Anything what's looking the strongest in that sense?
Yeah, Prashant, if we go through with all these 3-4 stocks, then in that specifically, I would say this particular HDFC AMC, that one is much better. It is holding above its important support levels. And whenever there is like a fall in the stock close to 3,700 levels, we saw good amount of recovery towards the levels of 4,000, 4,500. So at these levels, the risk reward ratio is quite favorable for creating any positional trade. And also we like CAMS, where we are like, we saw a very sharp sell-off in last 2 months. From the levels of 5,500, it fell to the levels of 3,400, and now again it is bouncing back. So at this level, there also I'm expecting very strong bounce back towards the levels of maybe 4,000, 4,400. So at this level, CAMS as well as HDFC AMC, we should look for adding.
Yeah, the one is Aditya Birla AMC, right? 900 to 600, and it's recovered 20%. Actually, most of these stocks from their absolute lows, but nobody buys at the absolute low, have come up between 15 and 20%. Including the names that Srikanth mentioned. Oil marketing companies were the other ones. They gained between 2 and 3% after falling sharply yesterday. Goldman Sachs has upgraded their view on these stocks. Sud is here to tell us why. Sudarshan, over to you.
So oil marketing companies are down in the range of 20 to 25% from their peak that they had hit in early 2024. But in the last few days, all these 3 names have moved somewhere higher by 5 to 6%. And this is after Goldman Sachs has come out with a note upgrading all the 3 names. It has upgraded BPCL and HPCL to buy and IOC to neutral. For HPCL, target is rupees 400 and BPCL, it's rupees 360, implying upside of 17 to 38%. But for IOC, it sees a fall from the current level, and target price for IOC is rupees 110 per share. For HPCL, it sees 40% EBITDA CAGR over FY25-27. For BPCL, it estimates 10% free cash flow yield in FY26, and for IOC, it believes that risk reward is favorable. Now, giving the rationale behind the upgrade for all these three names, it says earning risk related to lower discounts, lower crude discounts, and the LPG under recovery are priced in. And second, FY26-27 setup is improving for OMCs given its target for lower crude price. By 2025 end, it believes that Brent would be around $70 per barrel. Also, it is constructive on Singapore refining cracks and free cash flow, which is a key metric for all these three names. It believes that FCF will recover in FY26. And considering all these factors, it has upgraded all the three names, BPCL, IOC, and HPCL.
Thank you very much for that. We'll also thank our guests for joining in this afternoon. We'll slip into a break. On the other side, the top corporate voices and the key market events to watch.
Investors, I think, are therefore very nervous about it. And it's interesting, the US is underperforming the developed markets this year. As you've noted recently, the dollar's lower. So this is all, I think, creating a lot of uncertainty, which I think will have an impact on investor behavior.
कुछ लोगों को अब जब एआई की बात होती है, कुछ लोगों को अब ये शब्द फैशन में है तो बोला जाता है, लेकिन मेरे लिए सिंगल एआई नहीं है, डबल एआई। भारत की डबल ताकत है। एक एआई आर्टिफिशियल इंटेलिजेंस, दूसरा एआई एस्पिरेशनल इंडिया। हमने स्कूलों में 10,000 टिंकरिंग लैब्स शुरू किए और आज उन टिंकरिंग लैब से निकले बच्चे रोबोटिक्स बना करके लोगों को चकित कर रहे हैं। और इस बजट में 50,000 नए टिंकरिंग लैब्स उसका प्रावधान किया गया। भारत वो देश है जिसके इंडिया एआई मिशन को लेकर के पूरी दुनिया बहुत आशावादी है और विश्व के एआई प्लेटफॉर्म में भारत।
Welcome back. Let's get you all the big voices from the corporate world. First up, Happiest Minds, Venkat Narayan said that the firm was hopeful of hitting or coming close to the 30% revenue aspiration for FY25. This is on the back of consolidation in Middle East and an organic growth pickup in Q4. They also added that they are holding on to their FY25 EBITDA margin guidance of 20 to 22%. Speaking about the AI play, the company said that they've got 2 customers who progressed from proof of concept for generative AI deals. So they're moving from POC stage to product implementation stage.
Okay, well, we had Krishnan Ramachandran of Niva Bupa who joined us early in the morning after their third quarter numbers. It's, of course, a recently listed insurance company. They told us that for the 9-month ended period, FY25, things have been better on a year-on-year basis. Added that the market would grow at a CAGR of 15%, and Niva, like it has done in the past, would continue to sort of add 8 to 10% on top of what the industry is already doing. He said the aim was to balance growth with profitability.
And Anand Agarwal of VMA told CNBC-TV18 they're seeing a strong revival in Tier 2, Tier 3 markets. He attributed the company's performance to a revival in demand and its own internal strategies. Looking ahead, he said the target was to achieve double-digit same-store sales growth and 12% EBITDA margins.
All right, let's get you quickly some of the events to watch out for as we come back tomorrow. There are some earnings, especially from the consumer side. Mangalam is here with that list. Mangalam.
Well, it's a big day tomorrow. It's Thursday, so it's obviously Nifty weekly options expiry. And speaking about the Nifty itself, there are 6 Nifty earnings that are, due tomorrow. So we have Bharti Airtel from the consumption space. We have ITC, Britannia, Trent. And then you have SBI and Hero MotoCorp as well. The other important results from the F&O space, we have Apollo Tyres, Aurobindo Pharma, BEML and MRF, all of them reporting their numbers. So a very earnings-heavy day. But you're also looking at some global macros. So Bank of England, the interest rate decision, whether they go ahead and cut them or not is the big question that everyone will get an answer to. USA's initial jobless claims data comes by as well. And ahead of, tomorrow's the SBI earnings, and day after, all eyes will be on the Nifty Bank itself because of the RBI policy outcome, the first monetary policy of the new governor. So all things considered, next 2 days, very event heavy.
Indeed. And before we wrap the show, OpenAI CEO Sam Altman said that India is the company's second largest market. Users in India have tripled in 1 year. Sam Altman landed in India just late last night yesterday. Today he met the IT Minister Ashwini Vaishnav. And he's all set to meet Prime Minister Narendra Modi. Remember, this comes in the backdrop of OpenAI facing a copyright lawsuit in India, which is filed by the top media outlets. Ashmit Kumar reports on Sam Altman's India plans and his day in the national capital.
Sam Altman's whirlwind tour of Asia comes to India after his Korean leg of the journey. He landed in India late last night, and this visit comes amidst a growing realization and understanding within India of the importance of building India's own foundational large language model, its own AI model.
India is an incredibly important market for AI in general, for OpenAI in particular. It's our second biggest market, tripled users here in the last year, but mostly seeing what people in India are building with AI at all levels of the stack. Chips, models, all of the incredible applications. So I think India should be doing everything. I think India should be one of the leaders of the AI revolution.
Interestingly, this visit by Sam Altman comes at a time when India has announced its own mission of developing its own sovereign AI model. It also comes at a time after Sam Altman in 2023 had said that it was hopeless for India to compete with developing its own foundational model. And also interesting because it comes after DeepSeek disruption, delivering an AI model at a fraction of the cost of the investments made by OpenAI.
We're now in a world where we made incredible progress with distillation. We learned a lot how to do small models, and these reasoning models in particular can be, it's not cheap, it's still expensive to train them, but it's doable. And I think that's going to lead to an explosion of really great creativity.
Taking cue, even the Indian IT minister said that with costs progressively coming down for building an AI model, India hopes to replicate the DeepSeek success.
Every year, it's 10x reduction in the cost of intelligence. That kind of innovation can come from anywhere in the world. Why shouldn't it come from India? That's the point.
And while there's a lot of excitement within the Indian startup community, the understanding is that while India is great at building applications, but there's a lot of ground to cover for building your own foundational model.
OpenAI is thinking of open sourcing as a serious topic on the table. We all want to put the bet right away in the ring, saying that here comes the foundation model, but there is a calibrated approach, and there was a lot of acknowledgement that I saw today.
I don't completely agree with the premise that India is lagging behind. I think Indian startups are innovating in areas where they understand best and they have core competence in.
I think we should definitely win the application layer. We have to do a lot at the model level. I don't think we are as close to building the next DeepSeek at all. But application layer is definitely which can be a moat. I think every organization should put aside an R&D budget for AI, and we should build applications using AI.
Sam Altman called on Indian developers and Indian startups to build solutions on top of their foundational model. But with increased talk of ChatGPT going open source, there's a great deal of excitement on how India can exploit this opportunity. In New Delhi, Ashmit Kumar.
Well, that's a great report from Sam Altman's visit to the national capital and all the happenings there. Well, it's a wrap on this edition of Markets Forward from Rima, me, everyone in the program. Thank you very much for staying with us. News and updates follow after a quick break.
एक महत्वपूर्ण स्थान प्राप्त कर चुकी है।
This was the third consecutive year that the BMC budget was presented to an administrator and not to a standing committee. Why? Because the term of the corporators ended in March 2022 and the elections for the new term and the new corporators are yet to be held. Now this 74,427 crore rupees budget, out of this, an allocation of 43,162 crore was made for capital expenditure, 5,100 crore rupees for roads and traffic department, 5,807 crore rupees for Mumbai Coastal Road project, 3,039 crore rupees for storm water drain department and 650 crore rupees for sewage operation department. For key public services, rupees over 4,000 crores were allotted to education department, over 7,000 crore for health department, 261 crore rupees for fire department, 309 crore rupees for disaster management and 220 crore rupees for the garden department. BMC announced that it's going to start 250 new public clinics, also known as Apla Dawakhana, all over the city. One interesting initiative announced by the BMC was the introduction of cyber awareness program for students. It will serve two key purposes. One will be to ensure that the students learn how to use the internet in a safe manner and to keep them safe from cyber fraud. BMC also focused on environment initiatives and projects like promoting eco-friendly cremation and proper disposal of residue from idle immersion. These are the projects which will take place under environmental related initiatives in the next few months. We also spoke to Bhushan Gagrani, the BMC commissioner himself. This was the first time that he presented the BMC budget. Listen to what he has to say about this BMC budget. So your budget also mentioned that you guys are planning on imposing a tax on the commercial properties in slum areas.
That's right.
If you can elaborate that. So from when this new tax will be levied?
It is actually not a new tax. In fact, we are enhancing our asset.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. The Indian rupee sinks to a new low against the US dollar as the greenback continues to strengthen. Sensex and Nifty end with minor cuts after a range-bound session, even as mid-caps outperform. US President Donald Trump says he is in no hurry to speak with China's Xi Jinping and diffuse tensions after sparking a new tariff war. Stock markets tread with caution across the world. Gold prices hit a record high. Top industry leaders expect a 25 basis point rate cut as a three-day monetary policy meeting kicks off. A majority of executives at the CII National Council meet say consumption is picking up. Also warn of a potential global trade war as the biggest risk to businesses. 46% turnout in Delhi as of 3 p.m. as people vote in state assembly elections. Chaos in some polling booths amid allegations of fraudulent voting.
India is an incredibly important market for AI in general, for OpenAI in particular. It's our second biggest market, tripled users here in the last year.
OpenAI CEO Sam Altman says India is the company's second largest market and users have tripled last year. Meets IT Minister Ashwini Vaishnav and is set to meet Prime Minister Modi. OpenAI is facing a copyright lawsuit in India filed by top media outlets. A US military plane carrying more than 100 Indian nationals lands in Amritsar amid Trump's crackdown on immigration. The deported individuals include 79 men, 25 women and 12 minors, with the youngest being a 4-year-old. Trump claims to be deporting hardened criminals. US President Trump likely to host Prime Minister Modi at the White House on the 12th of February. Sources say both leaders will lay out a roadmap to seal a trade agreement within 8 months. Tesla CEO Elon Musk is also likely to call on the Prime Minister and seek a level playing field. Tesla is hoping to launch a low-cost electric car in India this year.
The U.S. will take over the Gaza Strip, and we will do a job with it, too.
Donald Trump sparks widespread condemnation and ridicule after declaring U.S. will take over the Gaza Strip, adding that Palestinians should move to neighboring countries. Trump made the shocking comment during a news conference with Israel's Prime Minister Benjamin Netanyahu, who is in Washington. Nissan is all set to call off the merger talks with Honda. According to a Nikkei report, a tie-up between the Japanese companies would have created the world's third largest automobile company. Right, let's start with market action. Stocks are trading with caution across the world, with the US and China now embroiled in a fresh tariff war after US President Trump fired the first salvo. China has retaliated with tariffs on select US goods. Global trade experts believe Beijing has taken limited action, leaving room for potential negotiations. When asked about the prospect of talks with China, Trump said he is in no hurry to talk with Xi Jinping.
No, we'll speak to him at the appropriate time. I'm in no rush. We're going to do very well against China and against everybody else. Right now, they've taken advantage of the Biden administration like I've never seen. I've never seen. The deficit with China is about $1 trillion. Think of it, $1 trillion. They're using our money to build their military.
Sensex and Nifty ended minor cuts on the last street. Sensex lost over 300 points and Nifty lost over 40 points. Midcaps managed to buck the trend, with the Midcap index gaining over 360 points. Financial stocks also managed to gain in trade, with the Nifty Bank index gaining over 180 points. In the money market, the Indian rupee hit a new low against the US dollar. The greenback continues to gain strength thanks to Trump's tariff rhetoric. $1 now costs more than 87 rupees. Gold prices hit another record high today. This as concerns of a new trade battle between the US and China fueled safe haven demand for the yellow metal. Concerns of rising inflation also pushed prices higher. Gold prices also hit a record high of 83,800 rupees for 10 grams in India. A US military plane carrying illegal Indian immigrants has landed in Amritsar. This after US President Donald Trump's administration deported them from Texas on the 4th of February. Sources have told CNBC-TV18 that the military aircraft was carrying 104 Indians and they largely hail from Punjab, Haryana, Gujarat and Maharashtra. Sources have also said that more Indians could be deported in the coming months as and when their identities are confirmed. And staying with Donald Trump, the US president is likely to host a dinner for Prime Minister Modi on the 12th of February. Sources have said that the two leaders will have a bilateral and delegation-level meeting with a trade agreement on the anvil. Parikshit Luthra joins us now with the details. Parikshit, what's on the agenda?
Well, all eyes on that big meeting on the 13th of February, that is next week. We have been told by sources that Donald Trump will be hosting Prime Minister Modi for a dinner at the White House on 12th evening, the day he arrives in the United States. 13th will be the day of key meetings when they will meet bilaterally, one-on-one, and delegate-level talks will also take place. Now, trade will be very high on the agenda. Trump will want answers on how India is going to resolve that trade deficit with India. One way that India could do is by offering to procure more C-130 Hercules transport aircraft for the Indian armed forces from the US. Secondly, to buy more P-8I maritime patrol aircraft for the Indian Navy from the United States. So these two options may be pitched to Donald Trump and the US administration. At the same time, both leaders may declare a strong intent in their press conference to sign an early trade deal as early as 7 to 8 months. That is when the US President Donald Trump visits India this year for the Quad Summit. So that is something that remains to be seen. But definitely the trade deficit would be high on the agenda. There will also be a community event which the PM may address. The details of the same are being worked out.
Parikshit, please stay on with us because we are also talking about Tesla CEO Elon Musk, who's expected to meet Prime Minister Modi during his visit to the US. Take us through what is likely to be on the agenda in that meeting.
Well, India has been wooing Elon Musk and Tesla for the last few years. And Elon Musk has been considering India as a strong manufacturing destination. But things haven't really worked out since then. Now we're told that there will be a meeting between Elon Musk and the Prime Minister. In fact, Elon Musk could be a part of a select group of US CEOs who would be calling on Prime Minister Narendra Modi. What Musk could ask for through the US administration and even through Donald Trump is for India to lower tariffs even further. Donald Trump has called India a tariff king. Elon Musk has always complained about hard tariffs in India. And Musk may express the intention of launching a low-cost electric vehicle in India sometime this year. They've also been scouting for showrooms to start retail operations, and it's quite possible that he may launch his affordable car in India as well. But any immediate announcement on sales operations or manufacturing in India are unlikely, but the visit, we are told, and the meeting would be a positive one. At the same time, Elon Musk may want more clarity on Starlink and when Starlink can begin operations in India, so approvals for the same, and also a deeper collaboration between SpaceX and ISRO would be on Elon Musk's mind. So let's see what happens. India has been offering sweeteners. They offered a scheme last year whereby Elon Musk could commit to investing $500 million in manufacturing in India and get a 15% concessional import duty to import and sell cars into India. Now the union budget has reduced the import duty of 125% on cars over $40,000 to 70%. We've scrapped basic customs duty on lithium-ion batteries. So a lot of sweeteners being offered. Let's see what Donald Trump and Elon Musk express in those meetings.
Right. Thank you, Parikshit, for that update. On that note, it's time for a short break. Coming up next, Trump sparks widespread condemnation and ridicule after declaring that US will take over the Gaza Strip. More on that when we return.
Under the assessment made, the properties which are in the slum, however, which are being used for the purpose of commercial, they were not covered. So this is for the first time we are doing the survey and bringing them in the tax net. Not necessarily that we will be imposing huge tax. It's a normal tax. It's not a very huge tax. However, the coverage will be given to or commercial properties.
So BMC has not introduced any new project this time. In fact, you have focused. Correct. Yeah. But sir, does it mean that is there any cause for fiscal concern, sir?
No, there is no fiscal constraint. We have enough adequate cash flow as well as resources.
हमारे देश में एक प्रधानमंत्री हुआ करते थे, उनको मिस्टर क्लीन करने कहने की एक फैशन हो गई थी। उस प्रधानमंत्री जी को मिस्टर क्लीन कहने की फैशन हो गई थी। उन्होंने एक समस्या को पहचाना था और उन्होंने कहा था कि दिल्ली से 1 रुपया निकलता है तो गांव में 15 पैसा पहुंचता है। अब उस समय तो पंचायत से लेकर पार्लियामेंट तक एक ही पार्टी का राज था। पंचायत से पार्लियामेंट तक एक ही पार्टी का राज था और उस समय उन्होंने सार्वजनिक रूप से कहा था कि 1 रुपया निकलता है 15 पैसा पहुंचता है। बहुत गजब की हाथ सफाई थी। पंद्रह पैसा किसके पास जाता था ये देश का सामान्य मानवी भी आसानी से समझ सकता है। आदरणीय सभापति जी, देश ने हमें अवसर दिया, हमने समाधान खोजने का प्रयास किया। हमारा मॉडल है बचत भी विकास भी। जनता का पैसा जनता के लिए। आदरणीय सभापति जी, आजकल मीडिया में ज्यादा ही चर्चा हो रही है, सोशल मीडिया में और अधिक हो रही है। कुछ नेताओं का फोकस घरों में जकूजी पर, स्टाइलिश शावर्स पर लेकिन हमारा फोकस तो हर घर जल पहुंचाने पर है। आदरणीय सभापति जी, हमने ये जो अलग अलग कदम उठाए उससे लाखों करोड़ रुपए की बचत हुई, लेकिन उन पैसों का उपयोग हमने शीश महल बनाने के लिए नहीं किया।
Welcome back. US President Donald Trump has made a proposal for the United States to take over the Gaza Strip. This comes after Trump hosted Israeli Prime Minister Benjamin Netanyahu in the White House. Addressing a press conference, he said that Trump plans to relocate Palestinians to neighboring nations and redevelop the war-torn enclave in what he described as the Riviera of the Middle East. Here's a report.
Ladies and gentlemen, the President of the United States.
US President Donald Trump said the US would take over the war-ravaged Gaza Strip and develop it after Palestinians had resettled elsewhere.
And I don't want to be cute, I don't want to be a wise guy, but the Riviera of the Middle East, this could be something that could be so bad, this could be so magnificent.
It's a move that would shatter decades of US policy towards the Israeli-Palestinian conflict. Speaking after a Tuesday meeting with Israel's Benjamin Netanyahu at the White House, Trump did not provide specifics and did not directly respond to how and under what authority the US can take over and occupy Gaza long term.
The U.S. will take over the Gaza Strip, and we will do a job with it too. We'll own it and be responsible for dismantling all of the dangerous unexploded bombs and other weapons on the site, level the site and get rid of the destroyed buildings, level it out, create an economic development that will supply unlimited numbers of jobs and housing for the people of the area.
Netanyahu, whose military has fought for more than a year with Hamas militants in Gaza, would not be drawn into discussing the proposal in depth, but said Trump was, quote, showing willingness to puncture conventional thinking. Trump also announced earlier the proposal to permanently resettle Palestinians from Gaza to countries like Jordan, Egypt and other neighbouring Arab states. That goes beyond suggestions he has made about Gazan resettlement that Arab leaders have already steadfastly rejected. Forced displacement of Gaza's population would likely be a violation of international law and be fiercely opposed by Western allies. Some human rights advocates liken the idea to ethnic cleansing. Analyst Brian Katulis from the Middle East Institute told Reuters that he believes the proposals lack thought.
Most certainly there's no plan behind this. And if there is, it's not a plan that has any connection to reality in today's Middle East, and it's certainly not in consultation with the Palestinians or neighboring countries like Egypt and Jordan.
Senior Hamas official Sami Abu Zuri condemned Trump's calls for Gazans to leave as expulsion from their land and a recipe for generating chaos and tension in the region.
Ukrainian President Zelensky has said that he's ready to have direct talks with Russian President Putin. In an interview, Zelensky said that he will engage in a conversation if that's the only way in which peace can be brought to Ukraine. He also added that the United States and Europe have also to take part in these talks. And with that's a wrap on this edition of Business 360. News and updates continue right here on CNBC-TV18.
इसका उपयोग हमने देश बनाने के लिए किया है।
Let's Talk Money.
Hello and welcome to the post-budget special edition of Let's Talk Money. I'm your host, Rupee Upadhyay. So it's finally happened. The magic has been unleashed. The FM has decided to give a bonanza to the middle class with the much talked about reduction in personal income tax rates and slabs. I mean, the whole change in the new tax regime. That throws up a lot of questions. Of course, it throws up the question of how much you and I are going to save, but also the bigger question. A lot of us have still been with the old regime because we love our deductions, whether it is, ATC, 1.5 lakhs, whether it's Mediclaim, housing, etc. But now, with the new slabs and the new rates and the new relief on rebate, is it time to move to the new income tax regime? Well, to answer this and a lot more, we have with us two experts. We have Feroz Aziz, Deputy CEO at Anand Rathi Wealth, and Sonu Iyer, who's the tax partner and people advisory services leader at EY India. Ladies and gentlemen, great to have both of you together with us on the show. So thank you very much for joining in. Sonu, I think you are wearing the colors of the season, right? It's all green. Suddenly taxpayers are actually seeing green because this is a meaningful relief that's come in this budget, right?
Thanks, Rupee. First of all, thank you for having me on Let's Talk Money. And yes, it's right time to talk money, given the green bonanza that's coming our way. All of us literally are impacted or have something to cheer about this budget. Of course, the particular focus has been on the low-income earners or the middle-income earners, but a lot to cheer in the budget from a personal tax standpoint.
Absolutely. And Feroz, let me get some opening thoughts with you as well before we dive into the tax calculations. What did you think of the budget? At least there was no change on capital gains, and this income tax relief seems fairly real.
Yes, it is, of course.
And substantial.
Real. Absolutely substantial. I had about 3-4 demands. I think inadvertently they've been heard. One is consistency, simplicity. The other was parity. These were the three things I was asking for. Consistency, taxes haven't been changed. Just in 8 months, we had all asset classes being touched on the capital gain front. Of course, we are waiting for the bill to come in, and I'm reasonably sure that the tax rates won't be changing. That's point one. In terms of simplicity, there's one very strong nuance which exemplifies simplicity. Is the tax rates and slabs have become multiples of 4 and 5. You see, 4, 8, 12, 16, 20, 24. Yes, I've never been able to remember these because
and
every
now we can,
and the rates are 5, 10, 15,
20.
25, 30. So that's simplicity. Parity. See, consultants used to have Section 44A. Okay, if there was a salaried guy, he would have no headroom at all. He would pay 30% marginal tax rate. A consultant, if you just redesign my agreement, and if I'm below 75 lakhs, and if I can go for presumptive, as a consultant, I would bring down my tax to 1/5. Right? And that was such a big disparity. A consultant also works as much. An employee works more. But employees have zero headroom. You're going like a train. And then you have consultants who are like auto. They can change lanes anywhere. So I think that also has that disparity has been reduced.
Oh, absolutely. I mean, and those are some of the big salient features of the tax relief that has been ushered in. So let's straight away dive in. So now what we want to understand is get into the nitty-gritties and not only look at the slabs and the rates that Feroz mentioned, but let's start by understanding why this is good news, even if your income is just slightly over 12 lakh rupees, right? The reason we are saying nil tax is because the rebate has gone up. The first tax slab is still kicking in at 4 lakhs, but the rebate has gone up to 60,000, so therefore there's relief. But tell us why even someone whose total income, taxable income is coming to, let's say, 12 lakh 10,000, 12 lakh 30,000, why do these individuals also have reason to cheer?
Okay, let me take a step back. As you said, this is the change in the rebate available under Section 87A. So what this means is that starting April 2025, 1st April 2025, effective financial year 25-26, anyone whose total taxable income is up to 12 lakh will pay no tax because of this rebate under Section 87A. Total taxable income has to be, again, which is taxable at slab rates and not income that's taxable at special rates like your long-term capital gains or listed equity short-term capital gains, which are taxed at different rates than the slab rate. And this rebate under Section 87A is there even in the existing law, which is up to 7 lakhs, which is now going up to 12 lakhs. And even in the old tax regime, you have it up to 5 lakhs. And then the concept of marginal relief, wherein you are talking about someone who earns 12 lakh 10,000 also doesn't end up having to pay much more tax than someone who's paying at 12 lakh. The concept of marginal relief simply is that any tax that is payable on incremental income over the income threshold, which is eligible for nil tax, like 12 lakhs in this case, is, anyone who gets over 12 lakhs doesn't end up paying the full tax that would be calculated at the slabs. So I'd say that it is really a comparison between any tax payable on income to the extent it is more than 12 lakhs and what the income increase over 12 lakhs. So you do a comparison of two and go with the lower amount as the tax to be paid. That's the marginal relief. And that's what we can see in the tables as well. So
okay, but Sonu,
when you talk about
Sonu,
rebate...
but Sonu, on the marginal, we understand the concept, right? That if you're earning slightly above that 12 lakh, threshold where you get the rebate, you shouldn't be penalized. You shouldn't have to pay tax on the entire amount where your income is only slightly higher, marginally higher than the relief threshold. But up to what level is this relief available? 12 lakh, 5,000, 10,000, 20,000, 25,000. At some point, it has to stop, right? And you have to come in the tax slabs. So how does it work?
Right. Okay. So when if you could maybe bring back the tables, it's easier to sort of explain from the tables.
Yeah, we have them on.
Yeah. So we are saying that at different levels of income, you're going up to right up till 12 lakhs 70,000. There also you're getting a sort of a relief on marginal relief, because if you do a comparison between tax payable and increase in the income. So when your income is 12 lakhs 70,000, your increase in income is 70,000. The tax payable is 70,500. Marginal relief is a comparison between the increase in income and the tax payable. And therefore, we found that the tax payable is more than the income. So the relief is 500. So the individual at 12 lakh 70,000 pays only a tax of 70,000 and not 70,500 and is getting a relief of 500. If you do just to show you another extreme, when it sort of ceases to exist, if someone is at an income of 12 lakh 75,000, the increase in income is 75,000 over 12 lakhs. The tax payable computed on 12 lakh 75,000 is 71,250. Because the tax payable computed is lower than the income increase over 12 lakhs, that marginal relief is no longer available. So,
got it.
Somewhere between 12 lakh 70 to 12 lakh 75 lakh, it sort of ceases. The exact number would be 12 lakh 70,588, where this marginal relief ceases to exist.
Got it, got it. So that's how it'll work, and it's beneficial going all the way up to 12 lakh 75,000. By the way, those are rates we've taken, including standard deduction. After standard deduction, what is your taxable income? That's where, the marginal relief actually kicks in. Feroz, that brings us to the other big question that I'm sure a lot of your clients also must be wondering or thinking. I mean, the ones that have been, following the old regime till now, whether now with this level of a tax rejig in terms of the slabs, the rates, whether it's just simpler and easier to move to the new regime itself. I mean, what's the kind of first cut analysis, or what's the advice that you're giving out there?
No, it's very, very clear that you don't have to do the old tax regime at all unless you're married to it and there's some emotional attachment you have. Okay, because Nirmala ma'am has done something very smart. Okay, when you do the back of the envelope calculation, the perceived value of the gift is greater than the actual value of the gift. When you look at how the tax payers are there, if you give 80,000 benefit to such a large universe, she would have actually ended up spending 2,62,000 crores. But in this budget speech, she said 1,10,000.
That is how much she has to let go.
Let go. But actually perceived value is 80,000 per head for those many taxpayers. That's because a lot of them are actually using the old tax regime and getting a lot of jugaad wala paisa. Right? Now so its perceived value is greater than the actual value. So it's not going to benefit so much consumption as much as people are saying it is. Second, ULIP is a write-off. ULIP, there was an intersection between ULIP buyers and the old tax regime guys, almost 90%. If old tax regime is gone, ULIP as a Jan, Feb, March product is written off.
Correct.
So that's the long-term impact of that. The third, so I personally tell everybody to go into the new tax regime. Don't invest in debt, which is forceful debt. If you have to ask me, my clients come from an HNI and ultra HNI backdrop.
That's right.
So I'm getting their PPFs and EPFs also withdrawn because there's no point being in there. You can rather have debt because marginal tax rates have come down. Capital gain tax also is beneficial. The third thing, which is very important, is jugaad will stop in this country.
How do you say that, or why do you say that?
Because 3 jugards used to be done by salaried guys also. Because India ke blood mein hai. Ek to what he would do, he would fudge rent receipts. That was one of the biggest data point which ministry has. Rent ki time aa gayi, rent receipt fudge kar raha hai aadmi, de raha hai salary. Because that's the only thing he was left with. Second, people would donate to political parties. They will donate to NGOs. And they're taking some kickbacks. So all this will stop because the new tax regime doesn't allow that.
Correct.
That's the most important message for me. Ethical professionals will be rewarded in the new tax regime.
Correct.
So that I think is getting missed out completely. And the last bit is the old tax regime has anyways become defunct for everybody who earns. There are 1,350 people who earn more than 10 crores. The surcharge cap of 37 down to 25 is only applicable in the new tax regime.
Correct.
These 1,350 people, none of them were in the old tax regime.
Yeah.
Because
they had anyway moved on because they were getting a lower surcharge rate in the new regime.
So that's why I'm saying the perceived value is greater than the actual one.
So Feroz is all for the new tax regime, got that, but we still need to understand the maths. I'm going to quickly head back to Sonu. Now, Sonu, help us understand this because when we see the numbers, we'll believe it, right? Because as salaried individuals, we loved our deductions. We loved, the whole sort of piece on home loan, Section 80C, 50,000 NPS, then Section 80D for Mediclaim. We love to hold on to that. That was our, effort of saving. But is it pointless now to calculate and tabulate all of that? Is it still just better to move to the new regime?
Okay, no, you still have to do your comparisons. Between new tax regime, existing new tax regime to the proposed new tax regime, it's almost everybody can think of moving because there will be a saving. But those who are holding on to the old tax regime, although data suggests, as per the government, that in the media reports, almost 72% of the people had already moved to the new tax regime. But I think, Madam Finance Minister has created a situation where everyone will be almost compelled to do a comparison and make a decision. And we'll find a lot of people moving. The reasons that Feroz called out, whether it's an HRA reduction, ATC benefit, ATD medical benefit, all of these, require some sort of administrative work in terms of keeping and managing your receipts, etc. So you want to get rid of all of that because you're getting the same benefit, or in fact, actually saving more money under the new tax regime because of the widening of the tax slabs and lowering of the tax rates. So you will see people move. In fact, the government on its income tax portal, the www.gov.taxin, actually does have www.incometax.gov.in has a calculator that helps you do a comparison. And it actually throws up it's a basic calculator which tells you if this was your total annual income, these are the deductions you've been claiming, this is your saving, and it tells you which regime is better. So that is something that's easily accessible to all. And there's, of course, an advanced calculator also available on the income tax portal that can help you come to an exact benefit in terms of the making the decision on whether to switch to new tax regime. But maybe, it's best explained by in an example that in terms of the deductions people were claiming, that if you look at the old tax reduction, if your total deductions were about 500,000 rupees, you are going to be able to you can actually go up to 800,000, that's where the break even is coming in terms of, where you would want to be able to move to new tax regime, as simple as that. So, income up to 24 lakhs, the income varies at different levels. So, there is a specific calculation. But beyond 24 lakhs, if you have deductions more than 8 lakhs, you will stay on with the old tax regime. But if your deductions are less than 8 lakhs, then you will switch to new tax regime.
Okay, so 8 lakhs is that magic number. You have to see if all of your deductions put together are going above 8 lakhs, then maybe you're still better off in the old regime, right? And this would mean that you have to include HRA, because otherwise, without HRA, I don't know if there are other deductions significant enough that will total up to over 8 lakhs, Sonu?
No, so that's where it is. Unless, Feroz mentioned if you have, making donations to political parties, if you're doing ATG deductions to charitable institutions, etc., or, you have some deductions on account of disabled dependents, etc., those will become very exceptional situations. If I look at the large mass of population that typically takes deduction, say for, LIC, tuition fee, etc., which under ATC adding up to 1.5 lakhs, then you have your ATCCD deduction in case of additional contribution to NPS, or interest on housing loan, which is up to 2 lakhs. If you're claiming deductions in that part. Typically, to come up to 8 lakhs is a bit of a stretch. So, yeah, that's why most people will move.
Got it. So remember that number, 8 lakhs. Go back, check your calculations when we talk to your CA. If the reductions are going over 8 lakhs, only then maybe there's some merit in staying in the old tax regime. Have to take a break. But this is not the only thing. Lots of other things have happened in the budget. Some relief when it comes to the tax that's being deducted at source on the interest income that we are earning on, say, our bank deposits. So we'll talk about that, plus a bunch of other reliefs that have come in. Fine print, budget 2025. The discussion will continue.
Let's talk money.
We're telling Ukraine they have very valuable rare earth. We want what we put up to go in terms of a guarantee. We want a guarantee. We're handing them money hand over fist. We're giving them equipment. European is not keeping up with us. They should equalize. And look, we have an ocean in between. They don't. It's more important for them than it is for us. But they're way below us in terms of money. And they should be paying at least equal. They should really be paying much more than us. But let's say equal to us. And they're billions and billions of dollars below. So we're looking to do a deal with Ukraine where they're going to secure what we're giving them with their rare earth and other things.
Let's talk money.
Welcome back. You're with us on Let's Talk Money, and we are decoding the budget fine print and figuring out if this indeed is the budget that makes most of us move from the old income tax regime to the new income tax regime. And before the break, you heard Sonu give us a bit of a thumb rule that if your total deductions are going above 8 lakh rupees in a year, then perhaps, only then perhaps, you might be better off in the old regime. But even then, you have to do your own math and your own sort of calculations. Just a point here, when we talk about deductions, for us, for most of us, we'll exceed 8 lakhs if we're paying a high amount of rent and claiming HRA. So just some examples and some numbers over here. Now here, look at the assumption that we have taken, that the person is earning 35 lakhs and the rent, he or she is paying 50,000 per month, which is what a lot of us end up paying in cities like, Mumbai or Delhi or Bengaluru, etc. Now, even here, you can say these are all, and then the other deductions are there, ATC, etc. Even for a person like this, the person is better off in the new tax regime. You can see the total tax payable is about 6.3 lakhs in the new regime versus 6.7 lakhs in the old regime, even if you're paying 50,000 rupees of rent. Now, finally, looking at someone who's earning even more and living in an even fancier house. The example here talks about someone who's earning 65 lakhs and the rent paid is 1 lakh. Only in this sort of an example, when you do the math, the numbers total up to the fact that maybe you're better off in the old regime. So that's the point that Sonu was making earlier. Feroz, your thoughts on this whole old versus new debate. Help us out. Generally, I mean, you said directionally you're better off in the new. But is this the rough break-even level that you concur with?
Like you rightly said, because the ones which are the common ones is 4.5 lakh summation, even if you use the NPS 50,000 limit, unless you're doing those exceptional ones like
donating to political parties, donating to charity, and all of that.
4.5 lakhs, and then leaves you with another 3.5 lakhs. Like Sonu said, 8 lakhs is the break-even. So if you look at a metro city, because HR is also a complex one, right? It is 50% of your basic. There are 3 rules, and the worse off is how it is calculated. So 82 to 83,000. So I think whatever example you gave, 1 lakh, I completely endorse that. And I personally think you should never swim against the tide. Now, kitna bacha loge? 20,000 2 saal ke liye. Come swim with the tide. It's always a good thing to do. That's my opinion. Now, you can do second decimal mathematics to save 12,000 rupees. You can work a little harder and get that 50,000 rupee extra bonus as a professional.
Okay, one more thing that I want both of you to clarify on. When we are filing our income tax return, so that could include all kinds of income, right? There's income from salary, there could be income from interest, there's income from capital gains, different, varied heads of income. So when we are saying that rebate is, as much as 60,000, if total income, taxable income is less than 12 lakh rupees, then that is what? That's only salaried income?
So total taxable income, which comprises of income which is taxed at slab rates. So you could have maybe, like the debt mutual funds, etc., which are now taxed at slab rates included in this income. But supposing you had, say, taxable income of 12 lakhs, out of which 8 lakhs is your salary income, interest income, all of them which are taxed at regular slab rates. But you have 4 lakhs of long-term capital gains. You will not get the rebate for the total 12 lakhs. You'll get the rebate for 8 lakhs. But for the 4 lakhs, you'll have to calculate tax as per the slab rates and then pay tax on it. So you'll have to be careful. This is very specifically, the government has inserted a proviso in the law this time, which is proposed, wherein they're saying this is only eligible, rebate that's eligible for income which is taxed at the slab rates, not income which is already taxed at some discounted rate of 12.5% or 20% as is the case in some short-term capital gains.
Okay, that's an important point as well.
Does that answer your question?
Yes.
Yeah. So, you want to add to it?
So what Sonu explained, for its application, where's the good news? The good news is for debt funds.
Okay.
Right? If a guy has 1 crore rupees in a debt fund, he's going to earn 7 crores, 7 lakhs, right? If you're earning 7 lakhs, it's anyways taxed at marginal tax rate, so there will be 0 capital gain because there is a rebate. So this is very good for senior citizens who were very upset that you're now pushing me back to deposits because both are now marginal tax rates. So it's a great news for all products who are at marginal tax rate anyway.
Whatever is taxed at slab rate is clubbed in this limit of 12 lakhs.
Absolutely.
That is the important takeaway. Okay, I think we're down to the last 30 seconds. So very quickly want final advice from our guests. Feroz, in terms of our mutual fund investments, though of course nothing has changed in terms of capital gains, but the market started believing that now with this big income tax cut, consumption will do well, consumer stocks will do well. You should not have manufacturing and capex too much in your portfolio. I know market can also go to excesses, but from a mutual fund portfolio perspective, would you change anything, add or subtract anything?
So I personally think these are narratives built. Somebody actually told me the same narrative in one of those panels on the budget day. I asked him, what are the top 3 expenditures of the government apart from interest? It is transport, defense, and railways, right? So all of it has some degree of capital gain, right? So it can be consumer spending, which can be propelled. Of course, I have for the last 6 months been saying ABC is the theme. Automobile, banking and consumption are the themes which fund managers should also skew. But you need not buy a specific thematic scheme to get the benefit of this ABC. And this ABC got reinforced in this budget, thankfully.
Okay, got it. So no reason to rush and quickly start sort of rejigging your portfolio. So no final advice, tip, anything else you'd like to leave with? We didn't get a chance to discuss, but there's relief also on the interest income on deposits, right? There's some good news that's coming if you want to remit money overseas for funding higher education. So quick summary of the other highlights that stood out for you.
So very quickly now, the TDS, which is applicable on interest income typically kicks in if your interest income is over 40,000 rupees and for senior citizens at 50,000. What has happened in this budget is that the TDS threshold for senior citizens has gone up from 50,000 to 1 lakh rupees. That means that, sometimes what the challenge which senior citizens face is that they have to file tax return to get back the refund of TDS, which is deducted because their income is not within the taxable ambit. Now, so that administrative hassle is saved. So the TDS relief there is no change in the taxability of the interest income, but the threshold at which the TDS kicks in has gone up to 50,000 for everyone, and for senior citizens, that is people over 60 years of age, it is at 1 lakh rupees. So that's the benefit. TCS, which is applicable on remittances under liberalized remittance scheme, that in case of education loans taken by students to finance their education overseas, that's been completely taken away. There's no TCS on remittances relating to education if it is being financed from a loan taken from a specified financial institution. The big change for all remittances, the TCS will come in at a threshold of 10 lakhs instead of the existing 7 lakhs. So that's also going to be a measure of relief for people when you look at it from the budget perspective.
Okay, all right. Quite a whirlwind session, this one, but I think very helpful because we've finally got all the fine print out and we've understood why moving to the new tax regime almost is a certain for most of us after Budget 2025. Thank you so much, Sonu, as well as Feroz, for joining in and helping us demystify some of these finer aspects. With that, it's a wrap on this edition of Let's Talk Money. See you again, same time, same place next week.
Let's Talk Money.
I think we are now getting into a phase where growth will surprise to the upside. The budget reaffirms that. I think this is a growth-oriented budget. In fact, the phrase I've used for this budget is that it's a magic budget, and I'll come to that in a moment. And my expectation is that the monetary policy will back this budget, and the monetary policy will also become growth-oriented. So as far as India is concerned and what we control, I think things are looking up.
I think it is one of the best budgets that we've seen in many, many years. And I tweeted it's a dream budget. So first thing is that you normally want money with the public rather than with government. It should just be the general thumb rule of looking at anything, that money with public is better than money with the government. You have not said that, oh, you cut a tax rate across the board, therefore the rich will get much more. It has come to the correct audience in that sense. So it has to be travel, it has to be savings, it has to be these car consumer durable types. As I said, we are not buying those, but they could.
Presently, taxpayers can claim the annual value of self-occupied properties as nil only on the fulfillment team.
मैं दिल्ली के सभी लोगों से भी विनती करना चाहूँगा कि सब लोग वोट डालने के लिए निकलें, अपने अपने वोट का अधिकार इस्तेमाल करें।
चुनाव में गुंडागर्दी सिर्फ भारतीय जनता पार्टी ने नहीं की है। भारतीय जनता पार्टी और दिल्ली पुलिस की 60 गांठ में गुंडागर्दी हुई है।
दिल्ली के विकास के लिए वोट डालें, दिल्ली में पीने के पानी के लिए वोट डालें, टूटी सड़कों को ठीक करने के लिए वोट डालें, गंदे पानी की निकासी के लिए वोट डालें, यमुना मां नदी को साफ करने के लिए वोट डालें।
तमाम समस्याएं इनका हल करना है तो आइए, बाहर आइए, वोट डालिए।
कुछ और करना हो, कुछ मेजर एफर्ट लगानी पड़ेगी इस तरह।
Very crowded and a city which now gets challenged by the air quality, by the traffic, by the ability to manage its own waste disposal.
The greenery of Delhi, the protecting of that, and adding to the, like I said, better AQI will be the best startup city.
Hello, welcome to News Centre. I'm Parikshit Luthra. A big day in the national capital as 70 assembly seats in Delhi go to polls in what is a fierce three-way battle between the incumbent Aam Aadmi Party, the BJP and the Congress. AAP is eyeing a hat-trick after sweeping the last two elections. The BJP is hoping to end a 27-year wait for power in the Delhi Assembly. The Congress is fighting to stay relevant after losing its vote share steadily over the last three elections. The campaign saw some intense war of words. Parties went all out to woo the women voter, promising monthly stipends. So which way will Delhi sway? Joining me now to take this discussion forward are Sanjeev Srivastava, senior journalist, along with political analyst Piyush Joshi and Deshratan Nigam, lawyer and political analyst. Let me now go across to Piyush Joshi first. Piyush Joshi, when it comes to the Aam Aadmi Party, they replaced a lot of sitting MLAs because of anti-incumbency. Clearly, it is a difficult battle for them in the light of all the corruption allegations. Give us a sense of what's at stake and how difficult was this entire fight for the Aam Aadmi Party?
Well, no fight in the current scenario is easy at all. So any political party who thinks that it's going to have an easy ride is basically, frankly, mistaken. So Aam Aadmi Party is under no illusion. They take each and every election very seriously. And when it comes to the state of Delhi in particular, which has been their bastion for almost 12 years now, certainly they are leaving no stone unturned. There was a little bit of anti-incumbency against the MLAs. There is no doubt about that, which led to to the changing of tickets just 2 months before the elections. And I think that is a cause of concern for the Aam Aadmi Party. They should address this cause of concern if they are elected on the 8th. And I think the MLA should maintain much broader level of contact with the people, that there should be a modus operandi which should be prescribed to them, that and there should be a periodic appraisal as well. So as far as I am concerned, yes, Aam Aadmi Party has learned certain lessons from this particular election. They have learned certain lessons when it comes to the voter list management as well, because the BJP did ask for lots of votes to be cut from the voters list, and the Aam Aadmi Party did raise significant questions as far as that voter list was also concerned. But I think at the end of the day, Aam Aadmi Party will lose certain seats, but will form the government with a decent majority.
All right, Deshratan Nigam, don't you think that the BJP was relying too much on an anti-Aam Aadmi Party, anti-Kejriwal campaign, an anti-corruption campaign against the ruling party? Do you think it's risky to base your entire campaign on one issue altogether?
Well, Parikshit, in fact, code of conduct is still underway. To give an opinion who will form a party is not very advisable. I can also say a particular party, BJP, can form a government, but I'll refrain from doing so. Because we know till 6:30 the code of conduct is still existing. Now, see, there are certain issues. There are two parties out here which are pointing fingers at Aam Aadmi Party, which is Congress. Congress also got a bit serious in this election, and the BJP. They are pointing the real issues facing the people of Delhi. Whether it is the DTC transport, buses not being, the fleet of buses not increasing, the buses that came from the center were being paraded as their own buses, the electric buses, the blue ones that we see. The roads, the problem with the roads, not out of the highways which are with the center. The flooding, which becomes a regular issue with the Delhi. And the water supply, especially in summers, becomes a huge lot of problem. The employment, the education model, except one or two schools, the rest of these schools are having problems, huge shortfalls of the teachers and the principals not being appointed, the irregular employees not being made regular, which is a lot of people, did dharna also in protest, whether they're in the fields of medicine, health, or education. The health model also is crumbling in Delhi. But we must know Delhi is a half state. To always be at a war path with the center is never advisable. But for the Kejriwal, it is always him versus the Prime Minister. He wants him to be treated as a Prime Minister, so he stands with the Prime Minister, and everything is at war with the center. Delhi cannot be run like this. Why not have a party which is same as that of in the center, so there will be a smooth functioning? That is one issue. Anti-incumbency, certainly, where you are asking for the third time, it is certainly there. But these issues are very serious. The whole videos that are going on in the social media and otherwise, that I'll clean Yamuna, and if I don't clean it in 2021, it was said, then please don't vote for me. People are very closely scrutinizing. And yes, I'm not saying Aam Aadmi Party does not have a vote bank. They do have a vote bank because of the free things that have been given. So, but that also, there are certain element of doubt also out there, because not much has also gone to the people. Implementation of the schemes is a problem. And at the end of the day, people want to see Delhi to be a world-class city. And that cannot be made while fighting with the center all the time. You have to work with the center. Right. Remember Madan Lal Khurana and Sahib Singh Verma? When the Congress governments were there, they were BJP CMs of Delhi, and they got Ganga water in Delhi and Silas in tandem with the center, so far as the development of Delhi is concerned.
What's your sense on some of the biggest issues playing out in this election? In the run-up to this period, people have spoken about unemployment, youth empowerment. There has been a lot of debate over the manifestos as well. Which issues, or which would be the top three issues, according to you, that will matter in the election?
So I'll just pick up from where Mr. Nigam left, that, and I do agree that in a conventional political sense, being an anarchist and always a rebel when you're ruling half a state and always in confrontation with the center does not help. And that's what conventional wisdom should tell us. But whether we like it or not, for the last 10 or 12 years, Kejriwal has always played the perennial rebel, the perennial outsider, the baghi, the dissident, and the manner in which he has upped his attack on the BJP, and especially Home Minister Amit Shah in the last few days, he's again positioning himself in that slot. So whether it will be fourth time working for him or not, I really don't know. We'll come to know on the 8th. But I think the biggest factor, all these factors are there, unemployment, freebies, but I think the biggest issue in this election will be what will be the Congress performance. There's 7 seats in the national elections. So they retained their 30% plus vote share. It was a complete decimation of the Congress party, which allowed Aam Aadmi Party to get all the anti-BJP vote, or all the, whatever you say, secular or this side or poor vote or working class vote. Now, if the Congress does well, Aam Aadmi Party gets into trouble. If the Congress is not able to improve its performance vis-a-vis the previous 3 elections, then the Aam Aadmi Party, despite all the hullabaloo, may romp home. So whether we like it or not, the party number 3 holds the key to the Delhi state election outcome. So Congress will never win elections on its own, but it may very well decide this time who the winner can be. And that's why
that's interesting.
Constantly positioning himself, and he's just upping the ante on BJP to show to his constituency that he's the real alternative to BJP, not the Congress.
All right, because of course the Aam Aadmi Party worried about Congress taking away some of their vote bank as well. Let me go across to Piyush Joshi once again. Piyush Joshi, the outcome of this election, whatever it may be, what will be the impact on the national picture?
Well, it's an interesting question. First of, let me respond to Mr. Nigam's couple of charges. The ban is on opinion polls. The ban is not on voicing your individual opinions. Otherwise, we will be living in a dictatorial regime, which the BJP actually wants. Nevertheless, having said that, if Arvind Kejriwal, despite all the halla-gulla which has been around this election, if he scrapes through, or if he wins a good majority, then I think the picture is for everyone to see that Arvind Kejriwal is a promising leader, has worked on the ground. Whatever shortfalls he and his party actually has, people still believe that he at least is going to do certain honest attempts to plug those shortfalls. So definitely under the nose of the union government, which is, I beg to differ with respected Nigam Saab, that it is actually the union government which is at loggerheads with all the opposition governments. So the Prime Minister has many a times voiced that he wants a Congress Mukt Bharat and at times opposition Mukt Bharat. So, for a healthy democracy to function, you need to have different shades of opinions. And if Kejriwal wins, then definitely he will emerge as a very strong national leader, which he already is. But he will be even more stronger because all the anti-incumbency, all the partial fulfillment of promises, people of Delhi will still see Mr. Kejriwal. If people of Delhi still see Mr. Kejriwal as their leader, then I think it's a very strong reply to Bharatiya Janata Party and union government, which I believe is at loggerheads with each and every government through their agencies of lieutenant governor or governors, whether it is Karnataka, whether it is Kerala.
My final word to Deshratan Nigam.
Whatnot. All
right. My final word to Deshratan Nigam. Deshratan Nigam, my final question to you as well. What will be the larger cues that one can take from this election based on the outcome as far as the national picture goes?
Well, let's certain clarifications that BJP last time had between 38 to 39% of the votes, which if they increase by 4 to 5%, they'll sweep the elections. And it is everybody's guess that BJP will improve its position. We are not guessing how much the position will be improved, whether they'll form a government or not, which I believe they will, but others may disagree with me. But the fact remains that Delhi is a national capital and a very important place to be governed, and BJP has been out of power since last 27 years. So it is important for Delhi to establish its footprints in Delhi, to have a leader, project a leader. If they win the election, they have to project a leader who can take forward the BJP, in the long run, for so far as Delhi is concerned. So that issue has to be taken care of. And we are seeing the people working in Delhi for BJP. BJP only has to focus on its core vote bank and ensure they come out and vote. Nothing else. If they increase their vote percentage by at least 6%, if they're from their own vote bank, then BJP will form a government. And that is what I believe BJP is working for at the grassroots, that their voters come out, and the higher percentage of voting will certainly help the BJP.
All right, we've run out of time, but Deshrata Nigam, Sanjeev Sharma and also Piyush, thank you very much for joining us on the program. This is a story that we'll continue tracking very, very closely. We're taking a break, but coming up, OpenAI CEO Sam Altman is in New Delhi. Details on his India visit when we're back.
Conditions. Considering the difficulties faced by taxpayers, it is proposed to allow the benefit of 2 such self-occupied properties without any condition. To streamline the process of transfer pricing and to provide an alternative to yearly examination, I propose to introduce a scheme for determining arm's length price of international transaction for a block period of 3 years. This will be in line with global best practices. With a view to reduce litigation and provide certainty in international taxation, the scope of safe harbor rules is being expanded. A number of senior and very senior citizens have very old national savings schemes accounts. As interest is no longer payable on such accounts, I propose to exempt withdrawals made from NSS by individuals on or after 29th August 2024. I am also proposing to allow similar treatment to NPS Vatsalya accounts as is available to normal NPS accounts subject to overall limits. Detail the indirect tax reforms and changes in direct taxes in Part B. Financial sector reforms. The FDI limit for the insurance sector will be raised from 74 to 100%. This enhanced limit will be available for those companies which invest the entire premium in India. The current guardrails and conditionalities associated with foreign investment will be reviewed and simplified. The services of India Post Payment Bank will be deepened and expanded in rural areas. NABFID will set up a partial credit enhancement facility for corporate bonds for infrastructure. Public sector banks will develop Grameen Credit Score Framework to serve the credit needs of SHG members and people in rural areas. A forum for regulatory coordination and development of pension products will be set up. To implement the earlier announcement on simplifying the KYC processes, the revamped Central KYC Registry will be rolled out in 2025. We will also implement a streamlined system for periodic updating.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Welcome back. You're watching News Center. OpenAI CEO Sam Altman has said that India is the company's second largest market and users have tripled last year. Altman, who landed in India late last night, met IT Minister Ashwini Vaishnav earlier today and is set to meet Prime Minister Modi. This comes as OpenAI is facing a copyright lawsuit in India filed by top media outlets. Ashmit Kumar reports on Sam Altman's India plans and his day in the national capital.
Sam Altman's whirlwind tour of Asia comes to India after his Korean leg of the journey. He landed in India late last night, and this visit comes amidst a growing realization and understanding within India of the importance of building India's own foundational large language model, its own AI model.
India is an incredibly important market for AI in general, for OpenAI in particular. It's our second biggest market, tripled users here in the last year, but mostly seeing what people in India are building with AI at all levels of the stack. Chips, models, all of the incredible applications. So I think India should be doing everything. I think India should be one of the leaders of the AI revolution.
Interestingly, this visit by Sam Altman comes at a time when India has announced its own mission of developing its own sovereign AI model. It also comes at a time after Sam Altman in 2023 had said that it was hopeless for India to compete with developing its own foundational model. And also interesting because it comes after DeepSeek disruption, delivering an AI model at a fraction of the cost of the investments made by OpenAI.
We're now in a world where we made incredible progress with distillation. We learned a lot to do small models, and these reasoning models in particular can be, it's not cheap, it's still expensive to train them, but it's doable. And I think that's going to lead to an explosion of really great creativity.
Taking cue, even the Indian IT minister said that with costs progressively coming down for building an AI model, India hopes to replicate the DeepSeek success.
Every year, it's 10x reduction in the cost of intelligence. That kind of innovation can come from anywhere in the world. Why shouldn't it come from India? That's the point.
And while there's a lot of excitement within the Indian startup community, the understanding is that while India is great at building applications, but there's a lot of ground to cover for building your own foundational model.
OpenAI is thinking of open sourcing as a serious topic on the table. We all want to put the bet right away in the ring, saying that here comes the foundation model, but there is a calibrated approach, and there was a lot of acknowledgement that I saw today.
I don't completely agree with the premise that India is lagging behind. I think Indian startups are innovating in areas where they understand best and they have core competence in.
I think we should definitely win the application layer. We have to do a lot at the model level. I don't think we are as close to building the next DeepSeek at all. But application layer is definitely which can be a moat. I think every organization should put aside an R&D budget for AI, and we should build applications using AI.
Sam Altman called on Indian developers and Indian startups to build solutions on top of their foundational model. But with increased talk of ChatGPT going open source, there's a great deal of excitement on how India can exploit this opportunity. In New Delhi, Ashmit Kumar.
And India will likely gain from the trade war between US and China. Government sources say exporters have given a positive feedback on their orders so far. Abhimanyu Sharma has the details.
India is of the view that it's likely to gain from the US-China tariff wars. Government sources have told CNBC-TV18 that exporters have given positive feedback on export orders and may witness an increase in their shipments to the American market. They have indicated this to the government so far. Sources also indicated that the US may act in retaliation to China's tariff measures on certain products based on reports which would be given by the US Trade Representative and the US Department of Commerce, which may act as a shot in the arm for Indian exporters. With tariff driving up prices of Chinese products in the American market, Indian exporters are hoping to reap relative competitive advantages. It remains to be seen till what extent this is going to be possible. Sources also added that during the last trade war between the US and China, India was the fourth largest trade beneficiary as exports worth $51.63 billion in FY 2021 rose to $76.71 billion worth of exports in FY 21-22, and India is hoping for a similar benefit this time around.
And President Donald Trump has made a proposal for the United States to take over the Gaza Strip. This comes after Trump hosted Israeli Prime Minister Benjamin Netanyahu in the White House. Addressing a press conference, Trump said that he plans to relocate Palestinians to neighboring nations and redevelop the war-torn enclave in what he described as the Riviera of the Middle East. Here's a report.
Ladies and gentlemen,
the President of the United States.
US President Donald Trump said the US would take over the war-ravaged Gaza Strip and develop it after Palestinians had resettled elsewhere.
And I don't want to be cute, I don't want to be a wise guy, but the Riviera of the Middle East, this could be something that could be so bad, this could be so magnificent.
It's a move that would shatter decades of US policy towards the Israeli-Palestinian conflict. Speaking after a Tuesday meeting with Israel's Benjamin Netanyahu at the White House, Trump did not provide specifics and did not directly respond to how and under what authority the US can take over and occupy Gaza long term.
The U.S. will take over the Gaza Strip, and we will do a job with it too. We'll own it and be responsible for dismantling all of the dangerous unexploded bombs and other weapons on the site, level the site and get rid of the destroyed buildings, level it out, create an economic development that will supply unlimited numbers of jobs and housing for the people of the area.
Netanyahu, whose military has fought for more than a year with Hamas militants in Gaza, would not be drawn into discussing the proposal in depth, but said Trump was, quote, showing willingness to puncture conventional thinking. Trump also announced earlier the proposal to permanently resettle Palestinians from Gaza to countries like Jordan, Egypt and other neighbouring Arab states. That goes beyond suggestions he has made about Gazan resettlement that Arab leaders have already steadfastly rejected. Forced displacement of Gaza's population would likely be a violation of international law and be fiercely opposed by Western allies. Some human rights advocates liken the idea to ethnic cleansing. Analyst Brian Katulis from the Middle East Institute told Reuters that he believes the proposals lack thought.
Most certainly there's no plan behind this. And if there is, it's not a plan that has any connection to reality in today's Middle East. And it's certainly not in consultation with the Palestinians or neighboring countries like Egypt and Jordan.
Senior Hamas official Sami Abu Zuri condemned Trump's calls for Gazans to leave as expulsion from their land and a recipe for generating chaos and tension in the region.
Ukrainian President Zelensky has said that he is ready to have a direct talk with Russian President Putin. In an interview, Zelensky said that he will engage in a conversation if that's the only way in which peace can be brought to Ukraine. This, he also added, that United States and Europe also have to take part in any talks. With that, it's a wrap on this edition of News Center. More news and updates continue right here on CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
We've had a lot of evidence so far that Trump's tariffs are looking transactional rather than actual tariffs. In other words, we've seen tariff announcements for Colombia, for Mexico and Canada, all either reversed or delayed. And the only country where we really do have increased tariffs with retaliation, of course, is in China. And so I think that's generating a huge amount of uncertainty. I mean, investors do not like uncertainty. Companies don't like uncertainty. It's very hard to say where we go from here. I do not assume that we've seen the end of any possibility of tariffs on countries like Mexico and Canada. But my word, the speed of events is very confusing, and investors, I think, are therefore very...
Many thanks for joining us here on the CNBC TV18 CII Budget Town Hall. It's great to be here at the CII National Council meeting. We've got a room full of industry leaders joining us. Last count, I think it's about 65 CEOs representing different sectors, different aspects of the economy here with us to give us their sense of where Budget 2025 leaves the economy. Broadly, if I can put it for all of our viewers who are tuning in online, on TV, and here, of course, at the CII National Council meeting, the budget has tried to address the 3 C's, and it has prioritized consumption over capex this time around, not abandoned capex. It has continued on the path of capex, and it has remained steadfast on consolidation. So those are the 3 C's: consumption, consolidation, and capex, and that's been the focus of Budget 2025. Outside of that, there have been many announcements that have come in. Deregulation has been the overarching theme of the economic survey, which was taken forward in the budget as well. But the promise of deregulation will start to take shape only over the course of the year as a committee is set up, and then the committee will, of course, give its recommendations. But the big one, and that I think is something that industry will look forward to, maybe not so much the tax experts, is the direct tax code overhaul. And what we've heard here on CNBC TV18 from the secretaries themselves, they are promising to halve the number of chapters, halve the number of words, and bring in significant amount of simplification as far as the direct tax code is concerned. So that is going to be something to watch out for as well. But the mood, if I could call it, as far as CII was concerned, going into the budget was a fairly positive, strong mood of confidence. What does the budget deliver on now is the big question. So let me start by doing a quick dipstick here of the CII National Council. At the end of what the budget has been able to deliver in terms of capex, consumption and consolidation, the first question to each one of you, and please raise your hands, do you believe that you are going to invest more in FY26 to add capacity to deliver on the promise of consumption? Those of you who are going to feel the need to invest more to add capacity because you expect a consumption boost, could you raise your hands, please? Well, that's a sizable number here that have raised their hands in order to add capacity. But let me throw it open to Sanjeev Puri, the president of CII. Mr. Puri, we spoke on the day of the budget itself, and now the fine print has been digested. The question to you, how soon do you expect this consumption bump up to take off?
Well, thank you, Shireen, for being here with us. And let me start by again saying that CII has welcomed the budget. It's a budget that has been, of course, fiscally prudent, at the same time growth-oriented. And what is good is that it's focused on the domestic drivers, given that the world is in very difficult situations right now, leaving aside the tariff issues, but there are many more other concerns globally. So it's focused on the domestic drivers. It's focused on some of the areas that CII have also been advocating on labor-intensive sectors, consumption boost, also continued thrust on capex and making the economy future-ready with investments in certain areas. And one very strong point in the budget was the focus on reforms, and which is very critical to unlock the potential of the economy in the medium term. So the journey of economic, it's a journey of economic transformation. It's not that, things change overnight.
Yeah.
But I think all the factors are favorable. So progressively, we do feel that improvement will happen, and the consumption boost is welcome. I think with the weather being better and agriculture crops being better, and hopefully we are also expecting some, the liquidity part the RBI has been acting on.
Yeah.
We also expect the interest rates to moderate soon. So all of this
we won't
together
have to wait very long to find out. The MPC meets on the 7th, so that's right around the corner.
So with all this, I think it's...
So 25 basis point cut?
25, 50 hopefully.
25, 50 hopefully. Let's do another dipstick. How many here at the CII National Council believe that the MPC will deliver on a 25 basis point rate cut? Those of you who expect a 25 basis point rate cut, anyone in the 50 camp? It's the CII president all by himself, but in this industry voting for a 25 basis point cut. Let's start by talking about the consumption story, and let me go straight across to Sunil D'Souza, because he has his finger on the pulse. Sunil, what should we expect now? How much more Starbucks coffee are people going to partake in at the end of Budget 2025?
As I think Sanjeev said rightly, this is a very balanced budget. I think, and as you mentioned, I think capex being maintained and consumption getting driven. I do expect rural, there is a focus on growth with the Jal Yojana and therefore the focus on employment, coupled with, of course, the tax break, and most importantly, food inflation starting to come down. So I think most companies, you've started to see volume growth starting to come back. I do expect an acceleration in 3 to 6 months.
When you talk about an acceleration, can you quantify that acceleration for us? And you said that January perhaps is an indication of things having bottomed out and a start of a pickup from here on. Can you give me some color on what that could potentially mean?
So if you look at the results of most companies, right, it's been very low single-digit top-line growths. I would expect mid to high single-digit, if not double-digit numbers coming back very quickly.
Double-digit numbers coming back very quickly. Expansion plans for you across the businesses to cater to the consumption boost that has been talked about?
Oh, absolutely. For us, we've always guided for a double-digit volume growth, and therefore we're very, very clear we will need capacity to grow. We're just in the middle of putting our budget numbers in place, and there is a huge focus on making sure both manufacturing and logistics comes up to the challenge.
You know, in terms of domestic demand, question number one, what's the outlook now as we look out at 2025 and FY26? And more importantly, with the tariff wars, the escalation, the de-escalation, but now, of course, the tariffs between US and China, how do you see all of that impacting the global steel prices and the global steel demand?
So first of all, I think from a domestic consumption point of view, sectorally, we've seen some weaknesses, but I think it will come back, whether it is spending on infrastructure or automotive, etc. The prices is what gets affected by these unfairly priced imports. I think with the tariffs coming in at this point of time on China, the key issue will be what will be the impact on the rest of the world, because it's not that the Chinese imports or exports made big difference to the steel prices in the US. But I think it will be important to see as to where that goes in. More importantly, the domestic policy and the stimuluses in China is going to determine where the exports come in. China has always exported about 60 million to 70 million tons, but when it crosses over to 110, 112 million tons, which is almost 80% of consumption of EU and similarly for India, that actually affects. So I think we are going to look at policy changes across the globe and see as to how it works. But in the meanwhile, as there are almost about 30 countries doing investigation on China, we need to see as to how the Indian government plays up. And if that safeguard duty does come in, it will certainly have a policy certainty in terms of making capex investment in steel industry more attractive, which we want to do. And the underlying domestic consumption is way below the global average. So there is no question on the consumption story, and that will certainly continue to happen.
And that will pick up, and of course we're waiting for a decision as far as the safeguard duty is concerned. Let me bring the other steel man into the conversation very quickly. Jayant Acharya also here with us. Mr. Acharya, many thanks. Would you agree with what you heard there from Mr. Kaushik Chatterjee and the expectation on the safeguard duty? I'll get the mic to you. We understand that the investigation is on. Has there been any feedback from the government on that front?
Yeah, so I think, the Indian demand, as Kaushik rightly said, is really good. On the medium term to the decadal visibility what we have, I think India is going to see a very good story. So the steel industry has a large opportunity. I think incrementally, Shireen, what we see is that every year, about 15 million tons of demand will be generated additionally. Because this year, we're going to generate about 14 million tons of demand. To put in that kind of capacity, about 7,000, let's say $1 billion to 1 million tons, the industry requires to earn to be able to blow that back. What we are investing in heavily, what we are worried about is that the trade flows which are coming into the country, we need to put up policies to see that we don't get hurt. Otherwise, I think from a consumption story, the budget has been really good. While CapEx, we would have expected a little better, but I think I understand her constraints, and they have continued CapEx to be at a level of 11 lakh crores, 10% or 17% up, whatever you said. Should be good. I think only the restriction which we see is trade flows, especially from China and FTA countries.
Well, let me bring Bharat Puri into the conversation as well. Mr. Puri, many thanks for joining us, both on domestic demand as well as what we can see in terms of growth accelerators from here on.
I would say, Shireen, this budget is very welcome. In our opinion, the economy needed capex, it needed consumption, and it needs jobs. Capex is continuing. Hopefully, consumption will get a boost. It will take 3 to 6 months, but it will definitely get a boost. And jobs will obviously follow both consumption and capex, and hopefully skilling and ease of doing business. So overall, from a demand perspective, I would say we're now positively optimistic rather than cautiously optimistic, but it may take a little bit more time.
What is the difference between positively and cautiously optimistic in numbers? If you can quantify the difference so that we can get a sense of, how you move from caution to positivity and what that will translate into.
Very simply, cautiously optimistic is growing at GDP rates, and positively is 1.5 to 2 times GDP.
So you moved now to positively optimistic, so ahead of the GDP growth rates. Well, that's Bharat Puri giving us a sizable headline there as well. Mr. Mukunda, let's talk about manufacturing. And I think the message coming in from the government through the budget as well as the economic survey is very clear that, look, we have done what we can as far as capex, consumption and consolidation is concerned. Profitability is at a 15-year high, and private investment now needs to do the heavy lifting as well. The baton needs to shift from the government to the private sector. In light of that, what would you expect now on the manufacturing front? Where is capacity utilization already at 80-90%? Where do you believe, which sectors do you believe will drive, additional capacity?
Yeah, thank you, Srini. I think let me just say on broadly, once the utilization goes to 70 to 80%, people start thinking of investing. But the way I frame the budget is it's a budget which triangulates 3 things. One hand, it continued the fiscal glide path. Second hand, it sort of focused on consumption because that driver was needed by putting more money in the hands of. Also, it did not forget about jobs because the sectors it focused on was MSME in manufacturing. It focused on exports to plug into the global value chain. And also it focused on agriculture where bulk of people are employed. But when you do this, one of the things which happens is that you have to take money from somewhere else, and then let's say it has been taken away from CapEx. Now, what government has done is saying that the CapEx now will be done in partnership with private sector. Key point which Rajiv highlighted, that will drive momentum. But to do that, you need to have trust. And this is the first budget. I actually counted the number of times trust word was used.
How many times?
10 times.
10 times.
And it was the key message. I thought it was a key message from the government saying, let's build on trust. And that goes to the whole reform process, ease of doing business, decriminalization laws. So I think in many ways, they have focused on that piece. On top of that, I think to drive home the point, sustainability point is not lost out. I think the setting aside for nuclear power plant, this 100 gigawatt and giving 20,000 crore for the first BSR, I think it's a game changer in many ways, because if we have to decommission our coal-fired boilers by, let's say, 2050, we need to get into this game. So they've not lost sight of that. On top of that, I think there's also a budget which has said that let's bring partnership with everybody, including skilling environment and other environments. So all in all, very balanced budget. Manufacturing sector, I think, will follow the demand. And by focusing on demand, they've fundamentally ensured that the key driver for manufacturing sector is put in place now.
It's interesting, the US is underperforming the developed markets this year. As you've noted recently, the dollar's lower. So this is all, I think, creating a lot of uncertainty, which I think will have an impact on investor behavior.
कुछ लोगों को अब जब एआई की बात होती है, कुछ लोगों को अब ये शब्द फैशन में है तो बोला जाता है, लेकिन मेरे लिए सिंगल एआई नहीं है, डबल एआई। भारत की डबल ताकत है। एक एआई आर्टिफिशियल इंटेलिजेंस, दूसरा एआई एस्पिरेशनल इंडिया। हमने स्कूलों में 10,000 टिंकरिंग लैब्स शुरू किए और आज उन टिंकरिंग लैब से निकले बच्चे रोबोटिक्स बना करके लोगों को चकित कर रहे हैं। और इस बजट में 50,000 नए टिंकरिंग लैब्स उसका प्रावधान किया गया। भारत वो देश है जिसके इंडिया एआई मिशन को लेकर के पूरी दुनिया बहुत आशावादी है और विश्व के एआई प्लेटफॉर्म में भारत की मौजूदगी एक महत्वपूर्ण स्थान प्राप्त कर चुकी है।
This was the third consecutive year that the BMC budget was presented to an administrator and not to a standing committee. Why? Because the term of the corporators ended in March 2022 and the elections for the new term and the new corporators are yet to be held. Now this 74,427 crore rupees budget, out of this an allocation of 43,162 crore was made for capital expenditure. 5,100 crore rupees for roads and traffic department, 5,807 crore rupees for Mumbai Coastal Road project, 3,039 crore rupees for storm water drain department and 650 crore rupees for sewage operation department. For key public services, over 4,000 crores were allotted to education department, over 7,000 crore for health department, 261 crore rupees for fire department, 309 crore rupees for disaster management and 220 crore rupees for the garden department. BMC announced that it's going to start 250 new public clinics, also known as Apla Dawakhana, all over the city. One interesting initiative announced by the BMC was the introduction of cyber awareness program for students. It will serve two key purposes. One will be to ensure that the students learn how to use the internet in a safe manner and to keep them safe from cyber fraud. BMC also focused on environment initiatives and projects like promoting eco-friendly cremation and proper disposal of residue from idle immersion.
Let me bring everybody in here, and if anybody has a comment to make, since we are talking about a rate cut, and of course Sanjeev Puri believes a 50 basis point rate cut is perhaps possible, but even if it were to be a 25 basis point rate cut, with the kind of global uncertainty that we're dealing with the tariff wars that are currently underway, the impact that it's having as far as the currency is concerned on commodity prices, what would the key risks be that you're factoring in today? If you could raise your hands, I'll come across to each one of you to address that. What are the top 3 risks that you're factoring in to your business plans today? Let me start by asking you, Mr. Mukundan, and then we'll come across.
So I think the key point which you highlighted, one of the first point was the fiscal consolidation. Let me get back. It's extremely critical because that's where the rating agencies come in, and that rating agency rating has an impact on what rate we can borrow external capital, and also it has an impact on the internal capital interest rate. So I think by moving on the fiscal consolidation path, the government has made it extremely robust to raise finances. And we are very much a capital hungry country. I think we can't run away from that. And I think that fiscal prudence was important, and backed up with very good forex and foreign reserve management by RBI should give us very solid ground to sort of put a solid foundation on this one. Let me also add a point on the multiplier piece, because I want to go there. I think a lot of people don't give benefit to things like startups and the multiplier effect they have.
Yes.
You know, the fund of funds which government put of 10,000 crore, last time around it actually led to 90,000 crores of investment. And it was a great success. When it started, nobody believed in it. So I think by saying that it's a great success, we're going to back it up. So these are the kind of financing structures we need to put in place, which have 9-10 times multiplier effect beyond even what, let's say, I'm not saying it's one against the other, but I think these multiplier effects are real.
No, absolutely. Those multiplier effects are real. Sunil, actually, let's just address this, because on the question of startups, we're talking about a quick commerce boom at this point in time in the country. I mean, nobody 2 years ago believed that quick commerce would take off, and today nobody can believe that quick commerce has taken off the way that it has, and now everyone's talking about what could perhaps be the boundaries as far as quick commerce is concerned. Is that reflecting in the kind of consumption data that we're looking at? Do you believe that there is perhaps an underappreciation of the kind of moves that are happening on that front?
You're absolutely right, Shireen. If I dial back, I mean, I can talk about our company numbers. Before the pandemic, we were about 2% e-commerce. Today, we are about 15%. Half of that is quick commerce. So 7.5% of my turnover has come from quick commerce, which didn't exist 24 months back. Now, again, quick commerce, if you dissect the pieces, it's not deal making. It's people are buying for convenience. I mean, all the big players out there are not discounting to draw consumers. Consumers are finding convenience. So I think this is a trend here to stay.
So you're saying it's not a discount-driven model. It is much more than that. People are willing to pay for convenience.
Absolutely. I mean, when you hear the iPhone being bought on quick commerce and mixer grinders being bought on quick commerce, it is not, there will be a certain amount of deal making out there. There is immense competition. There are 5-6 big players, and there'll be a shakeout at some point of time. Everyone is investing big time. But if you look at the top 3, they are driving it basis convenience and driving it basis order value. And therefore, I would think it's a much more sustainable model and will continue to grow.
Aditya, you wanted to come in?
Shouldn't the only, if you take the next 10-15 years sort of, time frame, the challenge that I just feel that I hope the gap between the rich and the poor, comes somewhat closer, If we don't have a more inclusive growth, at least all the businesses that I've been involved in and I'm still involved in are generally in the affordable segment of the market, right? And that affordable segment of the market, that consumption will only go up when people have that, time to, and the money and the resources to spend after they've spent, money on rent and school fees and energy costs and stuff like that. So that has to be, we have 182 million new Indians coming into the workforce in the next 23 years. We will not have jobs enough for people. So are there going to be enough livelihood opportunities to keep that consumption going? And the other piece, just to pick it up from what CB mentioned tangentially, international mobility of skills, international mobility of our businesses, manufacturing for the world, having the ability to establish businesses in other exciting parts of the world, whether it is Latin America, whether it is Africa, and so on and so forth. I think those are some of the longer term challenges to keep in mind.
Longer term challenges, but also more near term challenges. And Sanjeev Puri, let's address that issue. While we are talking about the many changes that the government has been able to bring in domestically, let's talk about the global environment and the risks that the global environment poses today. There is a general move towards more protectionism. There is a general move towards everybody saying, look, make in America, make in China, and so on and so forth. How prepared is Indian industry for the changing global environment, and what would you qualify as the key risks today for India Inc.?
Okay, let me take it in two parts. First, as far as the risk is concerned, I think there are two major risks. One is, of course, this global environment, subdued demand, therefore impact on exports. And the other bit is what Kaushik and some others also alluded to, is about excess capacities in some parts of the world and being dumped at unreasonable, uneconomical prices. And so these are the two, this is the risk emanating from the global side. I think the other supply side risk is actually this bit on food inflation. And because of the climate change issues, we are seeing this happening very, very frequently. And that really cuts into the wallet of the consumer. So these are the real two risks. I think the second one is something that we can work together on building resilience in the agriculture. The other one, of course, through safeguard duties and the other things that we'll have to work. Now, given the global context of barriers coming in, tariffs coming in, the question about what needs to be done, I think it's a tough situation, but I would really broadly talk about 2-3 things here. One is, I think that FTA has become very important here. FTA has become important, and that's something that the government is focused on and working on. Number two is, I think we naturally have to play to our strengths and the areas of opportunity globally. And very clearly there are several, including things like, this bit of supply chain resilience and diversification, right, energy transition, digital transformation. Even food and nutrition security is a global problem. So these are so we really have to play to our strengths, and these are areas where India can play a lot of role. In some we are very well prepared. In some, of course, investments have to be made. So if we play to those strengths and opportunities, I think we'll be able to find the ways to move forward. And the third is that we should focus more strongly on the domestic drivers of growth, which is where I think the budget has given a lot of emphasis, because that's something that we must recognize, that India is a consumption-driven economy. 60% is consumption, and the opportunity to expand consumption in India still remains massive. So domestic drivers of growth, I think, have also become very important in this context.
Yes, let me also take the opportunity to welcome here, as part of our program, the Chief Minister of West Bengal, Mamata Banerjee, joining us here to address the National Council of the Confederation of Indian Industry. We're talking about the state and centre compact, states going all out to also woo investors. And here is Mamata Banerjee, the Chief Minister, offering a beautiful flower to Sanjeev Puri here as the President of CII, in the hope of getting industry to invest more in the state. Many, many thanks, ladies and gentlemen, for joining us here today. Thank you very, very much for this very special conversation. Thank you very much to everyone.
Which will take place under environmental related initiatives in the next few months. We also spoke to Bhushan Gagrani, the BMC commissioner himself. This was the first time that he presented the BMC budget. Listen to what he has to say about this BMC budget.
So your budget also mentioned that you guys are planning on imposing a tax on the commercial properties in slum areas.
That's right.
If you can elaborate that. So from when this new tax will be levied?
It is actually not a new tax. In fact, we are enhancing our assessment net. Under the assessment net, the properties which are in the slum, however, which are being used for the purpose of commercial, they were not covered. So this is for the first time we are doing the survey and bringing them in the tax net. Not necessarily that we will be imposing huge tax. It's a normal tax. It's not a very huge tax. However, the coverage will be given to our commercial properties.
So BMC has not introduced any new project this time. In fact, you have focused. Correct.
Yeah.
But sir, does it mean that is there any cause for fiscal concern, sir?
No, there is no fiscal constraint. We have enough adequate cash flow as well as resources.
हमारे देश में एक प्रधानमंत्री हुआ करते थे, उनको मिस्टर क्लीन करने कहने की एक फैशन हो गई थी। उस प्रधानमंत्री जी को मिस्टर क्लीन कहने की फैशन हो गई थी। उन्होंने एक समस्या को पहचाना था और उन्होंने कहा था कि दिल्ली से 1 रुपया निकलता है तो गांव में 15 पैसा पहुंचता है। अब उस समय तो पंचायत से लेकर पार्लियामेंट तक एक ही पार्टी का राज था। पंचायत से पार्लियामेंट तक एक ही पार्टी का राज था और उस समय उन्होंने सार्वजनिक रूप से कहा था कि 1 रुपया निकलता है 15 पैसा पहुंचता है। बहुत गजब की हाथ सफाई थी।
The union budget has rejigged the income tax slabs to put more money in the hands of the middle class. Will it spark a revival in consumption, and can the government stay on the path of fiscal consolidation as promised? What about the capex push? CNBC-TV18 and India Inc. quiz the top architects of the budget at our annual budget verdict. India's top bureaucrats who are in charge of the economy were in attendance at the interactive session, which was the first dialogue between the government and industry after the budget's presentation. US President Donald Trump's tariff threats are rattling the global markets, but India's finance secretary is not perturbed. Tuhin Kantapande believes the apprehensions over tariffs is unwarranted, but the bureaucrat also asserted that India must build a domestic value chain to insulate itself.
We should not really anticipate something which is not really stated. The kind of thing which you say, tariff against India. This has not been stated. I mean, if the US admin or anybody has not really stated, so why should we really be saying so? So that will be premature and not warranted, because these are different grounds on which the tariff is being put in. So far as we are concerned, we are a very open economy. If you really look at the US imports into India, most of them are into a very, the tariffs are very low. They're in the range of, up to 10%. They are in 2.5 category, they are 0 category, 0%, 5%, 7.5, 10. Incidentally, if you look at our industrial goods, out of 8,400 odd tariff lines, 6,000 tariff lines are already below 100, close to the ASEAN rates. And these are MFN rates which are equally applicable to US as well. So therefore, India is not protectionist and neither intends to be protectionist. And therefore, I would say that this is an apprehension which is probably. think it's right now a wait and watch perspective. I mean, on the one hand, straight away you could say that it might be advantageous to us because tariffs may come down more heavily on other trade rivals, so there could be that issue. But if you look at it from another perspective, you could have a scenario where if the sourcing is from the same country, then will you have a problem in further exports? So we are not yet clear as to how this will play out, and we need to be prepared for all scenarios. I think there is reason for hope, and I think there is reason to assume that electronics as an export from India, which has suddenly become very big in especially what we send out to the US, we need to sort of ensure that we build the domestic value chain more significantly and increase domestic value add so that we protect ourselves against any possible pushback on the value addition point of what happens in India.
India is all set to flex its defence manufacturing muscle. Rajesh Kumar Singh, India's Defence Secretary, told me at the budget verdict yesterday that the ministry intends to end the fiscal year with orders worth 2 lakh crore rupees or more. This would be close to double of last year. Also, the Secretary said that India is willing to procure more from the US if the US meets the requirements on quality and indigenization. Here's the Defence Secretary in this.
We are on pace right now to sign the largest number of contracts ever in our history. Okay. The largest last year was another high of 1,08,000 crores. This year we've already hit 1,15,000, and my intent is to double last year's number before the end of this financial year, and the result in terms of expenditure will follow thereafter.
So doubling by the end of this financial year, sir?
Yes, I intend to cross 2 lakh crores and maybe even more. Coming back to the other issue of reforms, from day one, after I've joined this ministry, my focus has been on procurements. That's an area which has always been bedeviled by delays. We've identified where the delays are. The delays are in 3 specific areas, essentially. In terms of the delays in finalizing the documents, the RFPs, delays in the field, what they call the field evaluation trials, and thereafter the delays in what they call the cost negotiations. All of them take years at a time. And those are the areas where we are going to ensure accountability in terms of much shorter timelines. Mm-hmm. And that is why, as I said, I intend to ensure that our contracts this year will be double, if not triple of last year. And we intend to ensure that order books are full across the board in the defense industry so that everybody has visibility, everybody from the OEMs down to the component manufacturers, that their order books are full for the next 4 to 5 years and everybody is on the same page when it comes to fulfilling our capability gaps.
Well, that's quite a headline, sir, when you're talking about doubling and tripling and order books being full for the next 4 or 5 years. But if I may extend this conversation to react and respond to what has happened globally, and the comments coming in from President Trump saying very specifically that India needs to do more by way of procuring security equipment from the United States. I was just taking a look at the numbers, sir. India's already bought defense technology worth over $25 billion from the US since 2007. So when you hear President Trump saying that we need to do more in terms of procuring US security equipment, what does this mean? What should we realistically expect? What's on the table?
So first of all, of course, this has nothing to do with the budget.
No, it doesn't. But it's linked to the overarching landscape that we're dealing with.
Sure. So we do have some procurements which are on the anvil where American companies would be in the picture. And as long as they are able to meet our requirements in terms of quality and in terms of certain levels of indigenization, of course we'll be, those are carrots that we will be able to dangle before the Americans, and hopefully we'll be able to give some of those contracts. Let me stress that India has already ordered some 1,500 odd civilian aircraft from both American and from Airbus about 1.5 years back, over the last 1.5 years, which means in a sense that we've lost some leverage there. We've also already ordered these Predator drones a few months back. So yes, we are already, meeting a good proportion of our requirements from capable American companies, and we intend to continue doing so. There will be significant buys, and some of that will go to the US as well.
Electronic and IT Secretary S. Krishnan confirming that OpenAI CEO Sam Altman expected to meet Prime Minister Modi and Minister Ashwini Vaishnaw when he lands in India. Krishnan did not rule out a potential tie-up with OpenAI, but added a big caveat: AI models will have to be built on open source foundations, and OpenAI is not.
He is expected to visit New Delhi, and he is expected to meet hopefully the Prime Minister or the Minister for Electronics. We presume it is to discuss on what OpenAI can do for India and the kind of applications of OpenAI in the country, and how well India is equipped and what we can do to benefit from this. OpenAI's model is not an open model.
Yes.
Right? So the ChatGPT is not an open model. So if at all we are going to build on models, it has to be on other open source models which we pick up and work towards.
There is a need to recalibrate the RBI discussion paper on crypto assets. That's the word coming in from India's Economic Affairs Secretary Ajay Seth. Remember, the RBI in its discussion paper last year had flagged cryptocurrencies as a negative force when it came to India's financial stability. However, the Economic Affairs Secretary conceded that several jurisdictions had changed their position on cryptocurrencies, or digital assets as they're called, since that time, which necessitates India re-looking at its own stance. Take a look.
Cryptocurrency, as we are aware, we have done a discussion paper, including at the senior level participation from the Reserve Bank of India, and the committee had finalized the discussion paper. But thereafter we find that when it was about to be issued, that several jurisdictions, and you named one, but more than one jurisdictions have changed their position on crypto assets in terms of their scope, where they see the utility, including for settlement, multilateral settlement of payments, cross-border payments. So there's one side, they're saying that much stronger use of crypto assets as a stable coin, which will have a large implications for an emerging economy like ours. The second one, using it as a multilateral settlement mechanism, which will again has a very major implications that how the global systems are organized. So in that context, we are recalibrating the paper, because the purpose of that paper is to pose the right questions to the stakeholders so that we get the right answers in terms of an appropriate answer to inform our policy making.
But what does the recalibration mean, sir? Because at this point in time, the RBI was very clear. They don't believe that cryptocurrency is the road to take at all. Is there a change in approach, given the fact that countries like the US are now full-fledgedly moving forward with cryptocurrencies?
So I will mention it that in 2023, when India had the G20 presidency, at that point of time, the stances of various jurisdictions, and I'm using the word jurisdictions instead of using the word countries, was fairly well known, and there was a stable position each one of them have taken. And this is one asset class which doesn't believe in the borders. We have to, what others will do, we have to be fully conscious of before we decide our own policies. It is not just a stable coin. At the 2023 issue was only different jurisdictions were looking for crypto assets as a stable coin. Right. Which is not a stable coin, doesn't have any much value. But a stable coin can cause a significant risk for our economy, for all emerging economies. Then a new element has come in. Some jurisdictions talking about a cross-border settlement doing it here, which is altogether a new dimension being brought in. So that requires to getting back not from the ground zero, but certainly going to the last stages of the drawing board and saying that do we have to recalibrate few of the questions so that we understand the risks very clearly and what can be the possible policies.
So by when do you believe this recalibration exercise will be over? And I'll get Mr. Nagaraju to comment on that as well.
I'll say that soon, but it may take a couple of months, but not longer.
India perhaps rethinking its position on digital assets. That's the Economic Affairs Secretary. We will head into a break, but when we return, more from our exclusive budget verdict with the budget architects themselves coming up.
पंद्रह पैसा किसके पास जाता था, ये देश का सामान्य मानवी भी आसानी से समझ सकता है। आदरणीय सभापति जी, देश ने हमें अवसर दिया, हमने समाधान खोजने का प्रयास किया। हमारा मॉडल है बचत भी विकास भी, जनता का पैसा जनता के लिए। आदरणीय सभापति जी, आजकल मीडिया में ज्यादा ही चर्चा हो रही है, सोशल मीडिया में और अधिक हो रही है। कुछ नेताओं का फोकस घरों में जकूजी पर, स्टाइलिश शावर्स पर, लेकिन हमारा फोकस तो हर घर जल पहुंचाने पर है। आदरणीय सभापति जी, हमने ये जो अलग अलग कदम उठाए, उससे लाखों करोड़ रुपए की बचत हुई, लेकिन उन पैसों का उपयोग हमने शीश महल बनाने के लिए नहीं किया। इसका उपयोग हमने देश बनाने के लिए किया है।
You're watching the Budget Verdict, our special broadcast. Finance Secretary Tuhin Kantapande said the new direct tax code will have only half the text of the current law, and words like assessment here may perhaps even vanish. CBDT Chairman Ravi Agrawal says the new legislation will be simpler, inspired by similar exercises in the UK and Australia. The new law is scheduled to be introduced in Parliament this week. Take a look.
You know, we are making a very sincere attempt. This particular thing, in other sovereigns also, this has been attempted. Some people have taken years, 4 years, 5 years, to change the new law, to rewrite the law. We had some groundwork earlier in some committees which they did the work. But this work, this piece of the work, bringing it has been done in about 6 months. So, obviously, you know, while we will say that we have done a great job, we don't know. I mean, so we have to, the suspense is, the jury will still be out.
Yes, the jury is out and we'll have to wait for you to actually bring the bill.
But what I can say is that the words will be halved, chapters will be halved.
As a result of this entire exercise in this 6 months, the act has been now, the proposed act would be about half. I would not say exactly half, but it will be about half. It will be about half because we have to take care of different situations, you see. The shift in approach is that, well, we have taken some provisions which were elaborated in the base act to the rules also. And also we took inspiration from the similar exercise which was done in other sovereigns. For example, UK, Australia.
The government does not want money locked up, says Financial Services Secretary on the RBI's new liquidity coverage ratio rules, which kick in from the 1st of April. The Financial Services Secretary M. Nagaraju says the government has conveyed its views to the RBI and it's yet to hear back on the matter. Take a look.
Not going to second guess the RBI, but RBI has issued the draft, and we have conveyed our views on that. Now they have not issued the final draft, the regulations. We want to we don't want to lock up a lot of capital into this kind of ideal situation. So we have expressed our views based on the feedback we received from the industry. Okay. Now the RBI has not issued, so let us put a full stop there.
CPAM Secretary Arunesh Chawla highlighted a calibrated asset monetization approach when it comes to the public sector. He also said that the government hopes to monetize land assets of BSNL and MTNL in FY26. The Finance and Revenue Secretary Tuhin Kantapande said the PSU dividend strategy is aimed at being consistent and not one of maximizing revenue.
We are going to help MTNL and BSNL in monetizing whatever assets they have so that the value that is locked in can be redeployed, the liability is cleared, and we can re-energize the sector.
And do you expect that to go through within this in the next financial year, FY26?
Touch wood.
Touch wood. Okay, that's an important headline.
Really look at the dividend, as Arunesh mentioned, you know, we are looking at consistent dividend, not maximization of dividend. Because if you maximize the dividend, you basically evacuate the money out and then it doesn't help for growth of the company. So there is a consistent dividend policy, and consistently also the targets of dividend are being met.
The highlights of CNBC-TV18's exclusive budget verdict with the budget makers. Before we say goodbye, we leave you with a quip from Finance Secretary Tuhin Kantapande on artificial intelligence. Take a look, have a laugh, and thanks very much for watching. Stay tuned to CNBC-TV18.
You know, as a joke, I would say that we should not finance enough to, you know, finance our own
demise,
extermination, human extermination.
So which is why you've been stingy in your budget for the AI mission, sir. It's self-preservation. But that's
humanity must preserve itself.
Absolutely, I couldn't agree with you more. Humanity must preserve itself.
telling Ukraine they have very valuable rare earth. We want what we put up to go in terms of a guarantee. We want a guarantee. We're handing them money hand over fist. We're giving them equipment. European is not keeping up with us. They should equalize. And look, we have an ocean in between. They don't. It's more important for them than it is for us. But they're way below us in terms of money. And they should be paying at least equal. They should really be paying much more than us. But let's say equal to us. And they're billions and billions of dollars below. So we're looking to do a deal with Ukraine where they're going to secure what we're giving them with their rare earth and other things.
Hello and welcome to Startup Street. I'm Arundhati Ramnan, and with me as always, Shruti Mishra. These are the top headlines from the startup world.
India is an incredibly important market for AI in general, for OpenAI in particular. It's our second biggest market.